Reinventing customer experience essentially means just the mobile app or the web app or any application that's touching the customer. That's true and not true as well. What I mean by that is you could reinvent customer experience by really doing any of these four pillars, which is building new products and services, of course, really digitizing existing services that might be a combination of offline, online, or really improving the service that already exists. Or it could also be making the entire organizational data driven, which could be for efficiency purposes or to improve customer experience. And then, of course, the fourth one, which we often see, is really how do you leverage the ecosystem that's developing today, especially on the digital side, the fintechs, and really how do you do partnerships not just with the financial services ecosystem, but beyond. We'll talk a few examples of that as to what's happening worldwide. Uh, Now, reinventing customer experience is not really relegated only to the fintechs or the new age organizations. Frankly, some of the most largest systemically important banks have already started on the journey. And here are a few examples. Capital One, we all know, they over the last 6 years, they've been trying to move to the cloud. They, in fact, migrated all of their 8 data centers to the cloud, including their core banking, and really positioned themselves as a technology organization rather than just a bank. Goldman Sachs is another interesting example. Goldman Sachs, really known as an investment bank, but in 2018, they started building their consumer banking on the cloud. They built their digital lending and savings platform called as Marcus on the cloud, including the core banking, and eventually they also launched the credit cards application, which powers Apple Card on the cloud. We see numerous such examples. Stanchart is another example where in 2020, they announced that they're moving their core banking across 60 markets and SC Pay, which is their payments platform worldwide, onto cloud. But it's not just about moving to the cloud. I just want to make sure I call out here that it's also about building these new applications or existing applications, modernizing them, and also using cloud native technologies, which is where really the value lies in terms of reinventing customer experience, because now you're focused on what experience can I build rather than the heavy lifting behind that goes into it. By the way, this is true not just for global banks, this is also true for a range of Indian banks. In fact, 10 plus Indian banks have already started, numerous banks have already started their cloud journey in India, and these are some standout examples that's well known, covered in the media. Axis Bank incidentally started their cloud journey a couple of years ago, but really last year they accelerated that by moving about 25 odd applications onto AWS and cloud, which includes things like WhatsApp banking, buy now, pay later, building a new digital lending platform. In fact, they've set a vision for themselves that in the next 2 years, 70% of their applications in data center will be running in the cloud. RBL Bank as well, almost 40% of the mission critical applications run on the cloud, and they're only accelerating their journey, not just with respect to migrating applications from data center, but also using things like machine learning and AI to improve process efficiencies within the bank. Now, cloud adoption really is not again restricted only to banks. If you look at financial services broadly, it really has percolated into insurance, capital markets, payments, as well as NBFCs. In fact, some of these sub-segments I would say have accelerated even faster than traditional banks. For example, if you look at insurers, some large insurers like a Bajaj Allianz or a Liberty General really run, including their core insurance platform, on the cloud, right? And it's been so for more than a year now. Now, the reason this is important is, which means along with large enterprises moving to the cloud, a lot of ecosystem also gets developed, which includes ISV partners and system integrators who now have the skills to support any large bank wanting to make that journey to the cloud. And of course, for years, the largest of the payment companies in the country have been running on the cloud for pretty much last many years. Now, just changing gears a little bit, I know one of the things that really is a starting point, I would say, for a bank to really get started on the cloud is how do you get the security and compliance aspect of moving to the cloud right? And that's where, as AWS, we've been working with in the banking industry for many years, especially in India. Over the last 5 years, we launched our data centers in 2016. Ever since we launched that, we've been working with financial services ecosystem players, not just the banks, but also the regulators, the audit players, etc., and have built a whole lot of artifacts which are available for a bank to get started on the cloud. Which means, what are the compliance controls that you can map of a traditional data center to the cloud? What kind of documentation is required? What kind of governance frameworks that need to be put within the bank to be able to migrate applications or modernize applications to the cloud? So all of the content is available today online. So just feel free to jump in there, and you will have, which means essentially you don't need to reinvent the wheel. You can learn from the journey of another financial services company altogether. Now, really, when you think about building the future of banking services, uh, it's not about getting rid of your storage and compute in data centers and just moving to the cloud, right? Which is called as lift and shift in the traditional sense. It's really about either you migrate for efficiency, or you modernize your existing applications, or at times build absolutely new applications that were not possible in your traditional data centers. For example, if you look at AI and machine learning, and that's a constant journey. I also want to say here that when people talk about digital transformation really does not have a start or a finishing line, right? It's essentially your ability to rapidly adopt new technology to build better businesses and better customer experiences, and that really does not have an end point, because you can just keep getting better and better and better. Let me take AI and machine learning as an example. Now, we've been hearing a lot about it. It's probably gone through all the hype cycles, but today it's real. What I mean by that is today banks are building fraud recommendation engines, banks are really building sales recommendation engines, or for that matter, even things like document processing, where your property documents, loan documents, or even invoice processing can be completely digitized using AI and machine learning algorithms available in the cloud. And the beauty is, what used to work with, say, an efficacy of 80% becomes 85% within a couple of months, because these machine learning algorithms are constantly learning and improving. It's unlike traditional software where you would go through a 3-year 5-year upgrade cycle. Here the technology continues to improve almost on a weekly basis. Now, while I said that there's a lot that even a traditional enterprise like a bank can learn from fintechs, because they've been using cloud for many years. It's not just an opportunity to collaborate, but even on the technology side, a lot can be learned by what a Zerodha has built as a platform, or a Paytm has built on the cloud, in terms of, and a lot of that content is already available if a bank wants to really embrace and say, how do I build the next payment system or the lending system or a UPI platform on the cloud? Now, it's not just about a bank building in-house. You also need support from the ecosystem to be able to build the banking services of the future. And as a cloud provider, we've been investing heavily to get this journey right, which means we work not just with the standard and the well-known application platforms that work with you as a bank, but also with the system integrators. The well-known names like a TCS Banks or a Finacle are all partners for us. We work with them not just for India, but globally, to be able to modernize their applications. But you'll also see that some interesting ones like a Mambu or a Thought Machine, these are new age core banking systems which are completely built cloud native. Now, this also means, given that in India, pretty much a majority of fintechs are also built on the cloud, you will see a lot of B2B fintechs having interesting applications that you may want to embrace and start your journey quicker on the cloud and really get the value of it much, much, much faster. And of course, system integrators that you work with, the largest of them and the mid-sized one. In fact, there are thousands of partners available today, where even if you don't have the skills to adapt technology like cloud to build the future of banking, you can really use these ecosystem providers to really get a jump start, and then eventually start building skills as well in-house. Now, to wrap up here, if you have to, as a bank, start cloud journey, I would say these are the 4 key elements that you want to get right. Right? We've seen a lot of organizations stall their cloud journey primarily because they don't know where to get started. If you ask me, what are the 4 key levers that you want to make sure you get right is, before even you move an application, just get the security and compliance foundation right. Right? There's a lot of learning that's already there with respect to other banks having gone through the journey. There's a lot of artifacts and content available. Reach out to your cloud provider, reach out to your system integrator. They could help you make sure that your compliance regulations of local regulators are also met, and how to meet that. You probably want to ask your system integrator and the cloud provider and help you with prescriptive guidance, and hence build comfort within the security and compliance teams internally as well. The second, I would say, is really identify the most important and impactful applications that you could move to the cloud, right? You could start with the low hanging fruits, but also do not lose sight of what applications could really impact your business, either in terms of scale or reliability or availability. The other aspect of this impactful applications is, don't just look at lifting and shifting applications to the cloud. It's also important to think about, how do I modernize, how do I use the latest technology available in the cloud, rather than just really carry the legacy that I already have on premise onto the cloud and just run it the way it is, right? For example, there are technologies like AI and ML, and of course things like serverless technology, which allows you to build applications at a much faster pace than what it used to take years ago. Third, and probably definitely not the least important, is really building skills internally within the organization, right? We've got programs like Cloud Fluency program. We can train, for example, in National Australia Bank in Australia, we train about 7,000 odd people to be able to really build skills internally. Now, skills are still required even if you've got outsourced vendors in your bank, primarily because once your internal employees start understanding cloud better, you will see that the applications of cloud and the possibilities or the art of the possibility of the cloud really increases and expands. And last, definitely not the least, which is build a cloud roadmap, which is aligned to the organization's transformation vision, right? Which really has the exit sponsorship of it. Otherwise, if it's a side project, most cloud projects really fizzle out because there is not enough internal exit sponsorship. And for that, you've got to really establish what is the reason as to why you would want to really be building banking services of the future. What are those banking services? Which segment do you want to address? And hence, how can a technology like cloud really solve it? That was my 10 minutes. Thank you so much for the time. Really, if you want to learn more about any of the aspects that I covered a while ago, just reach out to me or through the organizers, and we'll be happy to help you. Thank you so much and have a great day.
Thank you very much, sir, for your crisp presentation. Ladies and gentlemen, it's now time to invite our distinguished panelist of the first panel. A brief synopsis on the topic for discussion. Trade finance provides means for banks and other financial intermediaries to manage the risk of payments. Trade finance facilitates transaction among various stakeholders, including importers, exporters, custom brokers, and other logistic providers to transact business to trade. Various types of financial mechanisms and documents are dealt with in the process of trade finance. Moving forward, I have pleasure in inviting the session chair, Shri Madhav Kalyan, Managing Director and CEO, JP Morgan Chase Bank, NA, and panelist, Shri Debadatta Chand, Executive Director, Bank of Baroda, Shri Vivek Gupta, President, Head of Wholesale Banking Products, Axis Bank, and Shri Sunil K. Jain, Head, Trade Products, HDFC Bank Limited. This session will be moderated by Shri Gaurav Sofat, Senior Director, Cape Germany. I now request Shri Gaurav to initiate the panel discussions.
Thank you very much, ma'am. And a very good morning to everybody. And welcome to our first panel discussion on digitizing trade finance. So trade finance, we all know, has been used for decades, and it has helped a lot in both providing financial and risk management tools to businesses in India who want to venture out of their country, who want to transact with the parties globally, both on import side and export side. But if we look at the back end, it has its own challenges. A lot of the business is still very people driven. There's actual physical movement of paper happening from one party to another, creating digital islands or silos, as well as a lot of manual back office processes handled by the back office operations of the banking institutions. So having the data sitting in these papers introduces a lot of operational risk, slows down the whole process, but more importantly, it can open up for fraudulent behavior as well, because data is sitting in multiple places without a single source of truth or data flowing correctly. So technology has made some advancements in this space when it comes to digitization of trade finance. In the last few years, we have seen applications of machine learning, OCR, artificial intelligence, but still there's a lot which can be done. So on that topic, what we're going to do is I'm going to take you on a journey. We'll start with what has been achieved so far when it comes to digitization in trade finance. What are we doing and banks focusing on now? And what does the art of possible is in the future? And to do that, I would like to welcome my elite panelists, Mr. Madhav, Mr. Devadatt, Mr. Vivek, and Mr. Sunil. Welcome, everyone. So we're going to start with a more of an icebreaker question. I'll go around the circle. And let's start with So we keep on hearing this word digitization across the banking industry. This has, alongside COVID, lockdowns, and other common terms, has become a kind of a norm. So what I want to hear from you all is, what has been the key developments that you have seen in the trade finance till date? Any specific use cases which has you have been able to do when it comes to digitization? So I will start with you, Mr. Madhav. So if you can give us some few examples.
Thank you, Gaurav. Thank you for joining all the way from Toronto. It must be very late for you out there. Yeah, so if you look at the industry and what's actually worked from a digitization front, there are a few things that have done well, especially in the Indian context. The one area that we've done quite well is an initiative that rides on the rails that the Reserve Bank of India, together with the customs authorities, have built. They built these two rails called IDPMS and EDPMS, and they essentially connect documents that sit in customs. So goods move in and out of customs. The banks receive documents, and to bridge these two islands, IDPMS and EDPMS act like a bridge. So each evening digitally, the data passes from the customs authorities to RBI, and then as authorized dealers through these platforms, we are then able to receive it. Just as UPI worked as the rails for payments, and then fintechs built various solutions around it, all of us as banks have built solutions on the back of IDPMS and EDPMS. And each bank has a different brand name, but what we've really done is take that data, be able to show customers what's outstanding, where payments are due for something that they've imported, then the post compliances that they need to do. That piece has worked really well across the banking system. So that's one initiative in digitizing trade. And just to keep in mind, this is post, it is really a post-trade transaction and reconciliation of submissions that you've actually made payments for either imports or exports, or you've received payments and you're knocking off at an invoice level. But that's something that's worked well. The second initiative that's worked well is in open account trade. Various banks across the board have built digital solutions. There's a lot of, India is a vast consumer market, lots of MNCs import and sell to harness the opportunity that this market presents. And those documents have been digitized by individual banks in silos along with individual customers. And that's worked well, also riding off these rails. The third area is supply chain solutions. Various banks in partnership with fintechs have built supply chain solutions where bills are presented, are discounted, either through a dynamic discounting solution where you either use the surplus that a corporate has, or the bank steps in as a lender, pays off the vendors, and then collects from. Now, all of these have developed in an electronic format because either the regulator has created the rails, or it's a closed format where dispute resolution is easy because it is a large corporation with its set of vendors, and that's why it's worked well. So these are the ones where it's worked well. The other initiative is TREADS, which is a government initiative which helps MSMEs do discounting in electronic format, and that's the other initiative that's worked well. So if you ask me what are scalable solutions that have got developed over the last 2 years and got a digital impetus through COVID, it's really been these four areas where there is scale. Of course, there are a bunch of siloed blockchain initiatives, decentralized finance initiatives, but those are all small and yet to scale.
Thanks, Madhav. So
I can just add to what Madhav said. I think it's also good to
So,
highlight.
Vivek, I'll throw one more question on top of it. I think we are living in the world of COVID. We are doing this digitally over when I am in Toronto and all of you are in India. So I also want to see what impact did COVID have, and has it helped in accelerating a specific use case or a journey? If you can add that flavor as well, which was very kind of a customer centric or demand of the hour in trade finance in last 2 years. Sorry to cut you in the middle.
No, thanks, Gaurav. Look, I'm just going to add on. Madhav covered it quite well. I think there's also a piece of work around the secured logistics document exchange that I think is well progressed. I would like to call that out. I think that to me presents a significant potential for us to bridge further. I think a lot of the work that has already happened on the EDPMS, IDPMS side. I think Axis was recently in the press as having done the first transaction in this space digitally. So again, in support of clients who would like to have the visibility, the audit trail, working off document images as opposed to the documents themselves. I think it's good to call that piece out. The important thing around SLD, which is again a very good initiative, is to say, look, it's looking to connect the physical and the financial supply chain, right? To Madhav's point. So I think we need to basically, as industry, work to keep bridging that gap, right? Because there are two things at work here: the financial supply chain, which is typically where the banks sit, and the physical supply chain, which is to do with logistics firms, shippers, et cetera, right? So there's also, all the work that is happening with checking validation of e-way bills with Monetago, etc. So I think there's a whole bunch of government initiatives from a technology stack, innovation forum, sandbox, in many ways accepting a digitalized bill of entry. So I think there's plenty of positives, and I think plaudits are due to where I think the government and the regulator have been very proactive in trying to shepherd the agenda in a forward-looking basis.
Thanks, Rick.
So Gaurav,
yep.
Maybe I would like to put this entire piece in a perspective. I will start from the initial journey wherein it is estimated, for example, it is estimated that around 4 billion documents are moving across the globe in the documentary trade business, number one. Number two, as far as the trade ecosystem is concerned, we have multiple partners, right? We have corporates who are buyers and sellers, we have custom authorities, we have trade bodies, we have logistics service providers and other service providers, and banks, right? So the legacy of so many documents in place and the multiple ecosystem partner being there was a steady journey of digitization in trade across the globe and in India. As Madhav and Vivek has alluded to, the EDPMS, IDPMS, the digitization of bill of entry and shipping bills, the GST, e-way bill and e-invoices initiatives, and the trade exchange initiatives were one of the very few initiatives which actually helped in this journey initially. So while it was moving up in a steady phase, in last 2 years or so, specifically maybe because of COVID also, the pace has suddenly jumped up. And looks to me like we are almost 5 years ahead than what we could have been without COVID being there. So there are lots of platform providers who are now trying to solve for individual needs of these ecosystem partners in trade. While the journey has gone ahead in terms of COVID, but my view right now is we are maybe in a crossroad of trade digitization, mainly for two specific reasons. While there are successful stories, as we all have explained, but coming to all the multiple platforms being there, what has been created is kind of a data island, is what people call it, right? Wherein if the entire ecosystem partner in a trade transaction are part of one trade island or one digital island, then the 100% efficiency in terms of digitization can be achieved today also. But the moment one of the partners is outside that specific digital island, we may not be able to achieve 100% efficiency. So that's one reason of why I said there is a crossroad. And the second reason is obviously there is a lack of standardization of document, laws, regulations right now across the globe, while so many initiatives are happening around, but still there is a lack of standardization. So these two specific reasons have put us in a crossroad. And that's why my sense right now is we have come quite far in terms of digitization of trade because of where we have seen in the past. But we have still a bit longer way to go to ensure that we reap the right benefits of the digitization in trade.
Yeah, thanks, Ned. Chand, you want to add something?
Yeah, Gaurav, actually, the stage at which we are all in with regard to trade digitization, I would put that we are right on the curve, but not ahead of the curve. Because we have been talking about trade digitization, a lot of work have been done in the trade digitization, but then rightly one of the panelists said, these are all silos not interfacing with each other. The bigger challenge with regard to trade digitization is with regard to how do you have an interface with the underlying. One underlying can be the EDPMS, IDPMS, which Mr. Madhav talked about. There may be many areas in terms of be it a UA bill, be it a lorry receipt, be it like GST. There is a great need to have these interfaces so that we have to make a full comprehensive digitization process. Maybe e-stamping can be one where possibly a lot of work has been done. I know one institute called Swift India, which is great in terms of driving this mandate. But then, as I said, that it's a process wherein it is creating a lot of process efficiency, both from the borrower perspective and the bank's perspective. It is also preventing to a large extent the fraud relating to the trade-related aspect. But then, actually, Mr. Sunil talked about standardization. It's a great challenge at this point of time. So cohesively, if I talk holistic with regard to the process we are in and the stage we are in, we are right on the curve, but we need to again leverage for slightly going ahead of the curve.
Yeah. Okay. So I think to summarize, so we are hearing obviously IDPMS, EDPMS has benefited a lot, providing that transparency and the data consistency. There's a lot which has been achieved, but the digitization doesn't mean just digitizing where we touch the customer. A lot of efficiencies can be delivered by integrating those backend processes as well to provide a seamless experience. So to build upon that, so one of the key challenges whenever we talk about digitalization, nimbleness, moving, fail fast, break things, etc., is how do you find the right balance between speed and risk management? Yeah, so trade is a very good example. We talk about physical movement of goods. There's a pieces of paper. It can introduce operational risk, fraud, duplicate invoice financing, fraudulent invoices, money laundering. So how are you solving those challenges? So I'll start with you, Mr. Chant, if you can provide your insights of how you are solving those challenges.
Yeah, it's a key challenge in terms of how do you do the trade-off in terms of the digitization process and the aspect relating to the operational risk. So fortunately, we're in a scenario where any architecture we are building in, the EFRM is part of it. What I mean, EFRM is a e-fraud risk management solution. So there are AI inbuilt into it. So I do, like as a Bank of Baroda, we do have a product called Bob Insta, where it's a absolute 100% digitization. So it's a platform, but then there is a EFRM on top of it. But then unless and until, as I said, completely interfacing with the underlying is done, possibly things would be there, which would be a challenge, but possibly that can be addressed through some kind of a AI-based platform like EFRM. And on a significant rather, I would say we have rolled out the trade portal since long, but the operational losses in the trade, I mean, the platform is much less as compared to the physical one. So in that way, significantly, I can say, I mean, the going forward is a trade digitization, although there will be challenges in terms of some of the loss due to operational risk.
Thank you. And Vivek, you want to add upon that?
Oh, look, I think it's a very pertinent question. I mean, I'm moving the conversation because trade finance, working capital, non-debt working capital is to do with credit risk. So I think from a wider industry point of view, taking the credit risk part out of the conversation, if I look at what's worked well in geographies like China, etc., where there is a thriving bankers acceptance market, right? I think there is a central bank facilitation that certainly comes into play to create that infrastructure, right? Where all BAs that are being financed, etc., can be recorded, right? Now that facilitation is afforded to the individual bank. So I think it's not only sufficient for one to have the infrastructure, but equally important for the banks to therefore, input all the BA financing, for instance, that's being done, right? I think it's only using the infrastructure and I would say the coming together of banks and non-banks and into building that up will actually be much better off as an industry in trying to root out instances of double financing, etc. Second, I think what do you build the infrastructure on, and whether it's blockchain or non-blockchain, that can be also debated. I mean, obviously, I think there is a immutability and benefits around blockchain, but requires everybody to be on the blockchain, right? So again, those are some practical considerations to what you said about getting going at speed versus getting going at scale, or waiting for the most perfect product to come, but looking for 3 years down the line.
Yep. Thank you. Okay, so let's talk on a related topic. So digitization. I think one of the customer segments, which is MSMEs, so micro and small and medium enterprises. So we hear a lot about this $1.5 trillion gap in the trade finance, where there's a need, and typically the ones who need trade and supply chain finance facilities most are the ones who are left behind, because banks can't service them at scale or not in a profitable fashion. So do you see digitization helping this segment by providing them something which is attractive for them, something they can afford, but also commercially viable for you as an institution? So I'll start with you, Sunil, and then I'll go to Madhav.
Sure. So look, if MSME obviously is the backbone of our industry, no doubt about it, right? So we have maybe almost plus 6 crore MSME units across India who are contributing almost 30% of GDP and maybe around 45% or more on export side also. But still, while globally there's a data that $1.5 trillion is the gap for the overall financing, but in India still it is estimated that it's maybe upward of $250 million. There is a credit gap as far as the MSME is concerned. Now, over the last few years, government, regulators, and the financial institutions and banks have tried to put up strategy initiatives to bridge this gap. I will divide now my initiatives in two parts. One, if I talk about specific to say HDFC Bank, in our future ready project, we have created a separate vertical called commercial and rural banking specifically to take care of this segment. And our in fact growth target is to double our rural presence in next 2 years in that segment. Second part is we are tying up with government bodies, semi-government bodies, and private bodies to target specific industries of MSME, right? And the third one, which is the digitalization part, we have dedicated platform for SME banking, we have our eNet platform for overall internet banking, and we have our trade on net platform for trade processes. So these are the three biggest pillars of the digitalization in HDFC Bank journey with the MSME. But this is part of what HDFC Bank have done. Overall, as a country, the few initiatives which to me stands out, which will finally result in bridging the gap, one definitely which is already spoken about is the trade exchange. It has really gained traction, and I feel it is one of the path-breaking innovation which we have done in India to take care of price discovery with reasonable price financing to MSME units. So trade exchange is one of them. The second one is, in fact, GST, e-way bill, and e-invoicing themselves. What they have actually alluded to, because of those innovations, the fraud risk, the authentication of the trade risk is taken care of, because banks, trade exchanges, they can actually go and get the authentication done through these platforms. So that's the second part. And the last part I would like to say is the fintech initiative altogether. So the private players in the fintech industries are trying to tie up with banks to see how complete digitalization end to end, starting from onboarding to documentation to the transactional flow, finally to authentication and the credit assessment part through analytics, etc. All these things are bundled up together to fasten up the credit assessment process, give the credit to the MSME, and with minimal fraud risk or credit risk altogether. So all these together, the banks, government, regulator together have come up with all these initiatives, which I feel will definitely help in bridging the gap which we are talking about.
Excellent. Madhav, you want to add onto this?
Yeah, I thought Sunil did a fantastic job there in laying out what's being done around the MSME space. So when you look at MSMEs, there are standalone MSMEs, there are MSMEs with corporate linkages, there are MSMEs who work for government contracts and do work around governments. Solutions for people who are suppliers or vendors of corporates have been addressed through digital solutions, uh, electronic presentment of invoices, getting accepted by the corporate who's eventually buying from them, giving them discounting solutions. And those various banks through their supply chain programs, and they're creating a corporate linked with its set of suppliers and vendors. Those ecosystems have developed, and they've developed fairly well. Is there interoperability? Not really, because these are predicated on large corporations. So let's say there is a large MNC who's a customer of JP Morgan, and we will create a supply chain solution, and their MSMEs were potentially supplying, say, packaging material or whatever, become a part of that ecosystem. So for an MSME, there's no one place. They tend to have to join multiple supply chains, and if they're supplying to multiple supply chains, and that interoperability between these platforms is a need. If they're supplying to government, Trades has been a platform, and that has had different levels of adoption. States like Goa have actually brought all their transactions onto Trades. Every department is on Trades, and so MSMEs get their financing. We've talked about price discovery. We've talked about invoices and the ability to authenticate through GST, e-way bills, e-invoices, all of that works really well. The October 29th circular that came out from the finance ministry, I think is going to really change the way various central government departments will then start using that platform and bring things onto that platform. So if that does happen as well, I think it is one of those circulars that can really give a fillip to the amount of payments that will happen in a prompt manner for SMEs, MSMEs through this platform. So that again can be a huge change agent. So I would think taking Trades to the next level, more states adopting the Goa model, more central authorities coming around under the October 29 circular is one way to drive digitization and financing in a digital format to MSMEs. The second is even as there are silos and supply chain programs across 50 banks in the country, how do we interconnect that such that an MSME who is a supplier to 3 different people who are on 3 different silo platforms can then work seamlessly across these platforms. So think of it as a supply chain exchange platform, which potentially a fintech or an organization which is that can develop is are potential ways to be able to help bring in a lot of developments in trade finance and digital trade finance for MSMEs.
Sure.
Gaurav, can I chip in if you have 30 seconds?
Sure, Vivek.
Look, a couple of things, having worked abroad, I think, see, it's very important for also us to think through how do we incentivize development of trade assets as an asset class relative to debt. Okay, so I think it is very important if we have to bridge this gap, access to financing by MSMEs, that we really get the entire ecosystem, banks, non-banks, and the regulator to basically recognize that, look, trade is less risky as opposed to debt. And therefore, there has to be a preferential treatment, right, from a capital point of view that needs to be given to trade. I think that is very, very fundamental if we have to look to really build the bridge on the gap that exists. Second, I would say is I think it's important for us to also spur as an industry digital underwriting, right? A lot of the current processes are very clunky, paper-based, balance sheet led. So I think digital underwriting focusing significantly on getting preferential treatment for trade assets related to working capital and debt, I think will go a long way in my view to basically bridge this gap.
Yeah. Okay. I think to summarize, so what I heard just taken. So obviously we are seeing a lot of advancements built on underpinned by Threads as a platform, and we can see a potential of Threads becoming literally an open stack for innovation in trade and supply chain finance, especially for providing those services. But Vivek raised a very valid point. While we focus on the front end, we can't meet that $1.5 trillion globally or $250 million India gap unless we look at the back end as well. What is, if we originate, is there a way to classify as an exhibit and distribute it to maybe non-financial institution so that you continuously have this cyclic innovation and cyclic origination happening to make it work for our small, medium enterprises? Okay, so we have been talking about fintechs. So Sunil brought about fintechs are happening. So what I want to know from each one of you, I'll start with you, Vivek, is what are one or two fintechs that you have been working on, both in a partnership, co-innovation, when it comes to trade and supply chain finance side?
Look, thanks, Gaurav. Look, I think we are under no illusion. I think the opportunity out there is very large. We got to be efficient in terms of how we allocate capital and resources. So we got to basically partner, right? Because we can't do it all alone. So I think there is a massive focus from my side in the business to drive the right partnerships at scale, right? To realize the opportunity and to actually take the industry forward. Look, we are working very, very closely with a fintech on the supply chain side to really see how we can offer industry-leading solutions front to back, right, in a truly digital sense. And we made considerable progress, right? We obviously have Threads where we have a significant equity interest. So again, we're pushing that agenda very, very strongly to provide financing to the MSMEs, as you rightly said. And I think we're achieving a reasonable degree of success, and more than a reasonable degree of success. I did mention working, on the SLDE platform as well. So I think as we are looking to scale that up, very keen to see how we work on SLDE together with what the work which may be happening on IBA'S, right? How does the two kind of gel together? Very important for us to also recognize that when we talk about digitization fintechs, there are two things in play. To Madhav's point earlier, I think, and Sunil's point, there is an ecosystem play, right? Digital islands, ecosystems, and what have you. There's also the bilateral stuff that we as banks do vis-a-vis our own clients. So digitization has to be end to end, and therefore what lies below the surface on the operation side, right? From bringing, process efficiencies, etc., right? OCR, amongst others, RPA, machine learning, sorry. I think those are again areas where we are very, very, strongly working with a range of fintechs who have best-in-class solutions. And last but not the least, I think Swift was mentioned. I think Swift India does a very good job in trying to build some fairly bespoke solutions. So yes, I think on the domestic guarantee side, which I think Devdutt also said, we are working well with Swift India. Clearly, we need to solve for the challenges around, being able to pay some of those the guarantee duties, etc., at a state level and solve for them. But I think those would be few examples where we are kind of, looking at both from an industry as well as from a bank and a customer perspective.
Sure. Thanks, Mr. Devdutt. 30 seconds to any fintech.
On the trade side, as I said, actually the architecture is on the fintech tie-up. Suppose I talk about my trade portal, which is a Bob Insta. The customer relationship management is given by one fintech. The EFRM, which is a AI-based solution, is again given by another fintech. And the interface with the RBI vis-a-vis EDPMS, IDPMS is also given by another fintech. So on a broader platform of a large software company, there are fintechs who are operating in the entire trade platform as far as Bank of Baroda is concerned. So going forward, obviously the fintech collaboration has to be very high level, just to take, because there are a lot of pieces to be again joined together for making a comprehensive trade digitization program. And that requires only one line, that it has to be with a fintech kind of a collaborative efforts. A single bank can't do anything. A single company also can't do anything. It has to be with multiple fintech tie-ups. We can come out to a solution, kind of a comprehensive digital solution for trade finance.
Yeah, thank you. Sunil, you want to?
Yeah. Sure.
Yes.
So look, what Vivek and Mr. Devdatta had spoken about, obviously most of we all are working on those paths, but I would like to just digress a bit in general for the banking industry and this space, because I still feel that the full-fledged commercial use of partnership between bank and fintech companies is yet to be achieved. All these are more of POCs and test transactions. Some bit has gone ahead, but full-fledged commercialization is yet to happen. That's why my thought is, within India, if I talk about the IBIC initiative, definitely will be a far-reaching effect once we go live with the platform which we are working on in IBIC. The second one is the SLDE, which Vivek spoke about. While the POC and the test transactions and pilot transaction has happened, but still obviously the commercial go live is yet to happen, and maybe that will require a bit of clarity in the laws also, because it seems there are certain clarifications required in terms of EBL or E-Bill of Exchange in the respective acts to properly utilize the commercialization of SLDE. And another initiative, in all these, obviously, we were the partners in terms of POCs and all. In one specific point I want to highlight here is Ministry of Shipping also have done POCs for E-Bill of Lading in India through electronic port community system, which is port associations along with a few banks. So pilot has happened. So what is now required is further commercialization through various clarifications in the laws, regulations if required, so that banks through the IBIC initiatives, if required within India, can actually have a far-reaching impact on the digitization part.
Madhav, you any special fintechs that we haven't covered so far, use cases?
Yeah, so I'll talk about a few fintechs that we are working with and a few government initiatives as well that we are doing in other geographies. We use a platform called Tolia, which is a fintech that SAP most recently took a majority stake in. It integrates back into corporates, back-end SAP HANAs and ERP systems as well. It's a supply chain solution that allows for onboarding a client and its entire vendor ecosystem in a digital manner, and then being able to do dynamic discounting. So that's a platform that worked quite well for us. The second is a fintech called TradeSun that we use around trade AML. Again, a very good platform. OCR related features, etc., which help, but also deal with the big issue that all of us face in trade finance, which is the rubber stamp on all documents. So in trying to digitize documents, that brings in a lot of noise into documents. And this is a fintech that's created something that makes it a little novel in terms of being able to use the data and then be able to use that for doing AML checks. People are fallible, people miss things. So bringing in technology to make sure you're not dealing with a good that is prohibited under OFAC or any list. You're not dealing with a flag or a vessel that's not is important. So being able to do that. GSCF is a receivables financing platform and a fintech that we work with. We work with the government of Singapore on Project Ubin, which with Monetary Authority of Singapore, Temasek, DBS, ourselves, and one of the sub projects within the larger Project Ubin platform was also to tokenize using Onyx and the platforms that we use, tokenize bill of exchanges, tokenize promissory notes. But a lot of these, while things like Tolia have commercial scale and are partnerships that really work well, I think what is most important for many of the distributed ledger type of solutions and decentralized finance solutions, I think is the need for standards and need for the right legal laws around dispute resolution. And those need to come for them to actually attain scale. So the ICC Digital Standards Initiative is something that we are spending a fair bit of time on as an organization to be able to make sure that there is the model law around electronic transferable records. And later this year, hopefully, when English law comes up with comes up with the right legislative reforms that are required, that will potentially have a snowballing effect within the Commonwealth or jurisdictions whose legal frameworks are driven by English law. So that model law for electronic transfer of records, once it goes to the G7 and it actually works, I think that's what will give fillip to various fintech partnerships. Otherwise, we keep doing a lot of pilots at this point in time because we know there is no dispute resolution to deal with. But the moment a partnership has to take industrial scale, you need that the dispute resolution mechanism and the standardization. You need an Incoterms for digital trade. So effectively, so that's needed.
Yep. Okay. So now that's very valid point, and that kind of linked to the question I had, which I'm going to combine. So we are talking about trade finance, we are talking about digitization. So it cannot be complete without me talking about blockchain, DLTs, distributed. So we have seen tons of consortia now, and hundreds and dozens of POCs, use cases, prototypes happening, pilot transactions happening. But where do we go from here? Do you see a commercially viable solution to commercialize these consortia? Interlinked is, are these consortia going to end up creating their own digital islands and will still have a paper to bridge those gaps or build those bridges between islands? And interlinked to this kind of which Madhav you were talking about, how can regulators help with interoperability, maybe coming up with standards, so bringing the confidence of government stamping the confidence that electronic version is equally credible as a paper version. So kind of a three interrelated questions which I'm combining. So let me start with Mr. Devadatt, let me start with you. If we bring it to India context, so IBBIC was the platform we talked about. It's gaining traction. So what do you see the future for it?
See, one of the main use of blockchain and all this technology is on the trade side, no doubt on that. But saying so, the current stage, as far as we are concerned, we are running some of the pilots on different aspects of trade, but then there is no conclusive outcome at this point of time to articulate or give a color to that. But then as far as the scope is concerned, I believe that the main use of blockchain is there in trade finance. The kind of data that it is going to handle subsequently once you digitize the entire whole process, possibly it would be, I mean, something where possibly blockchain can only help to rationalize thing. And I believe there is an excellent scope therein. But as far as we are concerned, we do have some pilots, but there is no conclusive point at this stage to give a color to that.
Thanks. Sunil, you wanna?
Yeah, maybe I will divide again your two questions in two parts. One is what's future in store for blockchain technology in trade, and second is the regulation part. Now, I will say that I will divide this future in three parts: short term, medium term, and long term. Right? In the short term, because of all the things which we already have spoken about in terms of standardization and all, I will see private blockchain platforms still being used. So all the ecosystem partner of a trade transaction, buyer, seller, from where they deal with, everyone come together on one platform and start doing the commercialization of that private, so-called private blockchain. That will keep on going in the short term time. In the medium term, specifically in India, once the IBIC gets operationalized with the platform, then SLD, etc., gets onboarded, I think a full-fledged commercialization, at least within the domestic territory, of India will be possible. That will be on the medium tenor side. On the long-term side, definitely, specifically for the international trade, till the time, as Madhav has alluded again to, the ICC digital standard initiatives or United Nations UN CITRAL's model laws of e-commerce, e-signatures, as well as the electronic transferable documents, all these are not put together by various countries. Maybe I think there are some 8-9 countries right now subscribe to these laws and all, but with G7 being committed here, I feel this will move on. So unless that happens, the commercialization at larger scale in international trade might not happen. So that will be the long-term future as far as the blockchain technology for trade is concerned. So this is on the future which I see on all the three mediums. On the regulation side, obviously, so many ecosystem partners are there, paper-based systems are there, more than one countries are involved. There is no doubt the regulator intervention is required. And in fact, in India, if I see with the Fintech department in RBI, that is a great initiative to do all these things. Plus, I have seen somewhere that our government of India, through WTO's trade facilitation arrangement, which they have committed to in 2017 or so, in the recent 2020 to 2023 paper, I have seen one initiative, which is the electronic bill of lading initiative, to be implemented in India in a medium term, which is defined as 6 to 18 months. So these are the regulatory initiatives which will help to commercialize in short, medium, and long tenor. Plus, all the countries come together, put hold of ICC digital standard initiatives and UN CITRAL digital initiatives will definitely help global digitization of trade. So that will be my take on these two different parts.
Thanks, Sunil. Vivek, just your lens from the regulators. So how can we work with regulators well to standardize some of these initiatives?
Look, I think it is my long-held belief, and I've had the opportunity to work very closely with both the HKMA and MAS in my previous life, including the platforms that I've got built. I do believe that this requires a public-private sector partnership. That is number one, right? I think what is inescapable is each of the jurisdictions, be it India, China, Hong Kong, Singapore, Australia, they will go their own way, path of least resistance in terms of coming up to a certain scale. In Singapore, for instance, the National Trade Project is not on blockchain, right? So I think what we can't basically fight is how the local jurisdictional approach would evolve. Where I think the public sector or the regulatory support and facilitation needs to come in is actually stitching the disparate in-country jurisdictional constructs, right? So I think there was a conversation at least about a year and a half back between Singapore and Hong Kong in terms of both the regulators providing that bridge that connect Hong Kong on a blockchain on the trade project versus Singapore on NTP, which was not on blockchain, right? I think this is where I think we would similarly need to see, support from RBI, working closely with other regulators in the region, like-minded, progressive, to make things happen, right? So I think, to me, it's very important that unless we solve for that, genuine cross-border trade, I mean, we can't be talking domestic trade, it's cross-border trade, has to be facilitated, right? The public-private sector partnership, I said, would be absolutely key to getting us there.
Yeah, thanks. Madhav, any comments on this?
Gaurav, the blockchain technology is a means to an end, and the end here is decentralized finance. So you can use the smart contract feature essentially to over time replace the traditional letter of credit. Once the digital regulation allows for it to happen, there's also it has the benefits of immutability. But the important piece to get to decentralized finance is to bring other parts of the trade ecosystem, shipping players, the ability to track financial information across the entire supply chain using redistribution of risk by monitoring shipments through sensors and IoT and feeding that into the blockchain. all of that reduces the number of parties that are involved in the transaction. So using APIs to create different blockchains will develop, and there is no choice to people will try to join various blockchain systems, hoping that each system will attain scale. There are players like TIN, Swift has its own initiative. There will be country initiatives. Just as each country is launching a CBDC, they will build a local, and these have to talk to each other. So creating APIs that create interoperability between these blockchain systems, each of which have a certain set of actors in them, will become important. So I think if we're able to do that, we'll probably get to a kind of platform that will actually take meaningful scale using the benefits of the distributed ledger technology.
Sure. Okay, thank you. So we have definitely talked about what digitization has happened, what the future looks like, what support or how different actors needs to come together. So I want to bring it home. One last question for 30 seconds each. In the next 12 months, if you have to pick one area, one use case, one technology that you want to focus on or you want to closely monitor, what will that be? So I'll start in the round robin based on my screen. So Sunil, you are on my right hand side. So I'll start with you, and then Dev, then Madhav, and wrap it with Vivek.
So since you are talking about the 12 months horizon, I will take two activities, one for domestic side and one for cross-border side. For domestic side, I will definitely focus on digitalization, complete end-to-end digitalization of supply chain financing solutions. No doubt about it. It will definitely help the MSME to bridge the credit gap which is existing. On the cross-border side, since the complete commercialization is a bit far away, I will still focus on being experimentative in this effort. So I will like to take experiments with various fintech partners on the cross-border trade and the private blockchain thing, gain the experience, which ultimately will help once the overall interoperabilities and standards, etc., comes in the cross-border trade.
Sure. Thank you, Mr. Devdutt.
See, on the cross-border side, to a large extent, I believe there is a trade digitization, but the domestic side, I would believe that the volume would go significantly up. Suppose I talk about trades, the volume is hardly 25,000 crore a year, whereas the trade space would have been some huge amount there. So I would like that volume to significantly go up. And secondly, with regard to the MSME, I want some kind of a big push coming in terms of capacity building for them to onboard into all this platform. And that significantly will move up because the advantage to the MSME is to squeeze their trade cycle by the process. So that is going to happen in next 12 months.
Madhav.
The legal reform in English law for the model law around electronic transfer of records, if that does get done this year through G7's intervention and ICC's work on the digital standards, that will be the one far-reaching platform for dispute resolution, which then will give the impetus to digitization of cross-border trade. I think that legal framework falling in place is the one ask, if I had one.
Thank you. And Vivek.
Look, I think one has to be both ambitious for the industry and ambitious for our customers, right? So ambition for industry for us, having done a very successful commercial transaction on SLD, I'm super keen that we as a team support how we can actually build that out further, right? Across the industry and for our clients. I think from a next 12-month priority point of view, we have a very ambitious agenda. We are well progressed on the agenda. Madhav spoke about APIs and what have you. So we are actually digitizing things front to back, right, in support of our customer agenda, because there is a big, wide utopian world which we can take around blockchain and what have you. But there is a here and now in terms of solving for customer pain points. I mean, look, the reality is customers, be it in e-commerce, IoT, whatever have you, they have moved significantly forward, and banks and trade finance, unfortunately, has been a bit behind. So I think it's important for us to catch up. It is my endeavor to at least make sure that we catch up as best as we can to where the customers, business has actually gone forward to.
Okay, thank you. Thank you very much. So if I have to summarize, I think one key aspect I learned is if I have to trade being multiple parties involved. Similarly, if we have to digitize, we need everybody to come together. So banks on their own or regulators on their own, or maybe technology partners on their own can't digitize. We have to all work together. Standards is the key. While we look at this, I would say North Star, Vivek said, use the right word, utopian, but we have to solve customers' pain areas now, and there are some tactical digitization moves we need to make as well. With that, I would like to thank each one of you for taking time from your busy schedule and providing insights. Thank you very, very much. So I'm going to hand back to our host.
On it. Thank you, session chair and distinguished panelists, for such an interesting discussion and for sharing your various perspectives on the topic. Thank you.
Thank you.
Thank you.
Thank you.
We are live, please start.
Ladies and gentlemen, we now move on to a second panel discussion on digital lending. This panel discussion is also preceded by a 10-minute presentation on the topic risk decisioning. For this, I have pleasure in inviting Shri Jitesh Kethan, Practice Head, Risk Management, SAS. Ladies and gentlemen, SAS is one of our esteemed premium partner for the conference. Over to you, sir.
Thank you so much, ma'am. And thank you for giving me this opportunity. So as you rightly pointed out, over the next 10 minutes, we'll discuss about risk modeling and decisioning strategy in a banking context. So without any delay, we'll get started. What we intend to cover is how risk modeling and decisioning strategies are changing in banks, why they are changing, what kind of risk modeling and decisioning platform banks are looking for. And when we see our overall global experience in this area, what we have seen, what banks have implemented, and what kind of results they have derived out of implementation of risk modeling and decisioning platform. As many of the panelists before would have pointed out, the ecosystem in which bank exist have undergone a very rapid change. Some of the things were accelerated by the pandemic. Today, customer preferences have changed dramatically. Customer is looking at timely credit extension. Customer is looking at personalized loan offering at a real-time basis. Something like Netflix recommending us shows when we, enter the Netflix screen. What we have also seen is the growth of fintechs have accelerated. These fintechs provide automated credit decisioning. They provide better customer experience, personalized customer experience, and provide loan sanctioning with the matter of minutes or hours rather than days in traditional banking. What we are also seeing is banks have also started investing in cost optimization and efficiency. They are building paperless branches. They are going into automated infrastructure, digitization of processes in big way. The pandemic also impacted their credit provisioning. So banks are looking at advanced early warning systems. Banks are also looking at sophisticated portfolio analysis. There's a change also which is coming in the modeling and decisioning strategy from a regulatory framework. If you are implementing models, there are governance around it. What kind of models, what kind of validation you need to do. There cannot be any bias in your risk decisioning. Then banks also have to develop new set of models to comply with some regulatory norms. In particular, Ind AS 109 or IFRS 9, where they have to develop sophisticated model calibrated to macroeconomic factors for the PD, LGD, and their provision calculations. So this is the ecosystem in which banks today exist, and they have to change their risk, modeling and decision strategy to meet up to the regulatory and customer expectation in this environment. Now, when we look at fintech compared to traditional banks, traditional banks, the decisioning times is in days, theirs is in minutes. And another thing which is there is traditional banks still relies on, very limited set of data in making decision. But when we are looking at fintech, new generation bank, digital bank, they look at all kinds of data, traditional data, streaming data, unstructured data, data derived from surrogates like social media, mobile data, and then they are providing that decisioning in a real-time basis, which customer is expecting. What customer is looking and searching the market is the best offer in the market, the fastest decision, the lowest interest rate, and most attractive contract terms. If he's not getting it from one institution, he will migrate to the institution which is providing that to him. For this, for the competition for good quality clients in the marketplace is very fierce. So banks are, investing in their risk modeling, decisioning strategy. They are looking into digital lending, automating their processes to capture this mind share, the change, customer preferences and behavior. When we are talking of these changes, are we saying these changes are like transient? But not really. These changes are going to accelerate in coming days. Now we have industry watch, industry analysts which are pointing out that banks are going to revisit their models, their credit decisioning strategies, their scoring models for corporate portfolio. Their prediction is by 2023 in the world, you have 75% of consumer and small business loans, which will be through AI enabled and automated digital lending processes. There will be rapid use of digital identities to deliver new innovative products to customer. When we look at an Indian context, the same thing is echoed by the RBI working on the digital lending. What they say in their report is, retail and MSME lending through physical mode may be rendered obsolete in near future. What they are also saying is, though the India technological infrastructure was not very evolved, but digital, lending has grown phenomenally, both in banking and the NBFC sector. And what they are predicting is the market for such will be 8.35 lakh crore by 2026. So we look at the changes, we look at what kind of competition banks have to go through to acquire a good customer, and we also see that these changes are going to stay in the marketplace. So how are banks reacting to this? Now their challenge is their traditional risk modeling and decisioning strategy is manual and inefficient. So what kind of problems they face? So first thing is they cannot take the decision as rapidly as it required. There's a delay in the decision making. So you might lose that opportunity. That customer might go out of hand. And the second thing is they are not able to use all the non-traditional data sources to make these kind of decision where you can score the customer or you can price your risk better and you can acquire your new customer. So the need of the hour is to get a comprehensive framework, which can help me with this risk modeling and decisioning, which helps me to go to data to decision in the fastest way and give me more insightful outcomes. When we are looking at this risk decision, we are not only looking at originations, customer applies for a product, we give him a product, we price it. We are looking at the entire customer life cycle where this risk decisioning and modeling strategies have to be adapted. We are looking in terms of limit increases, transaction authorization, cross-sell, upsell to the customer. Then even from a collection management, identifying problematic customer at an early stage, what kind of collection strategies to be followed, typically in the retail portfolio. And definitely what we are looking at, people are looking at more advanced early warning system. No longer it's a rule-based early warning. Okay, these rules are satisfied. Now this is a warning, investigated. Increasingly, there is use of AI ML techniques, non-traditional data sources for early warning. So this is what banks are coming up, and this is what banks are looking at revamping their risk modeling and decision strategy. What exactly, when they go in the marketplace, what they are looking at? They're looking at a technology platform or a decisioning platform which helps them to prepare, develop, deploy, and monitors models very fast. When we say very fast, traditionally, what used to happen is from data to model automation or model deployment used to take 6 months, 7 months. Now what expectation is, because of the changes and the expectation and changes in customer preference, it should be matter of days, not months. That is what. And then they are also looking at some kind of technological interface where they can build models very fast, deploy it very fast, and recalibrate it very fast. So one of the things which banks are looking for their, adapting their risk modeling and decisioning strategy and looking at their platforms, they're looking at a platform which can read any kind of data, which I said, both traditional, non-traditional. They're also looking at something which helps you to develop risk models faster. Traditionally, you used to code in your open source or something, and you used to develop your model. Now they're looking at visual interface, drag and drop, something like ClickView or something which you do for reporting. Okay, this is my data. Now I want to develop models. I want to apply these pipelines. I want this pre-built thing. I want to compare three models, and all of this has to happen at a click of a button. Most of the modeling or the mechanical part of the modeling has to go into a no coding interface. Now, once you have built these models, you need to deploy these models very fast. You can't wait. The lag between model development and deployment cannot be fast. And there are host of technological infrastructure in this. The content can be deployed and models can be deployed very fast. Fourth and fifth important thing is what banks are also looking at monitoring risk models on a continuous basis or a near real-time basis. Because of change in marketplace, change in customer preferences, the need to recalibrate model much faster is there. So you should be continuously monitoring, and then you can recalibrate the model, look at the new modeling strategy, and deploy the change or enhance models very fast. And finally, what you are looking at once you have developed all of this, you want automated decision making, where set of rules or whatever decision has to be taken is automated. So this is traditionally what banks are looking for from any kind of technology platform for implementing their revised modeling and decisioning strategy.
Jitesh, I don't think we have enough time now. We're already running late, so
Sure.
if you can, I don't know if
Sure.
there's anything more, but we really need to.
Okay, so I'll just
We don't
quickly,
have more than a minute now.
Sure, I'll quickly come to an end. Neha, thanks for telling me. So basically, banks which have implemented these new modeling strategy, what kind of results they have seen? They are able to identify, price, and segment their customer well, less, more recovery rate, less charge of losses. They achieve a lot of process efficiency because data duplication, the kind of effort has to gone into model building, calibration, and deployment is reduced significantly. More effort is going towards building the quality of models. So you see a lot of performance, model accuracy, performance also improves a lot. Definitely in terms of you are able to segment price and identify the risk better, it leads to lesser provisioning. The other important part is what you see is your data infrastructure optimization in a disaggregated kind of environment where you duplicate your data, you duplicate your process, the kind of infrastructure you require for your decisioning is much more. And finally, what happens is if you implement this kind of strategy, your time to develop model, time to deploy model, or time to recalibrate model is reduced to days instead of months. So with that, I will come to an end of my presentation. Neha, over to you.
Thank you. Thank you. And if all the other panelists can switch on their videos, please, that'll be helpful.
Thank you, sir. Thank you, sir. Ladies and gentlemen, it's now time to invite our distinguished panelists for the discussion on digital lending. But before that, let me give a brief synopsis on the points for discussion. Digital lending is on the rise in India and could revolutionize credit dispersal by reducing cost for banks. Banks have been increasingly adopting innovative approaches in digital processes. With these words, I invite our panelists for today, Shri Rajgopal, Executive Director, Bank of India, Shri Ashish Pandey, Executive Director, Bank of Maharashtra, Shri Rishi Arora, Senior Partner, IBM Consulting, India and South Asia, Shri Dev Jyoti Ray Chaudhary, MD and CEO, NESL. This session will be moderated by Ms. Neha Punathar, Vice President, Cape Germany. I now request Neha to initiate the panel discussions. Over to you, ma'am.
Thank you. Am I audible? All right. Without much ado and keeping in mind the time, I'd like to kind of straight away jump into the topic on digital lending. We heard in the last 10 minutes from Jitesh in terms of how digital lending has taken off in India. RBI has also recognized this as a sector. So I would pose the first question, sir, to you, Mr. Rajgopal. In what's really been the experience and the success that you see of digital lending in India in terms of acquiring new customers? And we have seen that seemingly NBFCs have made bigger inroads for digital lending than banks. What do you think the banks ought to be doing more or better to kind of counter this or really expand this sector? So over to you.
Yeah, thank you, Neha. Thank you very much. See, there is a phenomenal development insofar as digital banking or digital lending is concerned across the banking spectrum, if you see. So the fintechs have actually started the revolution, and as rightly pointed out by SAS presentation, it is not far off. No, it will reach thousands of crores of business because there is already a serious. We used to think that basically this fintech revolution that is happening in terms of digital lending will only be nibbling the business of commercial banks like us who are traditional banks. But the flood has started now. So it is very much essential, and so far as the public sector banks, particularly, and banks in general, that we will have to actually have a very clear strategy on one hand and a clear goal as to how we are going to actually participate in the digital lending landscape. One or two things that we need to do if you have to be alive, kicking, and then be part of the entire digital lending process is one, we have to do a lot of partnerships because basically, as rightly pointed out by our friend over there in SAS, that there is a lot of disaggregated data that we have in the commercial banks. So how do we actually aggregate this data, both in terms of risk aggregation as well as in terms of leveraging that for the purpose of customer acquisition, and not only customer acquisition but also in terms of improving the per unit profit, per customer profit of the banks. So there is a lot of things that we have to bring in terms of our data analytics tools, and we have to actually adapt to the technologies like data lake and implement data lake very efficiently. And another thing that we have to seriously do about is data labeling, so that uh, per pie for the customer can be enhanced. So these are all certain things that we'll have to do, especially in public sector banks. There is a lot of investment needed for this. Of course, one great advantage we have is we can do a lot of things in the cloud. There are a lot of cloud technologies available. So there are very good cloud platforms available. So we don't have any problem in terms of implementing it and rolling out very fast. So most of you are well aware how these things happen across the country. So only one thing that I can tell you, the IBM can implement AI ML with the government of India in GST platform. The public sector banks can do very fast and implement all this and be a partner in the digital lending platform landscape. along with the fintechs. Otherwise, we'll lose out very badly. It'll be very difficult for us. That's my view. Thank you.
Thank you. And I think that kind of takes us to the next question to Rishi, very, very, I think, apt in terms of the point that you raised, Mr. Rajgopal, in terms of looking at AI, ML and how it is being used and how can it be leveraged for the entire digital lending cycle. So Rishi, this is a question to you in terms of what's been really the experience of IBM and how do you see banks really adopting this at scale to be able to kind of facilitate digital lending?
Yeah, and thank you, Rajgopal sir. So, digital lending, I look at it in three parts, right? If you look at the entire customer journey, look at it from marketing, where you are actually positioning products or solutions for your customers. So you start with marketing. Then you get into sales. That's basically the onboarding process. And according to me, one of the most important element is basically servicing, right? So right from marketing, sales, and servicing, I think digital lending plays a very key role. And let me give you a couple of examples, right? See, today it is all about, when we talk about the digital world and when we talk about digital lending, it's about two things, right? It's about experience, customer experience. How seamless is the experience? Is the journey complete, or do you need manual interventions to complete the journey, right? I call it personalized customer experience, which becomes very important. And obviously, because everything is happening online, everything has to be secure, right? So it's about, again, personalized customer journeys or experience, and the platforms being platforms being very secure. So if I look at AI ML tools, and IBM has been working on this with many customers, right? So for example, if I look at the marketing side of things, right, even before even before individual is onboarded as a customer, how can the campaigns be very pointed, right? How can the campaigns be very pointed to the needs, right, of that particular individual, right? Then when you kind of get that individual as a customer, right, how can the journey be seamless, right? It's all about the onboarding part. And like I said, the most important part, 360-degree view. If I as a customer have two or three relationships with a bank, right? If I am a credit card customer, I'm a trading account customer, I'm a mutual fund customer, right? How can you service me as a bank customer and not as a department customer, right? And AI ML tools, have a role to play in all these aspects, Neha.
Thanks, Rishi. And we'll come back on this in terms of how AI/ML is being used for digital lending. We heard Mr. Rajgopal that, private sector banks or fintechs may have taken lead in digital lending, but definitely public sector banks are also doing and making many strides. I think the EASE norms have also mandated a lot of public sector banks to actually focus on digital lending in a big way. So, sir, Mr. Pandey, this is a question to you in terms of how have you seen that, what do you think, banks ought to be doing, public sector banks specifically, to actually, accelerate the adoption of digital lending? And how should they be working with customers? And do you really see, social media adoption? We have seen WhatsApp really being a game changer for a lot of payments kind of initiatives. Do you see actually that playing a role as far as lending also goes?
Yeah. Good afternoon. Am I audible?
Yes.
Yeah. Thank you, Neha. And actually, if we see, right from the beginning of this session, the first was Jitesh, which he touched upon the various processes in between, and Mr. Rajgopal, who touched upon the concerns, how it can be and why it is important. And Rishi, if I see, very nicely touched, what are the pillars. So very rightly pointed by you on the digital lending. I would say in brief, a huge volume game with the low ticket size, and the TAT is in minutes, not even in hours. So now we have to meet this characteristic. I believe that why particularly banks, the PSBs and even I would say the private sector as well to some extent, not to a great extent. But then for coming to the public sector banks, actually we need 3, 4 important, pillars to be in before we go for the digital lending side. So I am going a bit deeper than what Mr. Rishi was saying. So the first is, the crunching of the internal and external data. Internal data will not help you much in the digital lending side because you have to take a call within the minutes. So when you comes internal data and external data, certainly there is an AI ML plays an important role, and also the big data, which is for the unstructured and destructured data, which you have to keep in. Now, if we see, this is one pillar. The another is there are 7 to 8 solution providers which you have to loop in. It is not even a single. So I would say, like, the GST coming in, Mr. Rajgopal was saying, then an account analyzer need to assess what is the funds flow statement, the cash flow coming into, and then there are negative list. There are bureau companies in between, and one more, Mr. Reddy is already there, and since I have implemented that in my early assignments. So, the digital, the thing is that it has to be, when we say digital lending, it should start from the video KYC, which already, the government has permitted. So you do, onboarding a customer like saving account with you on a video KYC basis. And then you start, the crunching the data and then implementing the policy guidelines. Policy means the decision making. Because see, let us understand one thing in PSBs, we have into the manuals of, underwriting, I should say. The great word assessment is underwriting. So here, when you are moving to the system, 2, 3 things are very important. All this information and then policy, which policy you are going to implement on the side. Else it will be a more failure, maybe a false alarm or something like that. And the third important point is that this policy has to be very robust and approved because now there is no election on the assessment side. So you need to have a very robust from the risk management side, maybe operational risk, even from the credit risk, even from the market risk, put all 3 in together, have a very robust and which has to be reviewed every 3 months for the loans which you have underwritten, so that if you need to fine tune or modify your policy, you can. The third important thing is, so this ecosystem is very, very important, I feel, if the public sector banks has to go. The most important pillar, because it is a volume game, and digital you are doing, the most important piece is the early warning system, which has to be on the predictive side rather than the reactive side. And coupled with that, the strong, the connection feet on street mechanism. First, digital mechanism. If it is going, not yielding for a certain section of the society, then we have to move on the physical street. So the robust risk management policy guidelines, robust data structure, which is you feeding into the system for the decision making, robust collection mechanism in place. I think these 3 are very important. Now I'm coming to the second part, which you raised on the social media side. Wonderful thing. Okay, before I take up WhatsApp per se, 390 million users in India, 2 billion across world, 38 minutes in average is spent on the WhatsApp. Now I'm just giving some glimpse. If you see even the gender-wise, 54% male, 46% females are on the WhatsApp. Now, if more than 2 billion users, and India is the fastest growing number of WhatsApp users, the most important thing WhatsApp is the journeys you can create. See, the digital learning will not yield anything as far as you have on this system. So is the reach, and second is the journeys you get that social. Otherwise, to feel information and all those sort of things.
Sir, we are unable to hear you very well. Is that at my end, or are the other panelists able to hear?
Am I okay?
No, sir. I think there is a
yeah, your
connectivity
voice
issue.
is breaking, sir. I don't know why, but
is it okay now?
Yeah, it's okay now.
Yes.
Okay. So I think the reach is the most important, and creating journeys, which is very much possible in social media, particularly WhatsApp. And without putting more of the things, we can have a very good journeys. So I think these 2 things which you asked probably are the enablers in the execution side for the banks if to put in place and become a robust engine for digital lending. That's from my side.
Thank you. And it's very interesting how you've laid out the 4 pillars that need to be in place for, a bank to actually undertake digital lending as, serious business and, scale it up. And I think the key determinant is there in terms of achieving the faster turnaround times, the TATs or the response times, because, whenever a customer comes for a digital loan, they are expecting response times which are very quick. Now, one of the key, I wouldn't say roadblocks, which is usually in the mind of a lot of customers is around the documentation, or can that be digitized, or is that going to really become a showstopper for the entire kind of, automation of the lending process? So with that, I would like to pose a question, Mr. Ray Chaudhary, to you in terms of how has NECL helped in actually digitizing the document process, and what is really the impact of that kind of initiative?
Yeah, thank you, Neha. I hope I'm audible. So just to give a perspective, I think an earlier speaker referred to this RBI report or the working group on digital lending. Now, if you see in this report between 2017 and 20, it was the NBFCs which have made rapid progress in digital lending. In 2017, the penetration level was quite similar across banks and even NBFCs. But since then, it's NBFCs which have taken rapid strides. Now, as far as the digital lending space is concerned, I see some parallels in the EV space, especially the two-wheeler segment. While established players are still getting their act together, it is the new players which are making all the headlines. An industry captain has very famously said, bet on bets. Bets will have oats for breakfast. Of course, this scenario is still evolving, and the outcome of this struggle will play out in the next few years. As far as NESL is concerned, the DDE platform is amenable for both banks and NBFCs. So far, 21 banks have integrated with our DDE platform, and even some NBFCs have done so. Many of these banks have followed a stringent process of IT and security audit before going ahead with such integration. Now, one of the challenges in digital lending, as Neha rightly pointed out, is how do you do the documentation? There are two ways. One way is to have something like a click-wrap agreement, which is an acceptance of the terms and conditions of the lender by the customer. Now, as earlier speakers and Jitesh also pointed out, AI and other sophisticated tools often used for identification and sanction. Many banks incidentally are already using it. Accordingly, the delinquency rate right now is very low. And therefore, this form of simple documentation has found acceptance. There's another way out, which some banks are doing, which is doing the documentation by taking a print of the e-stamp certificate and then affixing it to the hard copy of the documents. But then this does not make the process fully digital. NESL's digital document execution is a fully digital, and it is a paperless mode of document execution. And it's already been tried and tested. Nearly 2 lakh transactions have taken place, and this is across all customer segments and product categories except mortgages. It is very convenient when there are multiple signatories in a document. Otherwise, in the conventional way, the document has to move from one person to another. All the signatories have to come together, but digitally it just flows from one person to another. Moreover, the executed document can also be stored with NESL if it is desired by the bank. Otherwise, it flows to both the bank and to the customer for his information and record. NESL also ensures a certificate of validity under 65B of Indian Evidence Act. This is also provided this can be downloaded. Incidentally, a number of banks and NBFCs are already using the DD platform of NASL, and they are deriving the benefits of a seamless sanction, documentation, and ultimate objective of disbursement of a loan. I think seamless experience is what an earlier panelist also spoke about. And DD of NASL is a kind of last mile connectivity to the customer. Incidentally, the charges for this are quite nominal. So just by paying a small sum of money and whatever stamp duty is applicable, lenders can secure themselves and also ensure compliance with the laws of the country. Moreover, the customer experience also has been very good. And this is borne out by the fact that 20% of the documentation on the DD platform of NASL is now happening outside of banking hours. So you can not just apply for a loan, you can also do the documentation, you can also even take disbursement outside of banking hours. In fact, when we did an analysis of the loan sanctioned and disbursed through the DD platform, vehicle loans top the list, and of course they are personal loans. So these are in the personal loan category, in the personal segment category. But if you see the commercial segment, it is working capital, term loans. So here the numbers are less, the amounts are much more. And incidentally, even loans under the emergency credit line guarantee scheme, we've all read how good this product has been. This is recently extended by the government for one more year. Almost 2,000 crores of emergency credit line guarantee scheme have been disbursed through this DD platform of NASL. And it's become fairly popular among banks, but a few banks have really taken the lead and they're leveraging this platform to great effect. And there was also talk about fintech players in this discussion. So yes, we are working with fintech players. Generally, we talk to banks directly for the digital document execution, but it's been our experience that in many cases, banks have authorized fintech players to do this integration. So wherever banks are authorized these fintech players to do the integration, we are more than happy working with them and ensure there's an integration of the bank's IT systems, the loan management systems, so that overall the customer experience is enhanced. I think I will stop here now within my mandate of time allotted to me, and be happy to take any further questions or issues.
Thank you, Mr. Rai Chaudhary. And I think this is very, very encouraging in terms of, NASL's kind of, providing this service on the digital documentation, because, that will go a long way in actually supporting the digital lending process end to end. So I think that's very encouraging for the Indian customers. Moving from kind of, what we've heard a lot on retail lending to actually looking at some bit on the small and medium businesses, the SME market and so on. A lot of discussions around digital lending has been how it helps going from the traditional collateral-based lending to looking at cash flow-based, and to that extent, how some of this can help in better kind of cash flow forecasting. So, Rishi, this is really a question to you in terms of how do you see actually digital lending helping in better cash flow forecasting for the SME business, better analysis of customers, kind of, credit history and so on, and it being equally relevant for, the the SME segment as well.
Let me start by giving you an example, right? Suppose there is a seller on a platform, right? And that seller is wanting a loan. What was the earlier process? The earlier process was, okay, he has to submit tons of documents before a loan can be sanctioned, right? Now, because of OSIP, right, which is now in place by RBI, right? The banks will have access, for example, to the inventory and all the collaterals which the seller will have digitally, right? So I think what is now it is becoming very seamless, and I spoke about it in my previous response, right? It is all becoming very seamless. If you look at revenues, or if you look at tracking cash flows, what are the elements of digital lending? I already spoke about marketing, sales, and servicing, but Ashish sir spoke about data, right? So data is one key element, right? How can you be how can you play a role in the life cycle of a customer? See, today, if you are for example, if a customer wants to buy a car, and if you are coming in only at the at the last kind of at the last step in the process, uh, the probability of the customer taking the loan from you or not taking the loan from you is primarily dependent on the financials, basically, whether it works for him or her, or it doesn't, right? But if you have played a role in the life cycle, right, of buying the car, and ecosystems play a very important role. I think all my fellow panelists, they spoke about the importance of bringing the ecosystem, the distribution channel. I think it is it kind of gives a gives a platform for banks to basically enhance enhance the products which they can offer to their customers, right? So it's all about, if you can play a role in the life cycle of buying that car, of buying that house, the probability of the customer taking the loan with you is much higher. And data then plays a very important, role. Then you get, so we spoke about data, we spoke about ecosystem, right? Then when we talk about all these technologies, AI, ML technologies, it's all to do with experience. How can then your processes, right, obviously being on the right side of regulations, that is important. How can your processes then be automated to offer or to complete the journey for that customer? The predictability and transparency, I think, comes in the business through through AI, ML kind of platform. So data, connecting to the broader ecosystems, automating your internal part of the organization, whether you use data and your process to to do more cross sell, upsell, or whether you use data and AIML to kind of predict how can you lower your NPAs, right? I can talk about I can spend hours talking about this, but but these are all outcomes. Focus on the you focus on the outcomes, revenue enhancements, NPA reductions, turnaround time improvements, customer experience kind of improvements, and all these tools kind of play an integral role in delivering all of these outcomes to to the banks. Yeah.
Thanks, Rishi. You mentioned a lot on the data side of it, and definitely when we're looking at digital lending, we are looking at banks not just leveraging their internal data, and Mr. Pandey, you also mentioned about it. There's a lot of external data also that we're looking at tapping, right? Now, with this comes a lot of concerns, data privacy concerns, security concerns. And, RBI in the working group kind of report also stressed on the fact that there is customer protection, with a lot of proliferation of digital lending apps that's coming in. So while we are innovating, we are looking at all the benefits that Rishi, you spoke about, all the, all the enablers that NESL is providing, but at the same time, there's a lot of security concerns that are coming into play as well. So this is really a question to you, Mr. Pandey, that how do you see this panning out for the Indian market, and what should really banks be doing to ensure that customers feel secure and they are encouraged to adopt digital lending in a big way?
Sure. Thanks. Am I audible correctly?
Yes.
Okay. Thank you. Actually, this is the crux of the entire, the digital lending, which you have touched the nerve right now. So once you are thinking to build, I think parallelly any ecosystem has to be built. We need to think about this piece. And up till we think about market risk and the credit risk and the operational risk and reputation risk. Now reputation or in तीनों के बीच में भी एक है which is a digital risk. Let me now coin, it is not specifically I am saying, but then coming that, as you go digital, the more and more responsibility on the DLP Act and the data security posture of the bank or any institution for that sake. Now there are two issues. The one is, the apps which are available and where, it may be a correct one, it may be even not a correct one or a fake, or it may be the app or the links, which are luring the customers towards feeding the data. So that is the one posture which is the outside any entity, where the banks or NBFCs, or I should say BFSI sector, the financial sector is not involved. So that is one, I think, the security concern as of now. The second one is within the the entity which is offering digital lending platform. I would like to touch upon both. Now the first point is when you talk about the outside. Outside, as I said, there are 7 to 8 partners which you are engaging into this ecosystem. So what should happen basically, that at least on the 1 or 2 important parameters when you ask a company, any person to feed in. So then there has to be a, the confirmation sort of an OTP or something, so that customers knows that he's hitting a correct URL. Number one. Number two, that there is a, the right now. So account aggregator is one, which is the Reserve Bank open banking sort of. But then there are platforms which offer various insurance, which offer various loans in the market to the customers. So the thing is that it has to be robust. Number one. Number two, any participant which is offering a digital lending, that rigorous there has to be a onboarding system for the app or maybe the URL, whatsoever the process journey, initiating journey is. That is on the first part. The second part is very, very important because you are digitally playing with the data and then you are using AI ML on that basis and then making a policy decisions on the sanction. So what I feel that basically, because it is one of the thing where 4, 5, 8 solution providers are coming, the GST data, even the Facebook data, the person who has not availed any loan up till now. So there are new to credit NTC customers. So now you will not get the bureau report. So you have to believe upon the unstructured data. You have to believe upon the social media. So what happens then when you consolidate the data, when you bring it one platform, basically at this juncture, I feel on the second option, which I'm talking right now, the data should be in-print rather than out-print. So I think the Jitesh and the IBM and all people. So what happens when the solution, when you are deploying your implementation of the policy guidelines, the assessment schedule, then better the data is within the bank because you are taking care of that data. It is not going outside to any of the agencies. So it is not doubting any of the agencies. But then maybe the financial entity is having robust CISO mechanism, VAPT and all those things. That IDBRT from Reserve Bank, they do so many testing on the attacks, maybe the fake attacks, or I should say the decoy attacks. So you have a robust system in print. So better if you build the entire ecosystem in print, then you save from the second part. The first part is outside your ecosystem, which you have to be very robust as an on the digital side within the industry, so that the poor customers, I would say, who are not very digitally, because when you are going with the huge volumes, everybody may not be that much aware of the digital things. So keeping them safe, and there should be third channel, which is on the customer demand side. So it can be from both sides for option 1 and option 2 within the bank, so that you address the customer protection from the time when he starts the journey. This is my take, Neha, on this.
Thank you. Thank you. Thank you, everyone. I mean, I think we have very exciting times for digital
Yeah,
lending.
if you could just permit me 2 minutes. So I'll just respond to the last speaker's comments. Mr. Pandey very rightly talked about digital risk. And let me tell you that since we integrated with 21 banks, all these banks went through a rigorous process of checks and balances before proceeding with the integration. And then the other thing I would like to dwell upon is that NESL is a regulated entity, is regulated by IBBI. It has ISO 27001:2013. It's highest possible security certification. Our data is stored in a tier 4 data center, which is the same category which is used by banks. So every possible security mechanism is in place to enhance not just the customer experience, but also the security. And one last point I would like to make, and I would like to draw on that EV space which I was referring to. My experience has shown that please do not paint all banks in the same brush. Due to the personal initiative of a few individuals, some banks, even they are mainstream banks, they have taken huge leaps, not just using AI for sanction, but also ensuring a totally seamless customer experience. So please don't write off these mainstream banks. Thank you.
Thank you. Thank you. Right. So thank you for such a interesting and kind of, very stimulating conversation today on digital lending. I think there's really, really great potential for all banks, public sector, private sector. Of course, NBFCs are making strides in terms of tapping. As you rightly said, Ms. Pandey, the new to credit kind of customers in addition to, the customers who are already part of the, the entire current banking system. So there's really a great growth potential. At the same time, keeping in mind the security concerns, ensuring that the customer protection is, basically kept in mind, and the fact that at the same time everybody is familiar with what are the kind of, the platforms, the kind of, enablers that have been set up by the government, by entities like NESL and so on. So I think there's a lot of awareness also that needs to be built in the entire country with the customers. But fantastic times ahead. And thank you so much, everyone, for this lovely discussion. Thank you.
Thanks. Thank you, Neha, and thank you, Pandeyji. Thank you, Rishiji.
Thank you.
That was indeed an interesting and insightful discussion. Thank you very much, distinguished panelists.
Thank you. Thank you. Bye-bye.
Thank you.
Supposed to tell us.
Okay.
Yeah, we are good to go live.
Perfect.
Ladies and gentlemen, now it is my pleasure to announce our third panel session. This is going to be an equally interesting panel discussion on the topic cloud computing in banking. A brief synopsis on the points for discussion. Due to sensitivity of banking operations and dealing with public funds, banks are subject to strict regulation and governance. Despite their cautious approach, market volatility forces banks to look for ways to cut operating costs and introduce innovative products that would give market coverage and faster return on investment. To have efficient and cost-effective operations, banks should consider cloud computing in banking. Cloud computing is a technical innovation that is transforming the banking business. To set the tone right for the panel discussion, let us hear the views and vision of Madam Arundhati Bhattacharya, Chairperson and Chief Executive Officer, Salesforce India. Ladies and gentlemen, Salesforce is one of our esteemed premium partner for the conference.
Good afternoon and a very warm welcome to everyone tuning into the Indian Banks Association's Annual Technology Conference and Awards 2022. I am Vivek Abraham, the Regional Director for External Strategy at Salesforce India. I'm joined by Mrs. Arundhati Bhattacharya, CEO and Chairperson of Salesforce India, and formerly the Chairperson of State Bank of India. Ms. Bhattacharya has long been an advocate for bringing the power of emerging technologies to the banking and financial sector. And today she's here with us to share her thoughts on the theme for this year's conference, Next Gen Banking and the role of cloud computing in banking. Ma'am, thank you for your time and diving right in.
Sure. You're most welcome.
Diving right in, ma'am, I want to open this conversation with a context-setting question on technology in the financial sector. One of the most visible markers of technology in the financial services space has been the digital interface. And the pandemic has only served to accelerate this transition. In fact, in this year's budget, we see a definite nod towards fintech with the government looking to launch a CBDC. What is your perspective of how digital products, services, and innovations are transforming the financial sector?
Well, to tell you the truth, given the size of our country and also the fact that people are spread from the metros right into the deepest heart of rural India, it's very difficult to really serve this entire population without technology. In the small villages, a brick and mortar branch does not make economic sense or commercial sense, I should say. Does not make commercial sense. There is a cost to a brick and mortar structure. Now, the only way we can solve this problem of scale, of ensuring that people get the services that they need, is by going through the digital medium. So there is no doubt in my mind at all that many of the problems that India faces, and it's always a problem of the services being rendered where it is required, rather than for people who need those services to go trekking 10 kilometers away. If we are to really make that a reality, then we need digital. And today also, though other infrastructure may not be so easily available, but the smartphone penetration in India is quite high. And that is what makes digital a viable model. So, if I remember right, in my earlier organization, when we started the mobile banking, we used to call it a bank in your pocket. Okay. So that's what we want to create in the financial sector. It not only has to be a bank, it could be investment vehicles, it could be insurance vehicles, it could be so many things. But unless and until you have a digital roadmap, you're not going to be able to solve the problems that you face, the problems of scale, the problems of volume, the problems of the small size of our tickets. In the Western world, each ticket size would be, or a voucher size, would be a much larger sum. In our case, the amounts are small, but the numbers are much bigger. If you can see the type of real payments that went through the UPI, I think there were 25 million, or was it billion? 25 billion plus, okay? In respect, if even China, it is 15 billion, okay? So far behind us, and yet they are considered to be the behemoths. So if you look at it that way, you can understand that at the end of the day, all economic activity depends upon the ease of exchanging value, okay? And that is something that digital banking brings to you at your fingertips from your home. And that is why I think, for a country like India, this is something that's highly important.
Absolutely, ma'am. And from branch banking to digital banking at your fingertips, ma'am, you have a very unique perspective, a unique vantage point of the evolution of the financial services sector. And from your conversations with financial institutions, what are you seeing as the urgent priorities being discussed in their boardrooms? And what role is digital technology playing in these priorities?
See, I think the pandemic has accelerated this entire move to digital by a number of years, mainly because the sector now feels the need to be able to access all stakeholders, customers, employees, dealers, suppliers, all stakeholders in an omni-channel mode. In the sense that today, what might be open, tomorrow it might not be, depending upon how the pandemic is twisting and turning. So to that extent, you cannot get cut off time and again. You will need to be available either physically or through the digital channels 24/7. Because again, today, if you look at the younger youth population, they are a very impatient lot. They are not going to wait around for you to deliver God knows when. If they want something, they want it now. It could be 12 in the night, it could be 3 in the morning, it could be any time. Now, that is what the banks need to understand, and they have understood. And that is where, all of technology is trending. Not only that, if you look at the banking experience, there was a time when banking was considered to be, really painful, really painful. I'm not saying that all the pain has gone away, but the fintechs are exploiting those pain points and coming up with solutions on which then they can make a play. So to that extent, what we are seeing is that this digitization effort, of course, is something that is highly accelerated by the pandemic. It is something that was always going to come. The fact that it has come at this point of time just indicates that, well, it is something which people felt the need of and which is now getting answered.
How can the traditional banking sector really leverage cloud computing to get to where the fintechs are today in terms of customer experience or personalization? And what are the key challenges that they should be ready to navigate going forward?
So, if you look at it, technology is neither good nor bad, right? It depends upon what you make of it. Now, customers today, therefore, have to be very reassured in many ways because you are handling sensitive private data. And therefore, you cannot take it for granted that they'll be happy that you use it for reasons accepting what they have submitted it for. Okay. So to that extent, you have to establish what I would call trust. Trust was basically the main pillar on which entire banking has been built. And we are custodians of that trust. So how we maintain that trust is something that's very important. But at the same time today, because I'm not meeting you face to face, there is a need of hyper-personalization. So my needs will be different from your needs. And it's not necessary that you and your friend, even though you may be in the same age group doing similar kinds of jobs, that your requirements are all the same. It isn't. You may have a different family size, they may have a different family size. You may be living in some place, he may be living in some other space. So, the fact of the matter is everybody needs hyper-personalization these days. The more you can create that hyper-personalization, more will be the wow factor, more will be customer satisfaction. Again, as I said, we must leave no gaps in the services we are rendering. If there is a gap in the services we are rendering, people will come up with newer and newer solutions. Okay. So to that extent, I think, what are the things that technology can give us? Technology can give us the means to hyper-personalize. Technology can give us, as the sort of banker or insurer of that person, it can enable us to give the customer a very superior experience. What technology can also do is it can handle a huge data amount of data in order to come up with the right predictions. Okay, because today artificial intelligence can actually very accurately predict many things. However, the accuracy depends upon the quantum of data, and that quantum of data to actually analyze it on your on-prem systems becomes very costly, because on-prem means you have to standardize it, or you have to benchmark it on the peak load. Cloud, on the other hand, doesn't need that. You want to go up for a particular period of time, you just have to provision it upfront. And that can be done in a matter of 2 or 3 hours. And you will have no disturbances, no outages, no nothing. Cloud is also today, unlike what is felt earlier, cloud is also today quite secure, because the people who are the cloud providers throughout, they are scanning the environment all the time to see what the threats are. And they are, trying and ensuring that those threats are properly cordoned off or taken care of. Okay. So I think, if you look at the power of the cloud, the agility, the nimbleness, not only that, in India, it is especially applicable because in India, we are a capital poor country. It's not that businesses run with huge capex. Okay. So to do capital expenditure means sunk cost, right? Whereas in a cloud, you don't really have to sink that cost in. The process also is much simpler, far cheaper, because if you're going to do, say, an on-prem system, actually you need to replicate it in 3 places. One is a business continuity place, that's a near site. Another is a far site, that is your disaster recovery far site. And of course, the main place where it is required. So, you have to have 3 sets of everything, not a single set. So given all of this, cloud is something where you can do all of this with a lot of ease. Not only that, this security issue, which is what actually breaks the trust, this is something that you can hand over to experts. You needn't be, of course, your people will be on it and they will keep monitoring, but you needn't be the person that has to scan the globe at all points of times to see what new kind of threat is coming. Okay.
Thank you, ma'am. Thank you, ma'am, for your insights today. And thank you to all of our viewers at the IBA conference from the financial services sector. As each one of you go through your individual digital transformation journeys, we would like to bring such insights to you, and we would like to work with you and support you on your journeys. Thank you. And now back to the moderator.
Thank you.
Thank you so much, madam. Ladies and gentlemen, it's now time to invite our distinguished panelist, our session chair, Shri Ashwini Kumar Tiwari, Managing Director, State Bank of India, Shri Balaji VV, Head Business Technology Group, ICICI Bank, Shri Ramesh Lakshmi Narayanan, Chief Information Officer, HDFC Bank, Shri Girish Bhutani, Executive Director, Sales, BFSI and Emerging Markets SAS, Shri Hitesh Sahajwala, Regional Vice President, Salesforce India, and Ms. Vaishali Kasture, Head of Enterprise Business, Amazon Internet Services Private Limited. This session will be moderated by Shri Ashish Jain, Vice President, Capgemini. Over to you, sir.
Thank you. Thank you very much. And thank you very much, ma'am, Arundhati Bhattacharya. Great foundation to the panel discussion today. I think your view around the scale, volumes, and role of pandemic in expediting our digitization as kind of a, it's there, we know. The also kind of highlighted the, from the cloud perspective, trust, hyper-personalization, role of data, and how do we kind of create right predictions with the data on cloud and create more agility in our ecosystem. I think all great points. What we will do is we would try to explore these points in more detail with our distinguished guests today. Thank you. Welcome everyone to this panel discussion. I'll start with you, Shri Ashwini ji. As we all know, SBI has achieved great strides in cloud adoption. Can you please provide us a view around the evolution of cloud computing within the Indian banking sector through SBI lens? And how do you see the trend changing in the coming time?
Thank you, Ashish. Mr. Bhattacharya really set the tone properly about the cloud adoption. To me, the cloud journey with special reference to banking in India, for a long time, the banks in India did not go the cloud way, uh, largely because of so-called security concerns. I'm not discounting the concerns, they were there. But it was a generically discounted saying that because the data is on the cloud, we can't ensure that the security of their data, and therefore there could be cyber events and so on and so forth, without actually going into too much of detail around it. And I don't totally blame them, because as repositories of PII and the customer data, they are really responsible, and there are not only regulatory but criminal and civil liabilities if data is misused in any significant manner. And this is even prior to this current bill, which is under scrutiny in the parliament as of now. So what that led to is that the banks did not engage in a significant manner for the cloud. Now, why is it that every bank today in the especially last 2-3 years, is talking about cloud and going on to the cloud, etc.? Have these concerns gone away, or these concerns have been addressed to some extent? So like Mr. Bhattacharya said, there are two broad trends which are now forcing the banks to look at this. One, of course, was the pandemic, which was a proximate cause, which actually forced a lot of digitalization. And not only the cloud, but cloud is just a way to handle what is transaction volume. So with the advent of UPI, the transactions volumes had really shot up, and the bank's infrastructure, including networking, including servers, all this infra had come under a lot of strain. And with the result that by force, many of the banks are now forced to look at cloud. This is one reason. The other reason is the kind of changes the banks saw fintechs bring in, the use cases, it is not only UI UX, the kind of insights through analytics which fintechs were able to bring. And the banks found that doing it all on prem, on solutions which are standardized, and being very nimble and agile about it was difficult without actually having a cloud-based kind of a solution. So these are 2 or 3 reasons which force banks to actually look at cloud more seriously. The third thing was the regulatory nudge. So now that the RBI has clarified and stipulated that all cloud servers, regardless, will have to be based out of India, this localization issue is gone. It has to be done. And therefore, with that regulatory nudge, the RBI also expects banks to actually take advantage of the cloud. So how are we in SBI going about this? So we have had a private cloud, which we call Meghdoot, for a long time now. It's 2012 vintage, so almost 9 years. It started as a initiative to look at emerging technologies, because in 2012 cloud in India especially was still a very cutting edge or a emerging technology, not so mainstream. But over the years, this became an infrastructure play first. So therefore, a way through VMware and various other solutions to use all the servers, etc., and the proper deployment of our applications on them. But lately, for the last couple of years, we have hosted very critical applications on this private cloud. UPI is one which we found be difficult to handle on the on-prem infra earlier. And also the check truncation system, the FIGS, which is the financial inclusion initiatives, that solution, because these are high volume solutions. And therefore, to handle those volumes, we brought them onto the private cloud. And currently, we are working to convert this infrastructure as a service, which has been the major use case so far, into a platform-based service, so that we host standardized solutions and applications on it. And then these are made available to people who want to not only host solutions, but also test, also run some of the early stage use cases, and so on and so forth. However, as we do this, we have also tied up with Microsoft, and we use their Office 365 platform. So that clearly is a public cloud, and our SharePoint application, which we use very extensively for our internal notes now, almost the entire administrative office setup is now on SharePoint, so which is massive thing for us because all of us used to kind of sign off on tens of notes every day, and now that is all a digital memory. So in that sense, that's a good leg up which we have got. And the next step clearly is the public cloud. Now, because there are limitations on how much can we enhance our private cloud, and what are the skill sets which we can bring in. So we are looking at this closely, and there are some concerns in our initial meetings which we had. I had expressed some of them, and these are the following. One, of course, continues to be security. So I understand that the security is, we are more comfortable with security because there are standardized solutions which are available. There are standardized certifications which are available. However, one thing which the banks still think about is that while this may be so, the responsibility of keeping customer data safe still is with the banks. So tomorrow something goes wrong, the RBI is not going to ask the service provider, but it is going to ask the banks. And that is still something which the full comfort, 100% comfort probably we have to think about, especially if we look to host the core banking solution or internet banking or any of the crown jewels of the banking where most of the customer data resides. So what has already started happening, especially with some of the private banks and many others, is the fact that the analytical solutions are being hosted on cloud. Some of the test servers are being based on cloud, but the basic transaction continues to be on-prem. So then, so once we have to bring this onto public cloud, then what is the security around it? If we have an instance, how do we get a forensics done in a seamless manner without actually going through a loop where letters or mails follow, and then we are not able to quickly do it because there are pressures from the law enforcement also on these matters. Then the third, of course, is the issue around cost. While we know that it is generally cost effective, but there is some notion that as we increase the volume of transactions, and for SBI we have huge volumes, then it becomes far more costly. And of course, there is the other piece of migration from one cloud to the other. Then if you have a hybrid cloud or if you have a public cloud, and there is some challenge, then do we easily migrate from one cloud to the other, or is it possible for us to bring it back on-prem if necessary? So some of these are hypothetical as of now. They seem like hypothetical. To me, the approach going forward has to be a mix of public, a mix of private, on-prem, and then going forward public as well together. And as we grow more comfortable, as more and more analytics solutions and other solutions are hosted on the public cloud, and they come back to pinch with the data warehouse which resides on-prem, I think the comfort factor will grow, and then it will become more normalized, and the regulator also will become more comfortable, because though they are nudging us, but they are also telling us that please be very careful. And the recent digital rules which came out from RBI in 2012, July of this year, last year, are very stringent. I mean, this is even earlier to this data privatization bill, which clearly lays out even criminal liabilities on leakage of data and misuse of data. So therefore, we are very concerned that we should not be able to, something shouldn't come on banks directly in these matters. And that's why we are playing very safe and very, very cautious. So I think I'll stop here. The future clearly is cloud. There's no question on that. One last point I would like to make is that most of the banks which have had computerization for the last 20 plus years, and all of us in this group are those, have had legacy systems. We call them legacy, and there have been multiple customizations over time. These are not cloud native applications. So for us to say that we bring on a core banking onto the cloud, it's not that easy. We may talk about microservices, we may talk about taking out some parts of it, but those are incremental solutions. The big bang and the big difference will really be when we can confidently port this, convert this to a cloud native application, and ultimately port it maybe on the private first and then on public cloud. But that again is a very, very complicated and complex undertaking, and there will be a lot of handholding, a lot of collaboration needed with the big tech and with the other players in this market to be able to help us to do this. So I'll stop here. I think we'll hear the rest of the panelists and maybe come back on a few points. Thank you.
Thank you, Ashwini-ji. Great insights. I think definitely security is being highlighted by Arundhati and Yosef as well. I think one thing that we definitely need to respond to as to how what's happening around security on cloud. I think we've seen your adoption of the of the cloud through a private cloud, starting with the UPI, and how you're currently looking at a public cloud migration. There are challenges, You're still looking at how do we really look at the key system or core systems to how do we actually get them onto a cloud. That these are some of the things that we still need to respond to from a technology perspective. How do we see that the cloud environment is now secured enough and kind of would facilitate some of these migrations in the coming days? Point taken. Thank you very much. I'll move on to Shri Balaji. Balaji, you've heard Ashwini ji and ICICI being proven itself as a digital bank in India. We also saying that all other banks, there is a skepticism. How do we really look at the core banking into a cloud? So different banks are clearly looking at a concept of hollowing the core and seeing how do we then kind of adopt a cloud strategy. What has been your journey in ICICI, and how banking use cases evolution is happening beyond the traditional ones while looking at cloud adoption?
Thanks, Ms. Ashish. And Mr. Ashwini ji has summed it up very well for most of the banks. I think almost all banks are in the similar journey. Where though bank is a business of trust, that's what Madam Arundhati was also talking about. But the security architecture should be zero trust. So that is where we as banks have been talking about how do we create zero trust architecture, which is going to be replicated with not only valid for the cloud, even for the existing IT architecture. Being zero trust is pretty important, and security being one of the most important problem for all of us, and I would say most important problem to be solved for all of us. So as banks, we are all moving towards zero trust security slowly and steadily. On the second part of your point on legacy modernization, as Mr. Ashwini ji was talking about, legacy modernization is a very, very difficult one. First, we have to get them cloud ready before even getting into cloud native. And hollowing the core is the way we are working on. How do we reduce some of the work the core is doing and take it out into a different plane, different architecture is what we as banks have been working on. As far as ICICI Bank is concerned, we are working on that particular part quite importantly. Some of the work which is being done by the core systems, can it be brought outside that, and whether core can be a little bit hollowed. That point we are working quite greatly. Till then, it will be a two-speed IT work we'll be doing, one with the legacy systems and one with moving to cloud. So as for the third part of your question on the cloud part of it, we are talking about some of the customer engagement layers. We are talking about cloud. We are talking about some of the API and service layers. We are talking about the cloud. We are talking about cloud for some of the automation and intelligent automation kind of area. We're talking about some of the new DevOps. But what we as banks have done is many of our new forays, we would we'll tick the box of that it should be cloud native to start with. Without, by taking the legacy movement over a period of time. That's a very, very long-term journey for all of us, all the banks. How do we move the legacy part of it to cloud slowly and steadily? But many of the layers on top of it, we are moving to the cloud. I'll keep it at that part in the initial part of the discussion.
Thank you, Balaji. Thank you for a great insight. I think I kind of see that zero trust security architecture with zero trust is definitely very critical. I completely agree, because trust is something which is very important towards our customers. I agree with you. I think the hybrid journey, where we look at part of the application, how do we move those applications out from the core so that we could look at the product getting, or innovative products getting rolled out much more faster than the earlier. But there is a section of the servicing which is still being done on the actual legacy. Completely agree. I think cloud native is the way to go forward. Yes, I think that's the right way of looking at how do we look at every new or for kind of a step towards technology advancements or digitization on cloud through cloud native lens. But at the same time, how do we really look at the legacy world and start really, kind of converting it into cloud is something that we would have to do it in parallel. So thank you very much, Balaji. Shri Ramesh Lakshmi Narayanji. So you are HDFC has made a great progression in the digital customer journey, as we all know. We have heard from Shri Ashwini ji and Shri Balaji as to how have been their journey. Is there any difference in what HDF journey has been? And I think we heard about some of the key challenges which Arundhati and everybody cited about the security aspect. Is there any other challenges that you see from your perspective that the banks are facing in adoption to the cloud strategy in today's state? You would need to answer the security anyway, irrespective.
Yeah. No, I think I think largely some of the points that Ashwini and Balaji kind of alluded to, I think they're very relevant. They make sense to the banking industry. As far as HDFC Bank is concerned, I just thought I'll bring a little different perspective because while we've done great strides in digital journey, we've been there at the front line, but we've also had our set of problems. In that sense, about a couple of years back, and we've been going through that. So we decided that we want to relook at this in a very different way, in terms of where we are going, because it's also a good time to introspect. The fact is that some of the points that Balaji and Mr. Ashwini brought out, see, legacy has to be tackled. You can't shy away from it. It's something that I think, at least I truly believe that time has come to correct that problem. You cannot keep pushing it year after year, saying I will try and do some wrapper around. We will all hollow out the core. Everybody is going through that strategy. But I also think the fundamental difference, and I think that's where it will be very interesting to hear the views of other panel members. I think we had also set the development framework alluded to that. You cannot go and again buy solutions from third-party partners and hope it'll all work on the cloud. There is a fundamental disconnect. Cloud architecture and design is very different from what it used to be, and we are not competing with banks. No bank is competing with other bank. I keep saying this. I think a lot of times, it's alluded, okay, this bank is doing, that bank is doing. Look at that fintech guy, with 20 people. He's challenged the bank more than anybody else. So I think fundamentally, this core architecture redesign has to happen. Now, who takes that leadership? Who kind of puts that thing? It's something that had to be done. I think we've clear as bank. In fact, we are very clearly embarking on a journey where we believe some of the artifacts, whether it's mobile, whether it's core banking, we would like to go down the journey of creating them. Okay, that's a very clear statement we have made. We started to move. Yes, it's going to be a tough journey. It's not something that's going to happen overnight. But you have to lay the foundation. You have to have a 2-3 year vision on some of these things, right? It can't happen overnight, but you have to tackle that problem. Just imagine 3 years down the line, if you're still on a legacy platform, and you will see a set of digital banks coming next to you with complete cloud native stack, and the scales that they can get. We've seen what Geo did in the market. It's going to happen, right? So banks can't just sit together and say, we'll just wait and watch. I think time has come to move forward. We at the bank have very clearly taken that stand. We are developing some of these products that I spoke about in a completely cloud native structure. So we've gone back a little further. We have been working with some of the partners out here and kind of designing them together, at the ground level. So it's not just about saying, okay, we'll bring a partner and then try and fit it into the cloud. Bank also took so HDFC also took a very leap of faith. We've gone for the hybrid cloud already. We have our private cloud, but like Mr. Ashwini said, it's got limitations at the end of the day. And try as much, you can put UPI, you can put some of the other thing, but just scaling it up, infinitely is something that's a classic challenge, because the ecosystem doesn't kind of provide. So it's not just your own capability, but the ecosystem also, right? So there, what we have adopted hybrid cloud. In fact, we did some very interesting structuring on the hybrid cloud architecture. We have extended our on-prem data centers to the cloud with all the hyperscalers. In fact, it's a It's a very, not well-known fact, but some of them would tell you in the market that we have built the landing zone concepts. Actually, we call this as landing zones actually, and we've been very clearly kind of, ensuring that the whole ownership. And as far as this, see the primary concept and where this landing zone goes, I just wanted to stay with that. I think one, the security aspect. So the entire ingress, egress, and the entire network management, the security management continues to be with the bank. So no compromises there, whether right from WAF down to all the a line of path into the network is completely continues to be managed by the bank in the way you would like to manage, whether it's security operations center, knock, your SOC. So all of those things continue to be there. Then what we've done interestingly is we've worked on a concept called BYOK, where we're actually extending our own keys, our hardware keys from our on-prem center to actually lock the hybrid cloud. So the question that comes is, okay, what happens if the regulator of another country in which the hyperscalers are part of that structure, if they want the data, you can take the data, but the keys are with the bank, right? So fundamentally, that's the second, and that's a good model, because even across the board, the key is not with the cloud service provider. It's a very, very key part of the design actually. So that's something that we have moved ahead and we have put. Also the agreements, like some of the stuff that we spoke about. I think while localization solved a part of the problem, but right to audit, right to inspect is another critical aspect. And I think very clearly there is now more understanding, and I would say more approachable way of working with some of the hyperscalers. And I think that problem has also got sorted out. So I would say very clearly, if you look at BYOK and right to audit, it kind of moved the hybrid cloud structure into a slightly, I would say, more flexible mode. Of course, the scrutiny is there. I've been personally, the bank has also been working with the regulator too on this concept, and been kind of moving forward. So clearly, these two from a security aspect. Of course, on the scale that again both Balaji and Mr. Ashwini alluded to, the way we are seeing is that you will not be able to do the full transfer. While you do the core banking build up, the mobile build ups, the gateway build ups on new native core technologies, in the interim, you will, as you get new assets, like a lot of them spoke about the strategy of getting the new fintechs into the cloud native architecture. We are hosting them on the hybrid clouds, and we are actually pulling the API gateway as the layer between the legacy and the new structure. So one decision that we have started taking is most of our new applications, like we've gone a little way beyond in terms of some of the core applications also. We started migrating to cloud. Of course, it's a journey that will take time. And I'm not talking about O365 and CRM and all of that stuff. We have actually kind of started putting in the transaction applications actually. May not be core banking, but clearly some of the LOS systems, some of the origination systems that we could put in. So that's something that we started doing. And of course, the whole while this is all good things that I think the right direction we have moved. At the same time, the whole focus around cost management, because like Mr. Ashwini said, it's very fundamental. So I believe, at least we believe, that we need a very different way of managing and evaluating costs. It cannot be the classical way of how on-premise data centers used to work. It is a science. You need to know where your computes are, when your computes are going up, when your computes are going down, how your actual billing cycles are working, how your entire matching of the loads are a load with actual requirements happening. So you need a separate focus, and this means a separate set of analytics professionals. It's not just about having a financial control professional. So that's the second area. That of course the extension beyond that, we're also moving the analytics part. Like I said, one is some of the core components, some of the analytics part, the data lake and all of that. We started making those moves into the cloud. Early days, but clearly again the idea, like someone spoke about, saying you have your own EDW, and then you extend that into the lakes, into the cloud.
Great. Thank you very much, Ramesh. Great insights. I think what I'm seeing is the journey has been very consistent for all the three banks so far. Whether it's really looking at, creating of the standardized and, landing zones where Mr. Ashwini also provided a view about the platform-based services model that they're currently looking at. Importance of SDK on cloud is very critical. I think that's another thing that is now we are looking at. How do we bring the right SDKs for the right development frameworks on cloud? That's important. I completely agree. I think we are also cloud economics is again a view which is coming very consistently from everyone. That yes, how do we really look at the cloud economics? How do we measure the throughput on the cloud on an ongoing basis so that we can control the entire cost instead of seeing the bill at the end of the month? And also we are looking at, yes, our adoption in the cloud is increasing and yes, hybrid is the mantra for now to go forward to unless there is a clear comfort in moving some of the key systems completely on cloud through a cloud native lens. Thank you very much, Sri Rameshi. I think we have now kind of coming to our support system that we have with us, provided by Sri Girish, Hitesh, and Vishali, who kind of are looking at how do we support some of these views from the actual consumer of the cloud technology. So I'll start with you, Girish. Number one, what is the key driver to cloud adoption in the industry, and how does the SaaS aligned to address this technology and business transformation?
Thank you, Ashish. I think a lot of great insights from all the people so far that I've heard. It's very, very encouraging to see that the entire industry is, moving in this direction, Ashish. Let me try and split my response in two parts. One, obviously, what we see as key drivers, and second, what we believe we've been doing in terms of this entire transformation taking place. So you would have heard this from several of the panelists and including Arundhati ma'am. I think we are looking at entities who are clearly looking at resilience and scale. When I talk about resilience and scale, what I mean is that anyone who's looking at great flexibility, but at the very same time looking at adhering to regulatory standards of the country laid down by the law of the land. And of course, you are looking at becoming an entity which is matching with the global standards of deployments. And most of the people have mentioned scale. I completely agree with all the panelists and the view that India is a low ticket value and a high scale value coming in, which means that if you're looking at scaling real fast and at the very same time scaling big, that's the place where I believe adoption is most important. We are a cost sensitive country. And I think there is continuous pressure coming in on CIOs, especially banks, where we are looking at continuously trying to improve the cost of operations and bringing that down. Whether it is the optimization of the IT infrastructure or whether it is related to the application maintenance. I think both go hand in hand, and cloud definitely is a great supporter of this entire thought process. If you're looking at something like this, I think you should be an I would say early adopter towards the cloud. Last but not the least, I would say innovation and collaboration. And when I mention this, I want to clearly articulate that in today's date and age, we are not just looking at succeeding. It's also today with the fintechs coming in, it's a point of actually survival. So more and more new use cases, Ramesh spoke about moving data, analytics, all behind this entire engine to support decisioning. There are loads and loads of cross functional teams and collaboration required. And if you're looking at any of these coming together, which is innovation or collaboration along with the other factors which I just mentioned, then I think cloud adoption is a must-have. And these also inevitably then become the drivers towards the adoption program. In terms of what SaaS has been doing in this space, I mean, you would be aware we've been there for over 4 decades globally and over 2 decades in the country. And given the experience of the cloud transformations that we have been through, not just in banking, financial services, even other industries, the view is clearly that cloud is not just a technology transformation. It's clearly a technology as well as a business transformation. And one needs to understand that the economic value of cloud migration can only be realized unless and until you have a very clear-cut collaborative approach internally and with the support organizations, be it your own customers, your own partners, and so on and so forth. And the way we see it is that it's a combination of 3 things. One, clearly the platform. The platform, a lot of you have already mentioned, a fully cloud native environment. In today's date and age, more important to be a unified platform actually, which can cover the entire data management, the analytics, the reporting, more importantly, the business solutions. I mean, we keep hearing containerizations to happen and so on and so forth. Most important, all these factors come together for your decisioning purpose. So you need a strong platform. Second, being the hosting services. I mean, clearly, what we need is a local cloud environment, which we've been working with in the country with several of our customers, completely secure, of course, and not just cover the SLAs, which are like 99%, which is like a must-have in today's date and age, covering the entire gamut of areas, which is like the infrastructure, your network, your database, and your application. So basically, all these together. And last but not the least, like I said, I mean, it's not just a technology transformation, it's a business transformation. So what one needs to also consider is that, a certain form of a business advisory and a technical advisory coming together to guide this entire deployment and, more importantly, maintenance going forward. So yeah, I mean, this would be probably the approach. And this is what SAS has been working towards in the last several years, working with customers, trying to, move towards a, complete cloud migration program. Yep, thanks.
Thanks a lot, Girish. Completely agree. It is not a technology innovation or transformation, it's a business transformation. And I think we've started looking at every other step on the cloud through a business lens as to what we can really bring a value add to them at the end of the day. Again, completely agree with you that yes, we would have to collaborate very closely with the business in the coming days and see how do we embark this journey for them in the right order for them to really adapt to this cloud strategy in the coming days. Thanks a lot, Girish. Hitesh, I'll go with you next. Again, we have listened to great insights from everyone. I think we have also listened to the great insights from Shri and Arundhati earlier. One of the key things that I'm seeing around the talent view in India is becoming more and more challenging. What exactly is your view around it? And what measures should you or the banks be taking or any other organization be taking to succeed in this talent war?
Excellent. Firstly, good afternoon, everyone. Ashish, I hope I'm audible, and that's the first.
You're audible.
Excellent. I'm sure we all agree that India happens to be the fastest growing market, and this is not alone for Salesforce, but for all of us, whether it's the banks, whether it's our fellow colleagues out here. Now, with this continued shift post the pandemic, working from anywhere and the digital first world, I honestly, and I know every one of us has forgotten where our headquarters are. We all consider our laptops to be the digital headquarters. I think that's very important. And if that is the important thing, the next step becomes for companies to offer support for upskilling and reskilling. Skills are available in the marketplace. I don't think so that's a concern. The matter of concern is upskilling and reskilling. Now, if I give you a little bit of a statistics, what I have from National Skills Development Corporation, the Indian financial services sector will need an additional 1.6 million skilled hands by 2022. Don't hold me responsible, but I think this is, I'm sure all of us will, to a certain extent, agree plus or minus here. I just wanted to, superimpose this with the thought coming from IDC report, which states that 9.3 million Salesforce jobs globally are related. Now, this is related specific to Salesforce. Of that, they expect 1.3 million jobs in India by 2026.
Wow.
This certainly matches it. Now, we at Salesforce have something, how are we trying to fix this problem? And this is a very critical and important. Firstly, I acknowledge this problem statement of talent. I don't think so. We are fully equipped with the capacity today, and that's why we are trying to address this burning issue. We have something called as the online gamified learning platform. I'm not sure everyone has heard about it, but it is there called as Trailhead. And this was launched way back in 2014. The platform breaks down all the barriers to learning, and creates an equal and accessible pathway into the Salesforce ecosystem for anyone with internet connection. Arundhati talked about the scale, and that's why anyone with an internet connection should have it. So starting from admins to developers, marketers to architects, consultants, analysts, sales and service roles, and everything in between. Whatever your background or interest, there's a learning path which is available for you. Now, to accelerate this, Salesforce is also partnering with online learning platforms like Coursera. I'm sure all of us heard about Coursera, Udemy, Skillshare, in allowing people to attain specific skills whenever, wherever, and however they want. My personal experience being in Salesforce since the time of the pandemic, I can say I was born out of the pandemic. I joined it in September of 2020, is that I've seen more than 30% growth in the number of Trailhead badges which have been earned post the pandemic. And these badges are, kind of a gamification mode where we, award our learners when they complete some courses. So that's the kind of growth we are seeing. Also, secondly, Salesforce India has created a skilling program. Internally, we call it the One India Talent. This helps all the students, the unemployed, working professionals, people from diversified backgrounds, to again upskill and cross-sell and increase their chances of getting jobs in the India marketplace, and of course globally as well. We've also accelerated one more dimension by signing up multiple MOUs, and this is very critical for all of us to note here. We've signed up with NASSCOM to skill around 1 lakh of people by 2024. This is part of the Ministry of Skills Development and Entrepreneurship initiative, which was taken up. We've signed up with ICT Academy to have around 2 lakh people trained by 2024. We've signed up with Manipal Education Global Services to build a talent pool for Trailhead certified professionals. We've signed up with Talent Sprint. I'm sure some of you heard it. It's a leading edtech platform and part of the NSE group that focuses on training aspiring college graduates. This is not students, college graduates, to be world-class software developers. And they can be ready to take up jobs on leading IT services consulting firms and carry out Salesforce-specific implementations for their global clientele. In fact, our Salesforce developer course today is in the Future Skill Prime portal of NASSCOM and is accessible to all Indians at no cost. 300 plus colleges, 20,000 students have signed up in 2021 so far to learn the Salesforce developer course. My only thought is that this is not a magic wand. It's a journey, but I think the initiatives have been taken, and I'm sure, in the next few coming years, we should be able to fulfill the capacity gap which is existing today. The other side is we talked about 3 stakeholders in any kind of an engagement. You have your partner, you have the vendor, and you have your customer. What I have seen through my personal experience is that customers, when they're implementing, and this could be Salesforce or any technology, we've been encouraging them to go in for a center of excellence. I'm sure the esteemed panelists definitely have great maturity and understanding of that, but I thought I'll just highlight it again. Now, what this does is specific to Salesforce, we are not a consulting company. And with due respects to all consulting companies, we are not measured on our revenues by timesheets created or the number of man hours we provide in implementation. But we are measured on how adoption goes well. And basis the adoption, we get references to actually scale our business. So this center of excellence is actually not any kind of a license. So don't be worried that there's one more SKU what we are trying to create to sell into the marketplace. This is just a framework where we have key stakeholders from the customer, from our partners and Salesforce coming together where we build that framework and ensure we provide a sort of a seamless kind of an implementation and transfer of hands to our customers and make them more self-reliant. I look at, the classic bike ad we have seen it, you open it, fill it, shut it, and forget it. Very similar thing we want to do. That's the aspiration with, Salesforce. Of course, not to forget Salesforce as a technology, but forget the worries behind the implementation and be more self-reliant. I think I'll take a pause here. That's what my synopsis was.
Thank you, Hitesh. Great insights. Definitely upskilling, reskilling, or I would say kind of developing these resources instead of acquisition of those resources is the key answer for us in the coming days around the talent war. Quickly, Hitesh, more question. And as cloud adoption leaps ahead in the financial sector, what are some of the common myths that you see which needs to be addressed? A quick one, Hitesh.
Sure, Ashish, thanks for that. And I can make it quick because we've already got good insights starting from Arundhati and our esteemed panelists here. Cloud is not secure. I know this is going to be covered more in details with Vaishali as well. But I think the businesses need to understand that data is vulnerable either in the physical or virtual world. I think that's very much given. It's not necessary in that. But the focus should be on, continuous risk identification, prioritization, and mitigation. I think cloud service providers, and we have Amazon out here, secure services, be it IaaS, PaaS, and SaaS platforms, and ensure that the robust security controls are available at all layers, whether you talk about physical network, infrastructure, application data, to protect confidentiality and integrity. But the key message I just want to add incremental out here is the common security framework which we offer. And the lens becomes a one security lens, which is a once, from Salesforce perspective, we have a one Salesforce security team across all the data centers which we have around the globe. We have around 1,400 team members, and I'm sure Amazons of the world will also have equally larger team members. This becomes very critical. And the proof of the pudding, I just want to leave a message out here, is the recent vulnerability all of us face with Apache Log4j. I am sure, most of these service providers, the cloud service providers, through their intelligence sources, got to know of this incidents way in advance. And hence, their incident response and security teams had that advantage to, fix these issues much ahead before it became a public related issue. Our esteemed guests out here are there. I'm sure Ramesh, Mr. Ashwini, and Balaji would agree that this was the latest problem, and we could detect it far more earlier because you have a global lens. It's not a lens sitting on the on-premise, and I'm not doubting the skill sets of on-premise people in each of our esteemed customers. But when you have a global lens, you have a central framework. You're far more faster and skilled up to get to that perspective of the problem statement. I'll pause in the interest of time.
Thank you very much. Thank you very much, Hitesh. Hi, Vaishali. Great saving the code to the last. So we have heard our users kind of providing us deep insights as to what their journey has been. I think we have heard with majority of our banking community about one thing, which is security. I think they are saying that yes, they have a view that the cloud is getting more secured, but there is still skepticism as to how we can prove them that it could be more secure for their core banking or kind of a legacy modernization in the coming days. So your views, please. How can we make it more secured from their perspective?
Yeah, thank you, Ashish. And I will try and keep this brief. I know the panel is running late. First of all, many of the organizations on this panel today or their subsidiaries are in some way, using AWS. So first of all, thank you for the trust that you've put in AWS in whatever small way you have started, or some organizations which are all in. I'll just take a brief stab at answering your question, Ashish. And here I feel there are, you've got Balaji, you've got Ramesh, Mr. Tiwari, Arundhati Bhattacharya, all of them understand this business perhaps better than I do because they've been on this journey far longer than I've been at AWS. But I'll tell you our mental model and how we look at it. So for us, very much, I think like our chairman, our CEO says, Andy Jassy says that security is still very much job zero for AWS. We continue to invest billions in making sure that our solutions, that our platform is safe and secure. We don't take our customers for granted even for a single day. And we understand that moving to the cloud, when organizations are moving to the cloud, security is of paramount importance to organizations, particularly in financial services. Having said that, I think over the last 15 years, and yes, AWS as a cloud provider is turned 15 years old, this year. We will continue to work with global banking customers, regulated industries, not just banks, financial services, securities, pharma, to put mission critical workloads on the cloud. And there are several tools that we use, but just a couple of things I would like to share at a very, very high level is that when you talk about data breaches and data going out of the cloud, I think by default, I must assure the panelists that by default, our S3 buckets, and I think there's been a lot of conversation around our storage capabilities, that by default, S3 is secure. You can configure it to give access to an application builder, but by default, when you build, S3 is secure. We also have tools such as Amazon Macie, MACIE, which uses AI and ML to detect if there is any PII data that has been left exposed. So we don't just rely on good intentions, but we can deploy tools to say, what is the nature of data that you're putting on the cloud? How secure is it? Is it PII data? ML tools can detect if any buckets have been left, unsecure. And we constantly work with regulators. It is a core part of our jobs to work with regulators in banking, capital markets, payments, to ensure that if there are any regulations that are coming out, that we as cloud providers, as AWS, are compliant, whether it's, the PCI DSS for payments cards, whether it's FedRAMP, GDPR. So we take regulations and regulators and everything that they tell us very seriously, because like Mr. Ashwini started off the conversation, that I may be able to outsource and put things on the cloud, but if there is a breach, then it is still very much the bank which will have to talk to the regulators and take responsibility. So let me sort of pause there. I had another take on cost as well, but that was on security.
Sure. Let's continue with the cost economics part as well, Vishali. I think that's one of the another question. And then we can also kind of look at how do we exit a cloud.
Yes.
There is another kind of a myth that once we get on the cloud, it's very difficult to exit.
Sure. So I'll just quickly take your question, on cost. Again, a question that comes up all the time, that how do you manage cost on the cloud? You start off with security. The second most important factor in mind is the cost. So again, when you're moving to the cloud, typically you tend to size your infra on baseline usage, scale up as you need when you're on-prem. And here I'm preaching to the converted and the experts, but you would take 3 to 5 years peak sizing of your data and then plan accordingly. But when you move to the cloud, you have the ability to scale up and down. The one significant part that I do want to put in front of the panel is that because we have the economies of scale, and we've been in this business for 15 years, you have the option to be on public pricing, or then if you know what your spend is going to be, you can technically optimize, you can commercially optimize. But we as AWS have given 111 price reductions since the inception 15 years ago. So it is a very important part of our tenet to be able to scale and then pass on those reductions like a flywheel to our customers year on year. So first of all, we have, you can do your sizing, but there are several tools available at the click of a button on the AWS console. We have something called a trusted advisor. It gives you recommendations on best practices. We have Cost Explorer, easy to use interface. You can visualize, understand, and manage your cost literally on a daily basis. We have AWS budgets. We have anomaly detection to see that is there a spike in a certain workload? What is causing the spike? And we can literally give you on-click, on-demand sort of insights. The other part, which is I think is a unique differentiator for AWS, we have a cloud economics team and we have a technical architect, technical advisory manager whose day job is to come in and figure out how do we reduce the spend of our customers every day. Me as an enterprise leader, one of my goals is to measure cost optimization and how optimized our customers are, whether it's through technical optimization. For example, we launched ARM-based Graviton 2 processors. It gave customers reduction of 40% on their price, and I am measured as a goal on whether my customers are adopting Graviton to drop their AWS bills. So I think let me sort of pause there that, combination of technical and commercial as well as public pricing, converting to private pricing, there are various mechanisms and there are people at AWS whose day job it is to ensure that our customers are optimized on their spend.
I completely agree. I think I've also seen the cloud value framework and how do we kind of utilize that in kind of a controlling the price or kind of a reduction of the price as well. So I think great insights from everyone. One last question, Vishali, around the how do we exit the cloud? Can we exit the cloud or we are logged in forever?
Yeah, again, our mental model around customers is, working backwards from what the customers really need, right? And not to lock in customers into a licensing regime. We don't have any legacy software or to take to market or any such product. We encourage open source. We regularly provide feedback for improvements. And even, for example, Aurora database managed versions, we can help customers migrate out if the need comes, right? So I think we have various mechanisms to help customers migrate, the same mechanisms that we use to migrate into AWS cloud, we have similar mechanisms to migrate out. Plus, we never force our customers to adopt private pricing. We are available on public pricing. You don't need to get into contracts unless you know that you are going to be using AWS, you know what your usage is, you know what your spend is, you want to take advantage. That's the only time we tell customers enter a 3-year, 5-year contract. We also have the ability to take as minimum as a 1-year sort of a reserved instance or saving plan. So idea is to give customers complete flexibility, and if the need be, we can even help you to migrate off. We have the mechanisms to do so.
So Ashish, on that point, just wanted to come in. I think it's also a responsibility of the bank's design and architects to see how do they design. Cloud is all about design, at the end of the day. That's why I made that point. It's very easy if you just go with one provider and take the, native services, then it will be difficult to exit. I think it's something that banks have to think. You can't let the cloud service provider, they will obviously do their job. And that's something that we are, that's why I said the bank has to have a good design understanding. You can't just build something, that services that is very, very, localized to a service provider, then you will be stuck. So I just want to make that point because it's one of the principal foundations that bankers have to kind of, techno bankers have to understand.
No, completely agree with you on that, Ramesh. I think the key thing is how do we work together to ensure that you don't get logged in from day one with respect to the design. Yes, that's the intent. The yes is how do we facilitate you, but at the same time not lock you. Key thing. Thank you very much, esteemed panelists. Great insights and great view from everyone. I think just a kind of a closing view from my side. What does a future bank look like? Customer would expect the banking to be very easy, so it almost becomes invisible. Banking is nothing but connections. How do we connect with the customer at the right time, using the right channel, with the right advice, supporting their life events, whether big or small. Hyper-personalization we heard from everyone. I think that's a key thing for us. We have heard from our esteemed panelists around how the cloud can help in achieving more through these 6 themes: orchestrating an open ecosystem, becoming an intelligent bank, driving customer centricity, enhancing go-to-market agility, ensuring business resilience, and providing required compliance to regulations and security. It looks like definitely there is a path for us to move forward as to adoption of the cloud strategy in India, but it definitely has a huge role to play in the banking industry as such. Thank you very much again to all our panelists for the great insights and the great views. Thanks again.
Thanks, everyone.
Thank you. Thank you, everyone.
Thank you so much.
Thank you, distinguished panelists, for the insightful discussions and sharing your perspective. Dear delegates, this brings us to the end of our panel discussions of the pre-lunch session. I thank all our esteemed panelists for their inputs, for sharing their perspectives on various topics, and for their wholehearted support. Also, a word of gratitude to Capgemini, our knowledge partner, for their constant support, inputs, and guidance in shaping up this program. Special thanks goes out to our sponsors for supporting this event. Our awards partner, IBM, premium partner, SAS, Salesforce, and Amazon Web Services, platinum partner, Swift, memento partner, Canara Bank, conference partner, UiPath, and associate partner, National E-Governance Services Limited. Once again, a big thank you for your support. Before we break for lunch, I would like to inform our delegates that we have an expo showcasing some of the finest technologies and products. So requesting you to make time and visit the expo. You can click on the exhibition hall icon on the landing page to visit the expo. Thank you very much, ladies and gentlemen, and see you at 3 p.m. for the post-lunch session, beginning with the CEO panel. Meanwhile, please stay connected.
Thank you very much.
Thank you.
Thank you.
The pace of change is unprecedented in the financial services industry. Higher stakes are pushing institutions to streamline operations, lower costs, and accelerate innovation. Cloud is now a critical component of new business models. Financial institutions are no longer debating whether to embrace the cloud, but how quickly. No matter where you are in your digital transformation, Amazon Web Services can help sharpen your competitive edge.
The foundational work, putting the security and the control frameworks, the risk models in place in order to deploy cloud, critically important. The real value that our customers are getting are being able to modernize their legacy systems, being able to anticipate change within the businesses, and being able to develop and drive new opportunities for these businesses.
What if your organization could reduce the cost of ownership, automate manual processes, and eliminate data silos? AWS helps you modernize legacy infrastructure securely and cost-effectively.
We migrated over 200 applications in about a 12-month period. And because of this, on November 5th, we were able to do something that not many companies, if any, in our industry has been able to do. We shut down our last and owned operated data center on November 5th. Lights out.
AWS can help you meet rapidly changing consumer expectations with multi-channel solutions that deliver personalized offers in real time. Drive business growth by building and scaling new solutions faster and at lower cost.
We believe very strongly in the power of speed and momentum for our customers, and AWS has really helped us to do this. So over the last year, for example, we've gone from releasing software maybe once a month to releasing software every week.
Financial institutions have all the tools and resources they need to create a compliant and secure environment on AWS.
If you look at Discover, our North Star is really our customer, making sure that we're doing the right thing by our customers. And the regulatory requirements, our compliance requirements all help us achieve that goal. But how quickly we get there starts to become a differentiator. And it's where the partnership between Discover and AWS has been really powerful.
More and more organizations are moving to cloud first. If you want to build something and you want to build something on AWS in the cloud, go ahead, because we have our guardrails in place, we have our policies, we have our procedures, we have our frameworks for compliance and governance. Go do it. Go build as quickly as you can.
Join the ranks of leaders who have chosen AWS and are already shaping the future of financial services.
My goal is for Goldman Sachs to lead the way in building financial services technology. And we're going to succeed in no small part during the work we have done and will continue to do with Amazon Web Services. Still, our job will remain the same: to assume the burden of complexity and make finances easy, intuitive, and as effective as possible. We want to enable you to focus on building things that we couldn't dream of, things that change the way the world works for the better.
AWS is how. Learn more at aws.com/financial-services.
सपनों को मिले उड़ाने नहीं, अपने घर में खिले मुस्काने कहीं। Canara Home Loan, Canara Bank, together we can.
खाते में पैसों की कर फिकर,
तेरे खातों पे है चोरों की नजर,
मत भटक इधर उधर,
जा रहे हो तुम किधर?
सुनो ध्यान से सिस्टर और ब्रदर, हाय
करो ना तुम करो ना अगर मगर,
कैनरा बैंक के संग,
कैनरा के संग
सुरक्षा पर
अजय अमर अमर अमर।
CVV, OTP और पिन की बात हो तो
कान तुम खड़े करो ये सब किसी को,
देना नहीं लिखना नहीं, देना नहीं लिखना नहीं, नहीं देना नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना नहीं देना,
पर्सनल इन्फॉर्मेशन नहीं देना।
और कोई अपने बैंक बैलेंस, आधार कार्ड और पिन पूछेगा तो याद रखिएगा,
नहीं देना नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना नहीं देना, पर्सनल इंफॉर्मेशन नहीं देना।
हाँ, एक और बात हम आपको बता दें, हमारा बैंक ये सब इंफॉर्मेशन आपसे कभी नहीं पूछेगा, इसलिए कोई गुमनाम फोन आए तो
नहीं देना नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना नहीं देना, नहीं देना।
झूठे ईमेल के झांसे में
फर्जी साइटों पे
जाना नहीं,
गलती से भी अनजाने लिंक पर क्लिक तुम करना नहीं,
अरे भैया नकली साइट के चक्कर में बड़े बड़े फंस गए।
नहीं देना नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना नहीं देना,
पर्सनल इन्फॉर्मेशन नहीं देना।
सुनो ध्यान से सिस्टर और ब्रदर, हाय रहो चैन से ओ कुशल, कैनरा बैंक के संग, कैनरा बैंक के संग, सुरक्षा पर
अजय अमर अमर अमर।
Customers want decisions fast. You need them to be accurate. Delivering both requires reliable, timely insights. At a time when disruption is high, the future is unpredictable, and everything is digital, organizations must make real-time risk decisions to approve loans in an instant. Otherwise, customers won't just be frustrated, they'll take their business elsewhere. It's time we reimagine how we make decisions. Welcome to redefined risk modeling and decision-making for a digital era. Taking loan requests from application to approved automatically without increasing risk to create a world-class customer experience. How do we do it? A comprehensive decisioning platform that supports the full analytics lifecycle, from data preparation to model development, validation, deployment, decisioning, and monitoring. Create open, explainable models in a well-managed and controlled environment using AI and machine learning. The result is your workflow gets simpler. You make faster decisions with better data, and rest easier knowing governance and stability are ensured. For you, SaaS works behind the scenes to make the decision process faster with less risk. For your customer, fast, efficient, right, with less risk in every moment.
Sending a package across the world, keeping track of your taxi or your delivery. These days, it's so easy. So why are international payments still such a hassle? Time to make a change with Swift GPI. Finally, you can track and trace your international payments right where you need it, even if you're working with multiple banks. You can check their status, where they're being processed, and what fees you paid. And it's all fully integrated with your treasury and cash management systems. Because Swift GPI for Corporates uses the standard FIN and ISO formats with a true multi-bank experience. Here's how Swift GPI works. When a bank signs up, they commit to help transform the cross-border payment experience. And that means 4 things. 1. Payments completed within the same day. No more unexpected delays. 2. A unique tracking number for each payment. One you generate yourself to track and trace every step of the way. 3. Transparent deducts and currency conversions. Understand all the charges in the transaction. No more mystery fees. 4. Unaltered remittance data. All the info you send will be received, guaranteed. 4 clear promises, with impressive results. Ready to start using Swift GPI? Ask your bank and your treasury provider.
The pace of change is unprecedented in the financial services industry. Higher stakes are pushing institutions to streamline operations, lower costs, and accelerate innovation. Cloud is now a critical component of new business models. Financial institutions are no longer debating whether to embrace the cloud, but how quickly. No matter where you are in your digital transformation, Amazon Web Services can help sharpen your competitive edge.
The foundational work, putting the security and the control frameworks, the risk models in place in order to deploy cloud, critically important. The real value that our customers are getting are being able to modernize their legacy systems, being able to anticipate change within the businesses, and being able to develop and drive new opportunities for these businesses.
What if your organization could reduce the cost of ownership, automate manual processes, and eliminate data silos? AWS helps you modernize legacy infrastructure securely and cost-effectively.
We migrated over 200 applications in about a 12-month period. And because of this, on November 5th, we were able to do something that not many companies, if any, in our industry has been able to do. We shut down our last and owned operated data center on November 5th. Lights out.
AWS can help you meet rapidly changing consumer expectations with multi-channel solutions that deliver personalized offers in real time. Drive business growth by building and scaling new solutions faster and at lower cost.
We believe very strongly in the power of speed and momentum for our customers, and AWS has really helped us to do this. So over the last year, for example, we've gone from releasing software maybe once a month to releasing software every week.
Financial institutions have all the tools and resources they need to create a compliant and secure environment on AWS.
If you look at Discover, our North Star is really our customer, making sure that we're doing the right thing by our customers. And the regulatory requirements, our compliance requirements all help us achieve that goal. But how quickly we get there starts to become a differentiator. And that's where the partnership between Discover and AWS has been really powerful.
More and more organizations are moving to cloud first. If you want to build something and you want to build something on AWS in the cloud, go ahead, because we have our guardrails in place, we have our policies, we have our procedures, we have our frameworks for compliance and governance. Go do it. Go build as quickly as you can.
Join the ranks of leaders who have chosen AWS and are already shaping the future of financial services.
My goal is for Goldman Sachs to lead the way in building financial services technology. And we're going to succeed in no small part during the work we have done and will continue to do with Amazon Web Services. Still, our job will remain the same: to assume the burden of complexity and make finance as easy, intuitive, and as effective as possible. We want to enable you to focus on building things that we couldn't dream of, things that change the way the world works for the better.
AWS is how. Learn more at aws.com/financial-services.
सपनों को मिले उड़ाने नहीं, अपने घर में खिले मुस्काने कहीं.
Canara Home Loan, Canara Bank. Together we can.
खाते में पैसों की कर फिकर,
तेरे खातों पे है चोरों की नजर.
मत भटक इधर उधर,
जा रहे हो तुम किधर?
सुनो ध्यान से सिस्टर और ब्रदर. हाय
करो ना तुम, करो ना अगर मगर.
कैनरा बैंक के संग,
कैनरा बैंक के संग
सुरक्षा पथ
अजय अमर अमर अमर.
नहीं देना, नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना, नहीं देना, पर्सनल इंफॉर्मेशन नहीं देना. सीपीपी, ओटीपी और पिन की बात हो तो
कान तुम खड़े करो, ये सब किसी को
देना नहीं, लिखना नहीं, देना नहीं, लिखना नहीं, नहीं देना, नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना, नहीं देना, पर्सनल इंफॉर्मेशन नहीं देना.
और कोई अपने बैंक बैलेंस, आधार कार्ड और पिन पूछेगा तो याद रखिएगा,
नहीं देना, नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना, नहीं देना, पर्सनल इंफॉर्मेशन नहीं देना.
हाँ, एक और बात हम आपको बता दें, हमारा बैंक ये सब इंफॉर्मेशन आपसे कभी नहीं पूछेगा. इसलिए कोई गुमनाम फोन आए तो
नहीं देना, नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना, नहीं देना, नहीं देना.
छूटे ईमेल के जासे में
फर्जी साइटों पे
जाना नहीं.
गलती से भी अनजाने लिंक पर क्लिक तुम करना नहीं.
अरे भैया नकली साइट के चक्कर में बड़े बड़े फंस गए.
नहीं देना, नहीं देना, इंफॉर्मेशन नहीं देना, नहीं देना, नहीं देना, पर्सनल इंफॉर्मेशन नहीं देना. सुनो ध्यान से सिस्टर और ब्रदर. हाय रहो चैन से और कुशल. कैनरा बैंक के संग, कैनरा बैंक के संग, सुरक्षा पथ अजय अमर अमर अमर.
Customers want decisions fast. You need them to be accurate. Delivering both requires reliable, timely insights. At a time when disruption is high, the future is unpredictable, and everything is digital. Organizations must make real-time risk decisions to approve loans in an instant. Otherwise, customers won't just be frustrated, they'll take their business elsewhere. It's time we reimagine how we make decisions. Welcome to redefined risk modeling and decision-making for a digital era. taking loan requests from application to approved automatically without increasing risk, to create a world-class customer experience. How do we do it? A comprehensive decisioning platform that supports the full analytics lifecycle, from data preparation to model development, validation, deployment, decisioning, and monitoring. Create open, explainable models in a well-managed and controlled environment using AI and machine learning. The result is your workflow gets simpler. You make faster decisions with better data and rest easier knowing governance and auditability are ensured. For you, SaaS works behind the scenes to make the decision process faster with less risk. For your customer, the loan application is seamless, fast, and efficient. Make the right decision with less risk in every moment.
Sending a package across the world, keeping track of your taxi or your delivery. These days, it's so easy. So why are international payments still such a hassle? Time to make a change with Swift GPI. Finally, you can track and trace your international payments right where you need it, even if you're working with multiple banks. You can check their status, where they're being processed, and what fees you paid. And it's all fully integrated with your treasury and cash management systems. Because Swift GPI for Corporates uses the standard FIN and ISO formats with a true multi-bank experience. Here's how Swift GPI works. When a bank signs up, they commit to help transform the cross-border payment experience. And that means 4 things. 1. Payments completed within the same day. No more unexpected delays. 2. A unique tracking number for each payment. One you generate yourself to track and trace every step of the way. 3. Transparent deducts and currency conversions. Understand all the charges in the transaction. No more mystery fees. 4. Unaltered remittance data. All the info you send will be received, guaranteed. 4 clear promises, with impressive results. Ready to start using Swift GPI? Ask your bank and your treasury provider.
The pace of
Welcome back, ladies and gentlemen. I hope you all had a great experience visiting the expo and are all looking forward and eagerly waiting to hear our illustrious speakers at the CEO panel on the topic Changing Banking Business Models, Role of Technology and Big Techs. A brief synopsis on the topic for discussion. This intermediation has been a reality for banks for some time now, with the emergence of fintech in the last 5 years. It has been further accelerated with big techs pursuing a well-worn strategy of broadening their activities in finance, starting from payments and extending to provision of credit, insurance, savings, and investment products. As banks look at the next round of growth, they would need to examine their business modules and explore unconventional partnership in different product categories to remain relevant and a preferred choice of customers. Ladies and gentlemen, it's now my privilege to invite the following dignitaries for the panel discussion. Shri A.K. Goyal, Chairman, Indian Banks Association and Managing Director and CEO, Punjab National Bank. Shri Dinesh Kumar Khara, Chairman, State Bank of India. Shri Mahabaleshwara, Managing Director and Chief Executive Officer, Karnataka Bank. Shri Hitendra Dave, Chief Executive Officer, HSBC India. And Shri Kiran Shetty, Chief Executive Officer, SWIFT India. This session will be moderated by Shri Ian Campus, Executive President, Cape Gemini. I now request Shri Ian to initiate the panel discussions. Over to you, sir.
The famous unmute yourself bit caught me there. But good afternoon, everybody, and thank you for joining. And I hope you've had a great session so far. From the looks of it, it has been a very productive day and a day full of learning. I'm glad and honored and privileged to be part of this panel and have the honor to moderate it. As I was saying earlier, the gentlemen over here have probably forgotten more about the world of banking than most will learn in their career. So we certainly have a lot to learn and benefit from their perspectives. We've talked a lot about disintermediation, the role of technology, the role of big tech, but you can broaden that to say the role of any disruptors in the banking sector. And truly, I think as a lot of our research has led us to believe, it's really a game of essentially, do the disruptors achieve scale before banks like yourselves learn to innovate and essentially beat them at that game. So I think it's a great place for us to start and to understand. And I will open it up with a question to each of you on different aspects of this topic. Hopefully we can have about 5 to 7 minutes from yourselves, and then certainly we build on each other's questions, perspectives. Feel free to make this as interactive as we can get. So with that, let me start with you, Mr. Goyal. Indian banking has seen disintermediation for a while, right? And this has been further accelerated with, I'd say, the big techs coming into play. And in many cases, not just providing technology that allows them to scale or run more efficient and effective operations, but in many ways set the standard for customer experience for the broader customer segment. With the fintechs, whether they are like a Paytm, Razorpay, Lending Cart, or even PayPal, Amazon, and others, what do you see as their impact on the Indian banking industry? What do you learn from them? Where do you think they can learn from you? And overall, What's your perspective of their role in the broader banking sector, so to speak? So I think you're on mute. You may need to unmute yourself.
Still on mute.
Okay, you're still on mute, sir. Could the host unmute everybody, please?
So they need to unmute themselves.
All right.
So you can try to log out and log in once.
Okay, perhaps while we figure out the technical issue on that end, maybe Mr. Mahabaleshwar, if I can, you were to build on that question, so maybe we'll start with that question and have Mr. Grover.
Yeah.
So thank you. Again,
yes,
so back to the point, the fintechs having an impact on the banking business in India. How do you think banks can learn from them? What steps have you taken? And as I understand, Karnataka Bank has been quite an early adopter of technology. And in your journey, what are the next steps for you to be able to effectively compete with the fintech, so to speak?
Yeah, first of all, I should admit, Mr. Ian, that it has been a great learning experience for we bankers. And I'm also very happy to note that this year's IBA'S Technology Conference coincides with RBI's Financial Literacy Week, which is being observed from today, that is 14th of February to 18th of February 2022. And very interesting, the main theme of that particular Financial Literacy Week is Go Digital and Go Secure. These are the major themes. And the focus areas are, of course, convenience of digital transaction, security of digital transaction, and protection to the customers. I'm sure the said initiative of the RBI provides a perfect background for this technology conclave of banking sector under the aegis of IBA. Yes, having said that, you all agree with me that evolution and learning has been the hallmark of Indian banking sector throughout. Today morning also, in the inaugural session, Mr. Sanai, the Secretary of MITI, has also highlighted on the CBS introduction in the banking sector. We are all in the midst of a technology-driven era, and I consider CBS as the first step of forging partnerships, wherein banks partnered with a technology company for their core banking solution. I am very happy to share that here, my bank has been one of the pioneers in embracing CBS way back in 1999 itself, that is about 22 years back. Hence, I firmly believe that it is not the size, but the right mindset that drives an organization for the technology-related changes. And I consider that as the huge plus point of the Indian banking sector. So today we have all the banks running on the CBS platform. You all know that after this CBS, next came the Wave 2.0, wherein banks rolled out various alternate delivery channels, ADCs, which was then followed by wave 3, that is UPI and credit underwriting on digital platforms. In all these changes, the tech companies, fintechs, and the startups, they played a very, very pivotal role. Here I mentioned that my bank's success story in digital underwriting. And this digital underwriting is driven by agile way of developing digital products, automated credit underwriting powered by various gating criteria, business rule engines, etc. We did not just confine it to personal loans, but gradually expanded by gaining experience to other loans, retail loans especially, like car loans, home loans, MSME loans, etc. We are now focusing on collection and recovery management, and our aim is to have end-to-end digital solution for all the identified products and eventually to emerge as the digital bank of future. Here, what I am emphasizing is that it is not just the partnerships, but the right partnership and a strong internal team and the complete support of the board to messengers. That is what is very crucial for the success and sustainability of such technology-driven initiatives. It is also a fact that initially technology disruptions looked like challenge for many banks. But going forward, as I have already mentioned, with their ability to learn, banks treated it as an opportunity and started forging CCPs, that is cooperation, collaboration, and partnerships. Hence, it is business transformation through technology with taking in confidence the entire ecosystem. Accordingly, of course, the business models have also evolved, and now the fintechs have become our natural partners, and the agile way of developing the banking products and its delivery has become a new norm. Hence, I consider it as a natural process of evolution driven by the twin engines of technology and necessities. Of course, with this background, all the bankers are now unanimous in their opinion that the future changes or the disruptions are going to be driven by data. That is, we all know that data as asset. That is where the big techs, FONG, that is Facebook, Apple, Amazon, Netflix, and Google, etc., they have a very big role to play. They are powered by technology, they are driven by innovations, and have unimaginable influence, especially in the developing countries like India. Big techs are poised to play a transformational role in financial inclusion, rural penetration, etc. Hence, if a sustainable partnership is forged, banks can have the advantages of access, convenience, scale, speed, and the cost. Hence, I presume that this will be a win-win situation for all the players. That is my initial observations.
Well, thank you for that. If I were to summarize it, I like a few things you said. It's a mindset. It's a natural evolution. It's it's going digital. It's going secure, and the big techs are certainly big drivers of change in the way we do things, particularly around data. Mr. Goel, sir, you're back now. I hope we can hear you.
Yeah. Thank you. Am I audible now? Yeah.
Yes, you're absolutely clear now.
Yeah. Thank you very much. There was some technical issue. Yeah. In my view, what was your question also? The bank is undergoing a transformation from being the physical branches to use of the technology, big data, definitely with the support of the highly specialized human capital. So there is a need of the human capital also, not only, it is a basically mix. Even before this transformation, if you see, banks and the intermediaries, they are coming together also before this transformation also, because as per the market need also. If you see the globally banks are facing the competition also with these intermediaries, because they are providing a lot of service which is related to the banking. It may be the payment, it may be the insurance advisory, it may be the any type of other insurance also. So in India also, if you see, India is also facing the competition with these intermediaries because they are also providing so much of the service which is related to the banking services. Similarly, either it is a payment system, either it is a digital lending also, either it is a insurance advisory, either it is a P2P lending, either it is a crowdfunding or trade finance also. But if you see, in my personal view, ki collaboration with this fintech company is the best solution. And we should not think it is a competition of the bank with this intermediary, because they are creating innovation, they are creating new idea which is as per the customer convenience. Even if we desire to innovate or create that idea, it will be a costly also. So they are reducing the cost the moment they, and most important, customer doesn't have that confidence with this intermediary which they are having with the banks. So it is a very good collaboration between the fintech companies also. And after making the collaboration of the bank with this fintech, so there will be a cost reduction also, customer convenience also, and the confidence of the customer which they are not feeling. As I told you, they don't have the confidence in this intermediary, that will be increased substantially. So it is a win-win situation. It is a win-win situation for the bank, for the fintech company, as well as the customer. And if you ask my bank also, we have made lot of collaboration with the fintech company, whether it is a GST verification, whether it is a PAN verification, even is a digital lending also. Because if I will create that ecosystem out of my own, it will be a very costly affair also, because I have to make investment in a huge money of the investment. But when we are taking this product from them, so it is a basically transaction based. So, so in my initial remark, we should not think it is a competition between the bank and the fintech company or the intermediary. It is a very a collaboration between of both, and by using the collaboration, we can save the cost also, and it will improve the customer convenience also. This is my initial remark on your question. Yeah.
No, thank you for that. I mean, so some very common themes that you can brought to the fore, particularly around the whole convenience, the security, and the cost of innovation. So going back to what I initially said, do the disruptors learn to scale before you learn to innovate? But I think your perspective really is that it's not us versus them, it's together. And we certainly feel that innovation is definitely needed. They may not necessarily have the same brand, and particularly in India, and relationship as the banks do, but they certainly do reduce the cost of innovation, and together that's much more impactful and certainly good for the industry. So maybe if I will take those themes and come to you, Mr. Kara. You run one of the largest banks in the world. You certainly, in terms of number of locations, the disparate businesses that you have, and what you serve, right? What I wanted to get from you is, and your model has, is been, you certainly have the scale, and you certainly have the history and the heritage. But the question I have for you is, does that model really need to change in this world where you've got the fintechs and the big techs, certainly coming to the fore and having an impact? So two parts of that is, does your model really have to change, or how does a bank like yourself with such rich heritage history also become nimble enough to compete, collaborate, and really make a difference for what is ultimately the customer of the bank?
Thank you very much. Very interesting question. Well, of course, for a bank of our size and the kind of clientele we serve, the option whether default digital is a default option. Well, of course, as I look at it, perhaps we have to live in both the worlds, both the physical as well as digital. The physical is a reality for us as compared to digital or physical. Having said that, I must also acknowledge the fact that the kind of digital temperament which is seen across the country, irrespective of whether people are native of rural, urban, semi-urban space, that is quite phenomenal. And the kind of adoption of the mobile phone which has taken place in the country is also one of the major reasons for the adoption of the mobile banking across the country. We as a bank, we are serving almost about 460 million customers. And out of that 460 million customers, almost about 130 million customers are the one who are in the Jan Dhan category, which means they are having an experience of the digital banking when they are getting their DBT. So it is a situation where digital is something which is not beyond them. They are already experiencing the benefit of the digital banking. Having said that, I also must acknowledge the fact that there are still a very large number of customers who would like to visit the branches and would like to consume the services. But nevertheless, as a lender and as a banker, we have to have the customer-centric strategy in mind. And that customer-centric strategy in mind is essentially to cater to the flavor of the customer, whether they would like to consume the service through the digital mode or they would like to consume the services in physical mode. So that's the broad theme on which we all work. But yes, of course, we have invested well in terms of the digital capabilities of the bank. We would say that we are in the process of significantly enhancing our digital capabilities. Already, the YONO, which became quite popular across the country, has got almost about 10% of our customer base has already got registered themselves on YONO. And with the help of YONO, we have been in a position to underwrite almost about 40,000 crore worth of business in this financial year. So, which is end-to-end digital, which is a seamless experience, only touch of few buttons, just 4 clicks, and the money can be credited to the account. That is one very major functionality which we have put in place. The other factor which we have put in place is making it possible to have the video KYC accounts getting opened through the digital medium, and almost about 30,000 odd such accounts are getting opened on a daily basis as far as State Bank of India is concerned, with the help of the digital medium itself. We made the life simpler for many when we introduced YONO Cash, which was actually a cardless transaction platform, and which almost about 100,000 odd hits are there on a daily basis as far as our YONO Cash is concerned. So that actually speaks about the adoption of the digital across the banking space. And also when I talk about the adoption of the digital tools, the ecosystem which has got created over the years for making it possible is also worth commending. And all that has come with the help of the big techs. So it's essentially a collaborative approach between the technology providers and also an attempt on the part of the bank how to really make it a customer-centric proposition when it comes to offering transaction services, when it comes to offering opening of accounts, when it comes to offering the pre-approved loans. Recently, we introduced one variant of our product which is only offered through the digital, which is a pre-approved two-wheeler loan. And you will probably know that a very significant part of the two-wheeler market is essentially in the tier 2 and tier 3 cities. So we are very mindful of the fact of the adoption of the digital across the country and the way the e-commerce has got developed. So that has given us a further confidence that this is the target customers whom we can reach out. YONO Krishi is also one of our new initiative wherein we are in a position to offer the renewal of our KCC loan with the help of few clicks. We are in a position to offer even the gold loans also with the help of YONO Krishi. It is not fully digital, but it is a largely digital offering which we have put in place. And of course, when it comes to various utility bill payment, etc. So all that has been put in place by us, and we very firmly believe that we are there to consume the solutions being offered by the big tech and the fintech or the tech fins, and we'll be more than happy to consume their solutions and see to it that how best we can create value for our customer segment. And we would be much ahead in terms of, we would try to be much ahead in terms of adoption of the digital and promotion of digital, including promotion of the financial literacy and the digital literacy across the country. Thank you.
Thank you very much for that note. Very, very thoughtful, very insightful. Certainly, you're doing a lot, and I think given the size and complexity of digital is a fact and a way of life. What I'm hearing from all three of you so far is, it's a very Indian. It's not an either or. It's an and, to the benefit of our customers and creation of value for them. I think that is unique and certainly heartening to hear. Maybe moving on from that, as you've talked about, ecosystems, and mobile lending, almost from click to cash, it requires a very, very nimble, very, very agile, and very, very feature and functionally rich applications and technology platforms. So in everything we have seen, everything I've worked with banks all over the world, it's really moving towards banking as a service. How do we enable that? How do we deliver that? And which again is a plethora of bringing in the ecosystems around the core and so on. So maybe moving to you, Mr. Dave, from one storied bank to another, you certainly have an equally rich history and heritage, and certainly have one of the widest accesses to the global markets. You certainly would love to get your perspective around, how does this banking as a platform or banking as a service evolve, and what are you doing, what steps you might be taking, and where do you see this going from here? Fully, and the role of the big techs, as everybody else has said so far, has been a catalyst for change and and cost efficient change in that sense. So quite open ended. Please take it and share your perspectives. You're on mute, sir.
Audible now?
Yes, sir.
Okay, thank you. Well, you compared HSBC to State Bank of India in terms of heritage and age, etc. I just wish I also had 46 crore customers like State Bank of India. I think that would be something. Even though
they have more
my
customers than most countries.
My operations head will almost have a heart attack if I were to tell him that this is what I wished for or so, because I don't think in 165 years we have got anywhere close to that. So I mean, I have enormous respect for the scale that banks like PNB, I mean, coincidentally, I was with Goel sir just a few days back, and I think one of his colleagues told me they also have close to 17, 18 crore customers now. So, I mean, I bring that up, not obviously to bring out to the industry just the sheer numbers that Indian banking industry is serving, but actually on this topic, right? I mean, when we are talking about disintermediation, fintech, big tech, whatever, by whatever name called, the data is with the industry, right? They might have a better ability to process that data and tell me this person is likely to buy insurance, or this person is a good credit card customer, or this person is a good farmer, or whatever. But that every technology needs that data. So I think sometimes we in the banking industry, and I respect the previous speakers for highlighting that, it's a collaboration, it's not either or, it will be win-win. But I just want to tell our industry brethren, and most of this audience will be bank colleagues, that actually they also need us as much. Sometimes we are sort of assuming that they can have a way of doing something on their own. That cannot be. If the data that SBI sits on is as much as what possibly only the Googles of the world have more, right? It's just that they seem to know what to do more better, because that's what their core existence model is, right? Our core existence model is to take care of our depositors and then lend money safely and manage the operating cost in between. So I think that's one thing I would like to highlight, that whatever it is, data, digital, artificial intelligence, machine learning, all of that requires basic financial transactions, and financial transactions do not take place outside the banking system. I mean, of course, some of it takes place, but even those ultimately end up with a bank, right? You might think you're dealing with a a payment company or something which is on your phone, but that payment company ultimately is debiting and creating somebody's bank account or so. So I think that's one part that I think we have a significant existing user trust. I think there is the word which came out, right? People try asking a customer to place 20 lakh rupees in an app versus an app of a bank. I think that's it's a sincere, this is our strength, right? So that's one thing. But it is also a fact that customers, whether be it a bank customer, be it a customer of a food delivery company, be it a customer of an e-commerce platform, has increasingly experiencing, right? He's comparing his or her experience with a bank vis-a-vis his or her experience with a food delivery company or with a but where I'm going with it, with an e-commerce company where, if I don't like the product, I'll return it to you. Can you do that in a bank? If I want to order just one ice cream, can you give me a loan for 85 rupees? I don't want your pre-approved 1 lakh rupees loan. I want just the 85 rupees loan delivered to me at 2:30 a.m. in the morning. Now, so things of that nature. And that's where the subject that you asked me to speak on, banking as a service, this is what basically it is, right? Where it's maybe the external environment is preparing the customer that, one size does not fit all. I have a specific need. I am an individual. I might need it at all times of the night. I might need an odd amount. I might need it for an end odd purpose, etc. And therefore, I think, we will, as an industry, this will be a challenge for us, and we must collectively get together. And that's where the part that Goel sir made and Khara sir made, that you ultimately will need a partnership, because we are a bank. We can try to become a technology company, will become a poor man's technology company. They can try and become a bank and they'll become a poor man's bank. So you play to the best of our strengths and stay away from each other's weaknesses, kind of a thing. I think the other thing on data, digital technology collaboration, I think the other thing, again, in the spirit of highlighting that as an industry, we have as bright a future as some of the fintechs have. We've sort of, it's just the market, unfortunately, these days rewards companies that don't make money, right? I mean, the companies that make money ultimately, because this is all you can make. When you don't make money, the promise is open-ended, right? Is that all banks, and let's talk about the banks which are on this panel, currently get paid by the customer to process their transactions, to retain their money for moving money, while the other payment and tech companies are actually paying to generate that data. See, there is a vast difference in this situation. So net, I just certainly think, if banking as a service is a given, not because of anything else, but because the customer gets used to the external environment, and the external environment has prepared him that you are the master of your destiny. You can get things in the shape and size and from the place at the time, etc. Delivered, not delivered, with pickle, without pickle. We'll have to learn some of that external environment. It is going to be a big challenge for us. I think that's one part. And I think the other thing is, some of the changes that are taking place in terms of virtual reality, augmented reality, metaverses, all those things. I think there is a sense that 15%. I mean, if I can, I know I'm taking 2 minutes more than maybe my allotted time, but I just
keep going.
Yeah,
We do have time, so please go.
Yeah. So if we look at, let's say, just in the journey of the use of internet, if you take Web 1.0, you would think it was, I went to the State Bank of India website because I wanted to see their investor relations section. I wanted to go to the PNB website just to see what are their FD rates, or somebody came to an HSBC website to see what is our mortgage proposition, right? That was simple. It was just it was a way of accessing information. Then we moved to Web 2.0, which increasingly became combined with cost of data, availability of it on the phone, ability to use e-commerce platform, and then it became a market by itself using APIs, etc. And therefore, that's 2.0. But in 2.0, every time we use something, every time we use Google, every time we use Facebook, every time we use e-commerce platforms, while we think we are a user, we are also creating our own footprint for the big tech companies to use, right? And which is what they are using right now. So they know that he goes to a book site or website for books on Saturdays or whatever. And I think looks like the new round, which is what I think maybe we need to start talking about or thinking about, is when you have much more privacy over what you do. So maybe big tech is also worrying about. We are worrying about what will happen to us through fintech and big tech, but big tech is also worrying, what if data privacy and the customer ability to only share data on clouds and not through anybody else, etc., comes in? What happens to them? Their very reason for existence. So all sectors whether fin or tech or banks, I think have to prepare for the future. But it is a fact that, especially in India, post demonetization, post pandemic and customer behavioral changes, we will need to try to become a lot more, if our technology can allow us to be much more customized in delivering. So that's really, I would say, in my opening comments. But thank you, Ian.
No, look, I love that perspective. So the banks have equal or as much value, or maybe more value, to the fintechs as they have to use, and they can learn as much from you, is what I'm hearing. I'm also hearing that data is the asset; it is owned by the bank, and just that they've learned to utilize it better. And look, this is pretty consistent with my experience with working with other global banks. And the fintechs. The fintechs tend to focus on a particular aspect of the value chain, whereas you have to deliver the entire value chain. And so, there is a lot more that you do. And certainly the fintechs do not, or the big techs do not want to be regulated as banks. It's a very different ball game and a very different business in that sense. So yes, collaboration is key. What I'm hearing from you, Mr. Dave, is don't give up what is your attraction and your strengths, utilize it and collectively deliver more for the customer. So I think, I appreciate that. I appreciate the other aspects that have been brought forward. Kind of maybe moving from, the storied banks over here with such long legacies and lineages to maybe you, Mr. Shetty, Swift. It is all in your name itself. It's making things happen quickly and securely in that sense. But I'd like to get your perspective again, as we've heard yet, the industry has evolved. We've gone from, I remember when I left India about 27 years ago, I still had to get my passport filled out, and I just had to write checks, and I had to make sure I had enough cash for the weekend, and so on. But to come back and over the years to see the advances being made, and in many cases, the leapfrogging ability of Indian banks to deliver digital experiences and so on. I'd love to get your sense of, kind of moving from kind of this pre technology era to digitization. I mean, and the move towards digitization, and how do you truly bring these ecosystems of partners to truly innovate and that can then be a boon to both the banks as well as the big techs, the fintechs. And how do you go about this at Swift? We've got some experience working with you. You seem to be able to come up with ideas and develop and deploy products and services just as quickly, or rather the standards for them. Can you give us your perspective of just where you've seen the industry come from, where it's going, and maybe do a little bit of soothsaying and fortune telling and future telling as to where you think it's going?
Yeah, no, it's really a privilege for me and to be on this panel. Thank you so much for having me, IBA. So, like you said, Ian, if you look at the evolution of tech, when I look back into the history, ATMs first came somewhere in 1967, right? It took 4 decades for it to really become a wide adopted service, right? And then you saw ATMs moving at every corner, every branch. Fast track now, and I'm very proud of what our country has achieved here, is real-time payments, right? In under a decade, and I just read METI data from 2017 to 2021, our retail payments have grown 4 times. And I think to all the points that Mr. Goel was making, Mr. Khara was making, Mr. Dave was making, and Mr. Mahabaleshwar was making, that is a true reflection of how banking community in India is adopting change and moving and scaling at a pace that is not seen anywhere else in the world. I'm very, very proud of that fact. When I look at other countries, I have this opportunity to look at other countries. When I sit in those forums, I think we stand up. Now, when you look at technology and the future, I think it's very important that you have technologies that can scale, that are future-proof. And more importantly, I think it's very, very important that we talk about cybersecurity. And that can't be a static topic. that's a dynamic topic, right? In all of this, that part becomes very, very critical. So when you look at a company like us, while we take great pride in saying that we are probably one of the first fintechs in the world, but we are also created by the banking community. We are a cooperative that has been created by the banking community to help banking community digitize. And answering your point on what have we done in that space, we've seen this move to real time, right? And when you look at the traditional correspondent banking payment, it was a relay where one bank would send a transaction, it will sit in the other bank during their working hours, or closing hours, and then process next day and stuff like that, right? So there was a huge vacuum. While the underlying technology was real time, we are moving from a serial messaging to a platform where all the bilateral parties will real time have visibility to the transaction they need to process. It will bring in transparency, it will bring in efficiency, and it will take away a lot of bandwidth and time and reconciling these transactions. So what did we do? We scaled the existing technology. We brought it to near real time in what we did. And we are following some of the deep principles of cybersecurity. We've defined 27 principles for cybersecurity, and we keep evaluating it year on year, learning from all parts of the world on the latest trends in the way cyber attacks are happening, and trying to be ahead of the game, right? So great progress. Like all the other speakers said, lot of reasons for us to have confidence in the fact that our banks have adopted and changed and become world leaders, real-time payment, right? And Swift as a company, hinges on the success of the banking community. So we are doing our part in that with our transaction management platform, like I said.
No, thank you for that. And I think you are right. This move to real time, again, it's also an expectation. I think just building on some of the previous comments that have been set by the Amazons, the Zwiggys, the DoorDashes of the world, where you know what you've ordered, you get the choice, you can track it, and everything's happening in real time. To build on what you're saying, there is a high degree of transparency, not just of what the outcome might be, but really also of the process along the way, right? So certainly, that is requires us to be very, very digital and and swift in that sense. But I think we had some time. I'd like to maybe just build on what we've learned from each other and your perspectives here. And I would be remiss to talk about, to say, obviously we've been through the last 2 years. We've been through a lot. Most of my clients and most of our banks and insurance companies we work with had been on a digital journey anyway. However, with COVID and the rapid shutdowns of the physical accesses to many things, the journey for digitization and digital was significantly accelerated. So maybe if we take that context, obviously all of you are CEOs, you're running the business. What is your perhaps instruction, direction to your CIOs, your COOs, your technology functions, and to your banks and organizations at large, in terms of how to get digital, how to get there quickly? So maybe if I can, ask you, Mr. Dave, to start off, and then we'll go from there. So maybe a couple of minutes each, and
Okay, audible?
Yes.
Okay. No, I think it's a very good question, Ian. I think, and this is where I guess the bank shape 5 years, 10 years, 15 years from now will get determined on the clarity of thinking, or the lack of it, at least at my level we will have. So, but to your direct question, what are we trying to do here? One is, I think, so far as an international bank, we would always operate in a bit of a niche segment, right?
Yeah.
We cannot be SBI to anybody in India, nor can we be PNB to, and hopefully there is a space where they, SBI or PNB cannot be a HSBC to the customers. Customers who wants to send their kids abroad, mortgages abroad, global companies, Indian companies sending people abroad. How do you open 10,000 employee accounts in Australia if you don't have an account with HSBC, for example? So I think the main thing here is, I think in the context of this particular conference or subject on data, digital technology, I think the main instruction is target customers that might or might not be generating lots of value, but generate lots of data footprint for me. I mean, as an example, just take an example of an IB school. Okay. Great source of knowing which students are going to go abroad. All of that is my catchment. I mean, just as a simple example I'm giving, because inevitably parents of IB school children tend to prefer international studies and further studies, or large or large trading companies, right? Trading companies are the greatest source of data. You can bank a large steel company and you can bank a large steel trader. You'd be surprised that the steel trader gives you much more data, right? So that's the second kind of thing. So largely the guidance from me and my top people to the team is this: focus on customers that have data enrichment as much as the value in the account itself, because that data could generate my future business leads. That's where we are targeting to be a much more scale bank in the country. And to acquire that scale without the physical presence, I require my customer selection to help me with that. And my, hopefully, to the earlier part of the discussions, our ability to partner with companies that are much better than us at data analysis, while we obviously continue to improve on that part ourselves. So that's what I would, as a snap answer, provide your response to your question.
Thank you for that. And I think as we're moving forward, certainly the big techs have popularity, while the banks have profitability. So maybe in the context of that, Mr. Mahabaleshwar, can you probably give, what are you, again, being an early adopter, what are you asking your teams now to do?
Yeah, I think my specific ask from my team comprising of CIOs, CTOs, or even the CTROs is get ready to face the new age challenges. So that is what will be the ask from the CEO, because it is now very clear, as rightly pointed out by the chairman of the SBI as well as IBA chairman, customer would be going forward more demanding. So in that background, all our activities should invariably be customer centric. So whether it is customer acquisition or customer retention or customer experience in terms of customer delight. So these are going to be the differentiators. So there would be more challenges. So I consider, apart from these things, cyber security as the single most top challenge for all of us to handle in the days to come. And that is where we need to build the capabilities to handle that issue, because it is a continuous process. Of course, other issues like we have to ensure a level playing field, regulatory enablement for all the players. You see, you can't have one set of players adhering to the regulatory guidelines and other set of players not at all regulated. That type of anomaly is still there. I think banking industry has to bat for that. And technology upgradation, ecosystem management, and of course for bankers always capital augmentation is a continuous issue that all of us should address. Another area is upskilling the manpower and availability of skilled tech force, taking care of definitely the data protection responsibility. All these things are equally important. But Mr. Ayan, we are entering into a very, very typical area when we deal with the big techs. Say here what happens, hitherto the partnerships were bank-wise. Individual bank used to forge the partnership with any of the tech or these fintech companies or even the startups. But we should understand that we are now dealing with global giants. So from that point of view, I believe it will be definitely a different ball game. Hence, while onboarding big techs, can we think of partnerships with the banking sector as a whole, rather than individual bank? Because then the market available for them would also be very, very attractive. And I think it will be easy for the entire Indian banking sector to have a common agenda of the partnership terms and conditions, including the commercials. I think the industry body like IBA, they can play a very, very important role in safeguarding the industry issues. And I'm really upbeat. Let us be ready for the big change and tighten our seat belt for a rewarding flight of this century. So it is not a flight worth missing.
Absolutely. So maybe if I can go to you, Mr. Shetty, where you work with a lot of the banks, and as you said, you're seeing the same in terms of focus on cybersecurity. Obviously, you talked about that, but also really around upskilling talent, growing that talent from within. Is that also one of your key directives to your teams? And how, where would you go with that?
For us, one of the most important premise is that we don't waste the energy and IT resources of our community. Since we are a cooperative, we collaborate with the banking partners, right? So our number one objective is to make sure that we create products and services that can scale with our clients, right? I already spoke about cybersecurity, and that is of paramount importance for us. And then we are also constantly bringing in all the best practices that we see across the world to our community. And my conversations with the team revolve around learning from other parts of the world and getting those nuances and insights through various community webinars. And we have actually, like I spoken earlier as well, through our products and services, done that, and we continue to do that. That is really the motto of a cooperative like us, right? Because for us, our success hinges in the success of the banking community, and we will do everything in that direction.
Thank you for that. Maybe back to you, Mr. Khara. You introduced us to the concept of phygital, so I will add that to the other piece which we talked about. Popularity, profitability. You seem to be having all the pieces to bring that together, especially kind of when going forward in the remote and hybrid way of working, or hybrid way of expectations even from services in the banking sector. So maybe the top three things that you are asking your team to focus on to continue to be successful in this new world we live in.
Yeah, I think a very important responsibility on a banking institution, because they enjoy the trust of many, is to ensure that there is enough digital literacy on ground, because it is only the digital literacy which will lead to the information security. And information security today in the today's environment, perhaps that is the most vulnerable area which we all need to guard against. So I think for that, apart from the features which we need to strengthen within the bank, within our IT system, it is also equally responsible on the part of the users of the services also, that they have to have enough respect for their credentials, which are not to be shared. So that is one of the two very important components. And third, of course, is when we are a bank which started doing all this digitization many years back, and it has been done in a very incremental way. So now it's a situation where we have to ensure that we create information highways, and we have to cut through the sort of maze of various systems which we have created over the years, and that only will bring in the efficiency. So that is the third very important piece on which we are focused on to ensure that we remain ahead of the curve.
No, thank you for that, and I must say, I've enjoyed the perspectives. I've learned a lot, and Mr. Goyal, sir, back to you. I guess the chairman of the Indian Bankers Association. You have tremendous responsibility, and you hear the voice of the community. Again, from you, from that aspect, but also as leading a storied bank like Punjab National Bank, your top 2 or 3 priorities for your teams, and maybe you can bring us out to a close, sir. Can't hear you, sir. Sorry, I think we're having audio issues again.
Thank you very much once again. Yeah, as far as my responsibility as a IBA chairman is concerned, I fully agree the views of the Mr. Mahabaleshwar ki we should come collectively to take the address rather doing the individually bank by the collaboration also. But ultimately question is this, Mr. Yan, ki what customer want today or how we are providing that. Because ultimately we have talked about the use of the digital, use of the IT, whether it is a machine learning, artificial intelligence, API, whatever it is. If we are using the technology also, definitely we are exposed to risk also, whether it is a part of the cyber security or something. But there is a available method also for the take care of the cyber security. Solution is also there. Some of the companies also in the cyber security structure they are providing. But I agree with Mr. Khara also. As far as what we want to give the advice to either for the CTO, CRO, and the CISO also, responsibility of all these three, IT side, risk side, and the CISO side has increased manifold. They have to update themselves, they have to verify our system also, and we want to create the awareness among not only the banking staff, even for the customer also. As Mr. Khara has told you, we have to create the awareness. Take the little example of the sharing of the password. We are using the technology, we are providing the services through password. If they will share their password, definitely, although it is not a part of the cyber securities, so we have to create the awareness among the our internal staff also, even to the external customer also. And most importantly, suppose I have talked about the collaboration, we should not think it is a competition. Definitely collaboration will be needed, although some of the collaboration, instead of the going to the one company, we can create among banks also. But when we are making collaboration also, then we have to see not only our system from the cyber security point of view, we have to check their system also. That is also in need of our in collaboration. So in my view, definitely the role of the CISO and the CTO and the CRO has increased manifold, and making the any collaboration also. So I will advise to my all the three persons not see the my only the strength of the technology, they should see the strength of the partner also. So this is my remark on this. Thank you very much.
Well, wonderful. Just as I expected, I've learned a lot from this. I've also learned that you are impeccable on timing. And, again, if I were to try and summarize this, it is to understand that this is, and I say uniquely Indian way of, it's not an either or, it's an and it's a collaborative way to deliver what is the best experiences to the end customer of the bank. So we can learn a lot from big tech, but it sounds like big tech can also learn a lot from us. And we do have, control of what is the ultimate asset. The data and the information that the customers allowed us to have and use to their best advantage. I love the concept of the information superhighways. So perhaps that's what the banks need to do, come together and build those information superhighways and really truly connect customers, connect partners, connect the ecosystems, and so on. So with that, as a wonderful balanced perspective, I believe the future of Indian banking, no matter what the big techs think, is in good hands. And I do thank you very much for your time and sharing your perspectives, with such a large audience of folks that are eager to learn from you. So certainly not disappointed. I had great expectations of learning things. You've, as usual, gone ahead and exceeded them. So I thank you for your time. I thank you for your participation, and looking forward to the future of Indian banking. With that, I guess I hand it back to our host, and we have a wonderful session. Have a wonderful rest of the day.
Thank you.
Thank you.
That was indeed a very interesting zero panel. Thank you, distinguished panelists, for sharing your thoughts on the chosen topic. I'm sure banks and financial institutions embracing new age technologies will turn out to be great winners. With this, ladies and gentlemen, I would like to once again thank our distinguished panelists of various sessions, our knowledge partner Cape Gemini, our awards partner IBM, premium partner SAS, Salesforce, and Amazon Web Services, platinum partner Swift, memento partner Canara Bank, conference partner UiPath, and associate partner NESL. Thank you for your support. Ladies and gentlemen, in a few moments from now, we will be commencing the prestigious awards function. I will now hand over to my colleague, Ms. Mukti, for the awards ceremony, requesting all the participants to stay tuned in, relax, and enjoy the glittering awards ceremony. Thank you.
Yes, we are live. Please start.
Good evening, ladies and gentlemen. I'm Mukti, your host for this evening. Dear members, it's now time for presentation on the Thought Leadership Report. And to do the honors, I would like to invite Ms. Neha Punate, Vice President and Global Leader, Banking and Capital Markets Transformation Practice at Capgemini, our knowledge partner for the 2021 awards. Over to you, Ms. Neha.
Thank you. Let me know if you all can see my screen. I'm just sharing it. Is it visible?
Yes, visible.
All right, thank you. Hi, everyone. And today I'm going to walk you over the course of next 10 minutes. It's a synopsis of the thought leadership that we have worked on along with the collaboration with the IBA on what we see as next-gen banking in India and how it's imperative as we have seen changes taking place over the last 2 years. Right. So what are the changes that we have seen that's actually impacting or disrupting the banking industry? There was enough already enough already taking place in the Indian market. Technology advancement, a lot of growing adoption of cloud, API banking, emerging technologies like AI, ML. Along with that, we also saw customer behavior that was evolving with higher adoption of digital, and the COVID actually gave a further impetus on that adoption. We also saw competition from new players. Again, there was a lot of competition that was coming from the fintechs and the big techs, and that's further accelerated. And in the backdrop of this was the entire economic uncertainty. So it goes without saying that there was a lot of actually disruptive forces that were actually at play for the banking industry. And that's something that needs to be kept in mind as we craft the strategy for next-gen banking. Capgemini actually had carried out a survey last year amongst banks and insurance companies alike to see and what's really been the impact of COVID and what did they see really in terms of adoption as a result of digital adoption as a result of that. So an overwhelming number of, and if you look at it, almost 2/3, and both for banking and insurance said that they felt that there was a major impact on their business, and that led to a significant disruption in their operations, which obviously they were not geared up in the first year, but they slowly started adopting it. And what they also saw is that, and if you look at in the Indian market especially, that 72% of the financial transactions were actually conducted digitally in the last year, which is an overwhelming high percentage, and it is actually a step in the right direction. We also saw that as a result of that, customers started adopting digital in a big way. And as you would see, actually, our statistics are in fact better than just a minute. Actually, the statistics for us are in fact better than what you would see for around the world. So 66% against 2/3 of Indian consumers said that they prefer doing transactions through mobile or net banking with having a backup option of branches, but that's really the predominant channel of preference. And with 22% only saying that they would like to really operate through the branches, and which is much higher than what you would see what the global numbers are. And what we also saw that initially where it was more of a millennials and Gen Z looking at adopting these digital channels, lately because of COVID, you found that Gen X and baby boomers, which usually is the ones in the 70s, actually adopting digital in a big way. We also saw not just changes for retail customers, but as far as the MSMEs were concerned, they were also impacted in a big way through as part of COVID. I mean, there was, when we did a survey and through the Indian Association, as far as MSMEs were concerned, a large percent of them, as you would see, 70% said that they suffered huge losses. A lot of them actually had to retrench their staff and actually had difficulty in breaking even. But this is truly an opportunity for further accelerating the digital adoption for these customers and seeing how we can actually ensure that they revive and come back as part of the mainstream economy. So this is really giving the backdrop of what happened in the last 2 years. As a result of that, what we see as more and more what we see as more taking center stage is what we call as embedded finance. What does embedded finance really mean? Embedded finance is actually looking at enhancing the customer stickiness and actually ensuring that banking plays an integral part of all the customer journeys, which means every time a customer is either shopping or booking a flight or actually going and traveling, financial services is really as integral a part of that customer's journey to the extent that it is what is known as invisible banking. So embedded finance will become more and more important. And as a result of that, we see that banks are more and more open to partnering it with what we call as the ecosystem providers or partners who have a role to play in their customers. And this could vary from telecom players to education institutes to mobility providers, healthcare retailers, just about everybody who has a role to play in the consumer spending. And we have seen that customer is also open to it and their interest can vary. And if you look at it, lending maybe not so much, but as far as payments is concerned, cards is concerned, or even for that matter, for basic accounting, we see that the customers are more and more open in terms of sharing their data, so long as they know what their data is being used for, and having banks play a role in this entire customer journey. So globally, 3 in 4 banking executives say that they are interested in partnering. That's 75%, and they really believe that embedded finance can play a big role. As a result of that, banks have to actually, banks actually have to set up what we call as a next-gen banking platform. And really, what does it mean? What are the capabilities of this when we say next-gen banking platform? The first thing is open integration, because when you're looking at partnering with, external providers for any kind of service, you need to have APIs in place to allow integration, without which, the process will become cumbersome or it will break. And when we interviewed banks across the world, 1 in 3 of them said that they are looking at scaling their API infrastructure and monetizing it. So it's not just setting it up, but also looking at monetizing it. The other thing which we saw is what we call as omni-channel seamless experience. By that, what we mean that when customers move from the physical to the online world and vice versa, that experience has to be seamless. It's very easily said, but very difficult to achieve, and it usually causes friction in the customer journey. So that becomes very important. The other one which would be is, we see that a lot of banks are looking at moving towards cloud, increasingly even in areas like corporate banking. And they're looking at actually providing what we call as a banking as a service, which means banking services are productized and actually, again, embedded in the journey with the partners. So whether you provide payment kind of opportunities to your customers or lending opportunities through any other provider, the likes of Amazon, or for that matter, looking at providing with any travel network, that's where we're looking at banking as a service as an option. And this would mean that banks are now able to capture data, and that's where data-driven insights becomes very important. Now, banks have the capability to look at structured and unstructured data to be able to create that really, what we used to call, I wouldn't say 360-degree, but really a very rich and integrated view of their customers. So they really have to start developing that. And needless to say, anything that you do here has to be resilient and robust, because there are security concerns, there are data privacy concerns. So the next gen banking platform has to actually address all these requirements to be able to tap the new age customer who's digitally savvy, who is looking at how you work through their partnerships and be relevant as part of their daily life cycle. We've seen in India that actually there is a whole lot of regulatory support, and India has actually made immense progress. And we work with a lot of clients globally, and I'm really, really happy and proud to say that Indian banking system is out there in terms of the policies and the kind of initiatives that we have taken to enable the entire kind of digital adoption. So what are some of the things that we have seen taking place in the Indian market? First and foremost is whenever there is a digital thing is, how do we protect our customers? I mean, we still have a lot of our Indian customers who probably are not that digitally savvy, or may find challenges, may get susceptible to fraud, or may get susceptible to, any kind of, concerns in terms of their adoption, or in terms of, sharing of their customer data. So how do we actually ensure that we protect customers? So few initiatives that were taken is, a recent one where RBI actually prohibited merchants from storing card details without getting a concurrence for that. or things around looking at, redressal framework that customers have access to in case there is any issue with the banks, or the fact on card tokenization. We do have dual authentication still, which actually makes it fairly secure, launch of ODR and so on. That's really from protecting customers' point of view, which is an important part. The other is innovation that is being fostered by the regulator, by the finance ministry and so on. One of the things that did happen is the launch of regulatory sandbox, which continuously looks at different use cases, where the different players within the banks, within the banking industry, can come together and try out that. The other is looking at introducing new players when it comes to ensuring that there is really a level playing field, or there is really more choices available. So that's really where RBI has gone ahead and introduced the the new NUE, or the new umbrella entity kind of initiatives. The third one is really looking at whatever infrastructure that has been set up, whether it's in the public or private sector, is how do we ensure that there is cost effectiveness, there is, it makes more sense at an economic level for the players. And that's where collaboration is really promoted between these participants. So for instance, we did look at, effort and initiatives to actually look at mobile wallet interoperability, or the fact launch of e-rupee and so on. So that's really looking at getting the bang for the buck. And the last one is in terms of driving efficiency at the banking sector level, where progressively we have seen the finance ministry actually mandating the norms, and that's being done via the EASE framework, and that's really enhanced every year to ensure that the banks know how they're performing and how it is really helping them, and what are the things that they can do wherever there are gaps. So that is really helping. So it's quite well-rounded effort in all these areas which are being done by the regulator. And we heard through the day a lot of initiatives that are being done. I mean, we had India Stack that was already in place. And in addition, we've had things like account aggregation, that's a framework, or the OSEN framework that is being set up in place to ensure that digital adoption takes off in a big way. Last but not the least, we have seen how collaboration is making a big play, and really collaborating with both FS and non-FS providers, the likes of fintechs, the big techs, and so on, to ensure that actually it helps in innovation, enhance customer service, more importantly, cost reduction. So in terms of last mile, partnering with fintechs will ensure that the cost of acquisition becomes lower for banks. Banks can rely on their okay. And sorry. And we're looking at partnering with the tech players as well to achieve better collaboration. One of the examples is the buy now, pay later, which has become very important. And as we look at partnering, one thing which COVID has shown is that there is going to be emergence of new roles. We are looking at roles like cybersecurity, robo-programming, blockchain, and all becoming more and more relevant. So new roles will come in: chief digital officer, data scientists, and so on. And some of the existing roles will start losing relevance. So the skill development, upskilling, and reskilling is going to become more and more important as we look at banks adopting and being ready for the next generation. So that was some of these snippets. The detailed report is available on the IBA website, so feel free to please look at it. Thank you.
Thank you, Ms. Neha and Capgemini, for being our esteemed knowledge partner for Awards 2021. Namaskar and a great evening to all our distinguished attendees. Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India, and our distinguished chief guest, Shri A.K. Goel, Chairman, Indian Banks Association and MD and CEO, Punjab National Bank. Shri Sunil Mehta, Chief Executive, Indian Banks Association. chairpersons, chief executive officers, managing directors, executive directors, and senior executives of member banks. Award winners are sponsors, knowledge partner, presenters, jury members, participating delegates, and others who are connected, ladies and gentlemen. This is a profound moment for members of our wonderful banking fraternity to recognize those who have excelled in diverse areas in the year 2021. As has been our tradition to invoke the divine blessing, we will now have ceremonial lighting of the lamp. To begin with, may I now request Shri Sunil Mehta, Chief Executive, IBA, to welcome the dignitaries and participants. Over to you, sir.
You are on mute.
You are on mute, sir. Mehtaji, you are on mute.
Am I audible now?
Yes, sir. Yeah.
Okay, thank you. Very good afternoon. This indeed is a great privilege for all of us. The Deputy Governor RBI, who is in charge of banking technology, Shri Ravi Shankar ji, is with us to motivate the bankers who have done excellently well into the digital area. On behalf of all the fellow bankers, our knowledge partner, as well as on behalf of technology partners, I extend a very warm welcome to Ravi Shankar sir for this award function as our chief guest. IBA convenes these functions on a regular basis since 2004, and this is the 17th conference for encouraging banking technology, which is having a composition of conference as well as a expo and a award function. For choosing the winners, we have opted for the most independent jury. So jury chair is Dr. Deepak Pathak, is a IIT professor. Madam Ashu Suyash, ex-MD of CRISIL. Mr. Gagan Rai, ex-MD of NSDL. Shri Dilip Asbe, MD and CEO of NPCI. And Shri Shiv Shankar Basin, the CTO of NSC. So our jury has evaluated the performance of the bank, and since none of them was a banker, so it's a very great thing that the total independent view for deciding the award came through the great deliberations among the jury member on the basis of the presentation made by our knowledge partner. So on behalf of the entire banking community, I welcome the jury members present here for this award ceremony. Chairman IBA, Mr. Goyal, Chairman SBI, MDs and CEO of member banks, and our all chief executives of member banks, senior executives, and participants. I really extend a very warm welcome to all of you because without your presence, these functions could not have been organized. I really welcome our sponsors, IBM, Madam Lulu Mohanty and Mr. Parul Brunton, who have supported us in organizing this event. We all are aware that during the day, very four important panel discussions have happened on various issues on trade finance, digital lending, cloud computing, and the business model which may need change, especially in view of the big tech entering into the financial space. I think the deliberations were really great, and I must welcome all the panelists who are available here for their effective contribution during the program. The major topics regarding payment space, digital lending, use of artificial intelligence and ML, it requires a special attention, especially recovery and the collection mechanism. And these issues were deliberated in detail. And I'm really thankful and welcome the participants who contributed in a collective wisdom generated in this system. We are all aware that banking system is undergoing a great transformation from physical to digital right now and maybe virtual in future. And banking system is quickly and rapidly adopting these changes, and the blessings we are getting from the regulator in the form of various enablement, and especially the new phase where the currency may be digitalized in times to come. So these challenges and these changes requires a greater deliberations, collaboration among the stakeholders, and understanding about the changing landscape of the banking. In this backdrop, I welcome all the participants for today's award function, which will be a motivating event for all of us to carry out this journey of transformation into the banking sector. With this, I welcome one and all once again and request the anchor to take the proceedings further.
Thank you, sir. May I now request Shri A.K. Goel, Chairman, Indian Banks Association, to deliver his welcome address. Over
Thank
to
you
you,
very
sir.
much. Thank you very much. Good afternoon to everybody. Sri Ravi Shankar ji, Deputy Governor, Reserve Bank of India. Dr. Deepak B. Pathak, Professor Emeritus, the Department of CSC, IIT Mumbai, and Head of the Technology Award Jury, and other member of the jury, Ms. Neha Punetar, Vice President, Capgemini, Ms. Lula Mohanty, General Manager, IBM, and Mr. Paul Burton, Senior Partner and FSS Sector Leader, IBM India, South Asia, Sri Sunil Mehta, Chief Executive IBA, and Sri Gopal Murli Bhagat, Deputy Chief Executive IBA, my fellow bankers, and all the participants of this conference. A warm welcome to all of you in the IBA'S 70th Banking Technology Award 2021. Sri Sunil Mehta ji, Chief Executive of IBA, has already provided the overview on the award function. Considering the efforts are put in by the IBA to organize this award function and to recognize the spirit and hard work put by the bankers to innovate and improve the existing processes, and also to create a positive impact on the overall functioning of the bank. The last 2 years experience of the pandemic has shown that technology is the lifeline for the economies, government, companies, and also the people. Financial sector is not the exception to this global phenomena. Entire banking industries in the country has risen to the occasion and has been able to deliver continuous and uninterrupted financial service to the customer during this course of pandemic. But for the robust technology ecosystem put in place by the banks with inbuilt resilience and business continuity plan, this kind of seamless service delivery even amidst the most difficult circumstances would not have been possible. Pandemic has further accelerated the digital transformation in the bank and adoption of the digital channels by the customers as well. This is evident from the metric growth registered during the 2021 by the UPI, the predominant digital payment system in the country, both in the number as well as value of the transaction. Dr. Deepak Pathak, chairman of the award jury, will be providing an overview of the whole work done to shortlist the winners. Sri T. Ravisankar, Deputy Governor, Reserve Bank of India, will share regulatory perspective on the technology and banking by keynote address of the function. Information technology continues to be the single largest facilitating force behind the successful transformation of the transaction and the analytic processing of the banking business in the country. Development which has taken place during the last few years all have IT as the pivotal center point. As you all know, RBI has been coming out with the vision report on the payment system since 2005. In the last vision report of the payment system, empowering every Indian with access to a bouquet of e-payment options that is safe, secure, convenient, quick, and affordable was the core theme of the vision report. In our award category, we too have given importance to these areas. Modern technologies such as artificial intelligence, cloud, robotics, API, and the cyber security are creating opportunities for the financial institutions like bank, credit unions, and non-traditional provider to introduce new products and services to improve the customer experience and achieve efficiency that can reduce the cost significantly. The growth of the digital banking usage and the emergence of the new technology, the belonging of the industry's ecosystem, and as increased focus on innovation are creating challenges and opportunity in banking. Consumers are increasingly turning to fintech solutions and big tech platforms, fragmenting existing relationships for essential financial services such as deposit, loans, payments, and investments also. The importance of the developing and deploying new digital services, building new business model, and transforming from a product centric to the customer centric culture should be the focus for all the bank and all other financial institutions. To become further ready, financial institutions will need to deploy modern technology to support agility, efficiency, securities, and innovations. Technologies such as intelligent decisioning, open banking APIs, cloud computing, robotics, and automation, embedded solution, and cyber security will differentiate bank in 2022 and beyond. In each technology development, the focus must be to elevate digital customer experience at speed and scale. The Indian open banking ecosystem continues to thrive with active support from the government as well as the market with the launch of the account aggregator, API, readiness of the bank and the NBFCs, entry of the multiple new banks, intense funding. India has become a role model for open banking deployment globally. India are already using the power of open banking daily and are like to adapt the newer innovation without much friction. Our open banking model is slightly different. India has embraced an approach where both the regulator and the market collaborate towards development of the open banking space. In India, under the guidance of the Reserve Bank, the National Payment Corporation of India developed systems such as Unified Payment Interface and released its application programming interface for bank and third-party apps providers to build upon. This is again opening more doors for the innovation in service. Against this backdrop, Today's conference, based on the overall theme of new generation banking, discuss some of the key trends and the challenges faced in the modern day banking. Let me touch upon the key takeaways from the morning conference. In the inauguration session, Sri Ajay Prakash Sani, Secretary Ministry of the Electronic and the Information Technology, Government of India, provided insights into various government initiatives toward the digitalization of the administrative processes to benefit the public and also with help in ease of the doing business. The panel discussion on the digitizing trade finance discussed the scope of end-to-end digitization with not only ease the process of the trade finance documentation but also open international trade to SME as expand the various of the goods available as well as the grow economy. Improvisation of the cross-border financial transaction are also discussed in this session. Second session was on the digital lending. We have seen during the pandemic led growth of the digital lending, unbridled extension of the financial service to retail individuals. It is also susceptibility to the host of the conduct and governance issues. Mushrooming growth of technology companies extending and aiding financial services to the unsuspecting customer have created issues for the vulnerable section of the society. This session discussed the evolving digital lending ecosystem that is safe and sound and at the same time encourages innovations. Third session focused on the cloud computing in banking. Many banks are looking for a way to open up their outdated information technology system to modern voice and data services processes. The focus is increasing on the clouds. Experts in the coming and will gain the importance in the coming years, especially in the areas such as the customer relationship management and the financial accounting. Banks looking to enter the cloud are mainly faced with two challenges. First one is the security of the all processes, application and data, and to remain regulatory compliant. Advantage and the key of the factors that need to look at while taking a call on cloud computing was discussed in this session. Last session was the CEO panel, where leaders of the bank shared their perspective on the changing business models with the help of the technology and big tech. The possibility of unconventional partnership to aid business growth in business and how best the capabilities of the big tech could be used to the overall goals of the banking sector were discussed by the leaders. All these sessions were quite interesting and discussed the relevant trend in the banking sector. I am sure participants have benefited immensely from these sessions. Going forward, technology will be an integral part of the core decision process of the bank. Involvement of top level management to decide on technology adopting taking into the consideration the internal talent become necessary to devise suitable business models and future ready banks. I am sure banks are putting in their best effort to make the necessary transformation needed to meet the goal of the expiration India. And lastly, once again, I'm on behalf of myself and behalf of the IBA, my great gratitude to Sri Ravi Shankar, Deputy Governor, Reserve Bank of India, to attend this meeting. Thank you very much.
Thank you, sir, for your address. Dear ladies and gentlemen, I now have the pleasure of presenting the perspective of our awards partner, IBM, represented by Ms. Lula Mohanty and Mr. Paul Burton. Over to you, IBM.
Hello, everyone. It's a privilege today to be here in IBA's annual Banking Technology Conference amidst so many veterans from the banking industry. In the third year of the global pandemic, the financial services industry appears to be acclimating to a new reality. Many temporary measures put in place are now poised to become permanent, and a new industry structure is emerging. A new industry structure that is primed on hope, optimism, and lots of growth and innovation. Financial services are being mixed in with services or products from other areas and industries, and banking is becoming embedded. sometimes almost invisibly in non-bank business processes. New types of ecosystems are developing, powered by dynamic new business models, often based around platforms and network economics. Here are three observations that I would have just interacting with a number of banks and financial institutions from around the region. Platform business models are becoming a mainstream conversation. Bankers recognize that disruption creates both risks and opportunities. They tell us that platform business models can significantly benefit customers and bank themselves. And they predict cross-industry platforms will only become more important to the industry and their organizations. The lines between industries are blurring and fast. Leading financial institutions are creating their own bank-led ecosystem businesses to serve attractive market segments while deeply integrating their products and their services with other companies' well-established platforms. In many ways, they claim to have turned the tables on the new age disruptors by truly harnessing their power of incumbency around their customer base to drive growth and innovation. Emergence on the new asset class is quickly becoming prime, is an opportunity that is driving the inevitable. New digital assets, the central bank digital currencies, non-fungible tokens, stable coins, and cryptocurrencies as solutions to eliminate even more friction in financial interactions for digital assets by working to create new customer and partner ecosystems, new products and services, and new use cases. Now, with all of these digital improvements, the new platform, the new currencies, the new asset classes, there is a looming threat around the need for even more versatile security and resilience. While new businesses and operating models are providing innovative ways to serve customers anywhere and anytime, they also create a threat for security breaches. Financial institutions are revisiting their enterprise risk profiles and deploying enhanced security capabilities within their walls and across the ecosystem. That calls for very forward-thinking, agile, scalable, and modular architectures that integrates the business ambition with the underpinning IT investments. Now, Paul Burton is General Manager, IBM Asia Pacific, responsible for overall business results and client success. He is personally very passionate about the impact of financial services in a consumer's day-to-day life and is an executive sponsor to many of our banking clients in the region. It is my pleasure today to welcome Paul to this dialogue.
Thank you, Lula. Glad to be here.
Paul, the first question I would have for you is your view on how banks in Asia Pacific, it is a big and diverse region, are globally responding to the platform economy?
Well, first, I think it's important to take note of the underlying trend. The very clear trend over many years has been for increasing specialization of value and function. With the advent of cloud computing and associated supporting and complementing technologies, we're seeing an unprecedented disaggregation and unbundling of value, so much so that entire value chains in banking, for instance, are becoming modularized with discrete pieces of value distributed worldwide instantaneously, all because of cloud-based platforms. With that in mind, I think banks are confronted with two primary issues. On the one hand, if all they're doing is providing a discrete piece of functionality that rides on a platform like Amazon or Yono in India, as an example, or others that we could name, they lose any benefit that accrues to them from their brand as is disguised or hidden from the platform user. In essence, over time, this means they lose the ability to differentiate, and this probably impacts their pricing power and therefore ultimately their profitability. If I can get transaction services or even financing from the platform, Amazon is an example, do I really care what bank stands behind it? It's purely a pricing play for me. On the other hand, banks can try to stand up their own platform for services, in essence, try to establish their own ecosystem. Banking platforms that aggregate home, car, other financing services, insurance, shopping, retail services, really the sky's the limit here. They can stay relevant in this way, but of course this means that banks may find themselves in the business of delivering value outside their traditional areas of competence and expertise. Whether this is a good thing or not can only be answered by the bank. Finally, ecosystems exist and thrive because of network economics. Network economics gives them a powerful advantage, but over the long term, this will not be enough to sustain them if the ecosystem's keystone, the keystone company of the ecosystem, is not skilled at nurturing the ecosystem partners, which includes some responsibility for the partner's well-being. So fresh, modern mindsets and perspectives are required here, and it'll be very interesting to see how things evolve into the future.
Talking of the future, Paul, and the traditional banking mindsets, there hasn't ever been more conversation about digital currency than what's happening now. So the finance budget was presented in India. There was a mention of the digital currency. Do you see digital currencies becoming mainstream?
Well, you know, to my way of thinking, digital currencies in a very real sense are mainstream already. I've not carried cash in years. I travel internationally frequently, and I don't carry cash internationally either. So, you know, I use credit cards, digital wallets, and other means to pay for what I require. So the question, perhaps presented a little bit differently, is when will governments stop printing cash? Which I think is an interesting question. And then, of course, if they stop printing cash, what steps might they take to administer and manage a cashless society? Okay, there's some pretty compelling reasons why a government might want to do this. First, the ability to literally track every transaction, detect money laundering and other illicit uses of the currency. That's a pretty compelling reason. And of course, if they're tracking every transaction, they can certainly effectively monetize the underground economy, which would be good for revenue purposes and taxation. I think at the end of the day, most governments will find it appealing to increase their revenue by eliminating or certainly reducing the size of the underground economy. But I think these reasons speak for themselves. But I do think we need to differentiate a central bank's digital currency from what we might call a fiat currency on steroids. And of course, what I'm really referring to here is cryptocurrencies that are out there. Cryptocurrencies escape government oversight, and for that reason alone, we need to pay special attention to them. Okay, because they've heretofore lived in a fairly privileged space. As long as sovereignty exists, but of course I'm referring to national sovereignty, I just don't see how cryptocurrencies can be more than a niche phenomenon.
Thank you, Paul. Given we're talking about platform economies and digital currency, what is your view on how should banks respond to cybersecurity threats?
Well, that's an interesting question. You know, banks and financial institutions have traditionally been in a privileged position because they have personal and financial information about you. This means that banks have a special responsibility to you and must take extraordinary care to protect you. I think there's a qualitative difference between your retail purchases from a website being exposed versus the financial details of your life, or even more so, the outright theft of your wealth. And for banks and financial institutions, this is certainly a difficult task because it's defensive by nature. Of course, we'll leave the offensive to governments, but this means we're always reactive. We're reacting continuously to new threat vectors being established by the bad guys. For this reason, there clearly needs to be a close relationship between government and business to deal effectively with cyber threats. But even this relationship will not be enough if there's not a strong AI-enabled threat detection capability in conjunction with a strong policy or a philosophy of zero trust by the enterprise or the bank. I would also say that you have to proactively plan for bad things to happen. So to enhance recovery in the event of a successful cyber intrusion, data resilience should be engineered into the technology infrastructure. Again, you know, prior planning and more planning are necessary here. Lula?
Yeah, I mean, I couldn't have said this better, Paul. I mean, increasingly, as we're speaking to our clients around the region, it's about the coming together of you know, the CISO organizations in the bank, the underpinning, you know, IT architectures and the business ambitions to build more secure infrastructures and architectures for the future. Paul, that was very insightful. I'd like to summarize the key takeaways for the audience here. Number one, banking and beyond, winning banks will be those that deliver services that contextually align to customers' life stages, needs, and circumstances, addressing both banking and beyond banking needs. It's about meeting your consumers in their present in the ecosystems and products that customers use, enabling beyond banking frictionless customer journeys, making the bank more invisible. It's also about digitization, driving opportunities and challenges. Growth in central bank digital currency and other digital assets do bring in a host of opportunities for banks to reorganize themselves using digital connectivity for efficiency, lower costs, and better customer experiences. But changing the status quo, this radically comes with a host of challenges, some of which Paul already enumerated, and to be mindful about the same. So thank you, Paul, for the dialogue. Thank you.
Thank you. We thank IBM for being our awards partner for 2021. Ready? Dear delegates, we now move on to humbly acknowledge and appreciate the untiring and tremendous efforts of our respected chair and members of the jury for Awards 2021. The awards jury, headed by Dr. Deepak B. Phatak, Professor Emeritus, Indian Institute of Technology, Bombay, ensured intense scrutiny and deliberations. The jury members offered analytical guidance and recommendations to Team IBA and our knowledge partners, which helped shape the outcome of the 2021 award process. Our jury chair was joined by 4 reputed senior industry professionals. We offer a humble gratitude to jury members. Shri Gagan Rai, former MD and CEO, National Securities Depository Limited. Srimati Ashu Suyash, former MD and CEO, Chrysler S&P Global. Shri Dilip Asbe, Chief Executive Officer, National Payments Corporation of India. Shri Shiv Kumar Bhasin, Chief Technology Officer, National Stock Exchange. Thank you, dear Chair and jury members. Before inviting Dr. Phatak to share the perspective of the jury, I have pleasure in presenting a brief about him. Padma Shri Professor Dr. Deepak Phatak is MTech and PhD from Indian Institute of Technology, Bombay. He has been serving with IIT Bombay since 1971. Currently, he is the Professor Emeritus in the Department of CSE. His vast research interests include databases and information systems, software engineering, system performance evaluation, IT-enabled education, and IT strategy planning. Dr. Phatak was conferred Lifetime Achievement Awards by Scotch Foundation in 2003, by DataQuest in 2008, and by Devang Mehta Business School Awards in 2010. He was listed among 50 most influential Indians by Business Week in 2009. Ladies and gentlemen, I now have the pleasure of inviting Dr. Deepak V. Phatak, our Honorable Jury Chair for Awards 2021, to share his thoughts and views with the audience. Over to you, sir.
Thank you very much for those nice words. I'm so happy to join this program today. Respected Chairman IBA, Sri Goel Sahab, Sri Sunil Mehta, CEO of IBA, all the dignitaries, and my own colleagues in the jury committee, Ms. Asha Suyash, Mr. Gagan Rai, Mr. Shiv Kumar Bhasin, and my friend Dilip Asbe. And of course, our partners in crime, the Capgemini people led by Neha. It has been a privilege indeed. I will try to be as short as possible in order to save time, because all of us are keen to listen to my friend Sri Ravi Shankar's keynote and the ideas that he first. like this year, you would have noticed that we had roughly the same set of awards that we had last year, except that we added one particular category because of the additional emphasis that that particular category has. You will notice that this time we had the Best Technology Bank of the Year award, of course. Then we had the use of AI ML in the banks, which includes data analysis, data analysis, and data analytics forms a very important point these days. And then, of course, we had the other well-known categories such as risk management and cybersecurity initiatives. We had a category for the best digital financial inclusion initiative. We had a category for the best payment initiative. And we had a category for cloud adoption, as I mentioned. We also had the best Fintech adoption as a category. Given these large number of categories, and we believe these categories were important to recognize the significant work done by different banks. As you are aware, we have a fairly large banking system in the country, and to cater to significant differences in the size and complexity of operation of the banks, like last year, the banks were categorized into different things like large, small, medium, public sector banks, private sector banks, cooperative banks, foreign banks, etc., etc. Since the jury committee was more or less same as last year, and we had an experience of last year, we could improvise on some of the award criteria. I would like to mention very specifically that we were sure we will get a large number of nominations which will compete with each other tooth and nail on the basis of the performance that the individual banks have chartered in the last year. Like last year, a very detailed questionnaire was agreed to by the jury committee and it was sent, and the feedback received was analyzed threadbare by our partners, Capgemini people. The jury committee imposed some additional criteria this time on the awards. One criteria was that there must be a minimum absolute score that should be achieved by the banks. So it is not just a relative award that the IBA gives, but it also means that in absolute terms, the performance of a particular bank in that particular category is worth recognizing. Of course, it does not belittle the effort by all the banks. And I must tell you that in some areas where the absolute scores were low, we could very easily see that it is happening because of the recentness of the technology adoption in particular areas and the efforts. However, this was the criteria that the jury committee established. The second criteria that we thought we should use is that in any category, there should be a significant amount of competition so that the number of entries in a particular category was also a matter that the jury committee considered. As you can sense, in any committee, particularly those which are required to pass judgment on the other's performance, and I'm a teacher who better knows this fact than a teacher, there are some lenient evaluators and there are some strict evaluators. I'm so happy to observe that we actually had a mix of both. And it was really, therefore, a judgment that was arrived at by, number one, applying all the criteria very rigorously, while, number two, maintaining the basic stance of IBA that good work must be recognized, even though it might be in the stages where they are not completely fulfilled the expectations. In the end, I would like to thank our partners also, because they did absolutely marvelous work like they had done last year. And I would like to once again thank individually my grateful record of recognition to the extremely good and useful inputs that were given by individual jury members, Ms. Ashu Suyash, my friend Gagan Rai, Shivkumar Basim, and Dilip Hasbe. Thank you so much.
Thank you, sir. We at IBA sincerely thank you for your constant guidance.
Sorry. Can I butt in?
Sure, sir.
Yeah. I had jotted it down here, but I completely forgot to mention this. But I think this is important for all the attendees. You see, last year also I had felt this, and this year also I feel this. While these awards recognize the commercial banks and in the use of technology, but what we often forget that there is a bank whose technology adoption has been absolutely supreme, and yet the people who work for that bank are often unsung heroes because they are not known. And that is the Reserve Bank of India. I have had the privilege of working with Reserve Bank for a long time, and I have seen not just the technology evolution and adoption, but the leadership role that the bank has played. All of us will remember that in the last 2 years of tough COVID times, none of the basic services that are offered by Reserve Bank were down even for a moment. Now that is a recognition of the hard work that has been put in by the teams. It is not just continuing to work with the existing systems, but it is continuous upgradation of those systems. The commercial banks enjoy the fruits of those activities. And I would like to, although it is outside the jurisdiction of the jury committee, but I would like to publicly acknowledge the great role played by the unsung heroes of our banking system. Thank you so much, and sorry for interruption.
Thank you so much for those encouraging words, sir. Ladies and gentlemen, I now have the pleasure of inviting Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India, to deliver the keynote address. Before that, presenting a brief about Sir. Shri T. Ravi Shankar is a career central banker. His current areas of responsibility include reserves management, public debt management, payment systems, IT infrastructure, currency management, and foreign exchange management. Shri Shankar has served as an IMF consultant from 2005 to 11 on developing government bond markets and debt management. He has represented RBI on international forums like Bank for International Settlements and various internal and external expert committees and working groups. And now, Deputy Governor Sir will share his thoughts on cryptocurrency and assessment. Over to you, sir.
Thank you and good afternoon to everyone. Shri Goel, Chairman IBA, Shri Mehta, Chief Executive IBA, Professor Phatak, Chairman of Awards Jury, Dilip Hasbe, CEO of MPCI, and Mr. Gagan Rai, MDs and CEOs and other senior functionaries of banks, ladies and gentlemen. Let me begin by congratulating the winners of the IBA Banking Technology Awards. I mean, you will receive awards and awards, but any award on which which is stamped by Professor Phatak, you can be absolutely certain that you deserved it. And while on that note, I would also like to, as an aside, thank Professor Phatak for all those kind words about the Reserve Bank of India. I believe that most of us in the financial sector and the government sector, including Reserve Bank of India, at some point of time or the other, have received the benefits of his sagacity. We have all been students of him, although we might, many of us might not have joined IITs. Very kind words said, like a teacher, you are always kind to your students. Thank you. It is indeed indeed a privilege to be among so august an audience and so learned a gathering to be able to talk about an issue of momentous significance: how to deal with cryptocurrencies. Crypto technology and Web3 is dominating the mind space of not just among the technology community, but the financial industry as well. Cryptocurrency, as per their proponents, have the potential to play a critical role in how finance pans out in the future. Indeed, there is open speculation about whether finance as we know it and banking as we know it can survive the surge in cryptocurrencies. In this talk, I will try and give you my assessment of cryptocurrencies and what they mean for our financial system. As many of you would already know, cryptocurrencies and other crypto products like non-fungible tokens or NFTs are being hailed as the innovations that would usher in decentralized finance or DeFi, which are basically blockchain applications geared to disrupt the traditional financial system. The basic purpose of blockchain, or more generally the distributed ledger, the technology on which these cryptocurrencies run, is to make financial intermediation, and therefore banks, redundant. What might have escaped the attention of the common man is that cryptos might be more than just a technology. They appear to embody an ideology as well. A Financial Times video characterizes the success of Bitcoin, the first and most popular cryptocurrency, to healthy dissent, base greed, lofty idealism, and sheer fear of missing out. The same FT video goes on to say, cryptos embody a core tenet of anarchism: cooperation in the absence of centralized authority. The class of crypto products are fundamentally designed to bypass the established financial system and, on a larger scale, government itself. Some enthusiasts even claim that cryptocurrencies can usher in a separation of money and state, state as in government, like separation of church and state. Some refer to it as freedom money, or as Nassim Nicholas Taleb, most of you know, would know him from his book, The Black Swan and others, is quoted to have written in the Time magazine, Bitcoin is an insurance policy against an Orwellian future. It may thus not be adequate from a regulatory point of view to treat cryptos as just another type of currency or asset or commodity, but also as a potential social movement. With with that very brief background in place, let us now, in very general terms, understand the basics, very basics of cryptocurrencies. I'm just laying it out so that later when we come to the core issues, this will be at the back of all our minds. When a transaction is made using paper currency, all that the receiver needs to check is that the currency is not counterfeit. Thus, it is the receiver who authenticates the instrument of payment. This arrangement generally works, except for those few instances where the receiver fails to detect a counterfeit currency. In the case of digital transactions, the authentication of the payment is done not by the receiver, but by an intermediary like a bank. Because almost all electronic transactions are transfers of money from one bank account to another. This also works, just like paper currency transactions work, this also works as the bank certifies that the sender has adequate balance in her account to cover the transaction. Now, some people felt that intermediation by banks is avoidable. Either they felt that banks are not trustworthy. This is a movement that has gained particular currency after the 2008 global financial crisis, or they considered that the cost charged by banks is excessive, Especially, if we have paid for cross-border transactions, this will rhyme, or they were not comfortable with the transactions being tracked. Now, guided by the idea that cash remains one of the best ways to exercise free speech, their solution was to create their own currency, own private currency, and a transaction arrangement or network that bypassed banks or any other financial or social institution. The basic problem they had to get over was as follows. Since electronic money, which is just some lines of code, can be easily replicated, in the absence of a trust institution like a bank, which we have seen authenticates electronic transactions, how does the network ensure that the same currency is not spent again and again? Now, this was called the double spending problem. Now, the first person to effectively solve this problem was one Satoshi Nakamoto. All of you would have heard of this name. It's a fictional person or persons or corporate or some other entity. No one has an idea. No one knows yet. And Bitcoin was born. He did this by creating a blockchain. On a blockchain, when a transaction occurs, it is broadcast to all computers on the network. It's a private network. All computers receive the transaction. A set of new transactions called a block are authenticated by an agreed consensus mechanism. And then the validated transaction is added to the previous chain of blocks. This is the basic, in very simplistic terms, the basic way the blockchain worked. Every block is linked to the previous block, making double spending difficult or nearly impossible because it would involve changing every subsequent block. Now, Bitcoin was followed by many others like Ether, Cardano, Dogecoin, Tether, Stellar. You have many. Collectively, they are called cryptocurrencies. The prefix crypto refers to the fact that the cryptography is used to generate or authenticate transactions. So, the defining character of cryptocurrencies are A, the cryptocurrencies are decentralized systems where transactions are authenticated by participants themselves by consensus. They are designed to bypass the financial system and all its controls. They cannot be traced or confiscated or frozen by governments, at least by design. B, they are anonymous. Transactions are verified, but not the purposes or counterparties to transactions. C, they are borderless. That is, they work entirely over the internet without any physical existence. It is important to remember this because we will be, calling into arguments these features to justify what we have been saying later. Now, while Bitcoin started more than a decade back in 2008, until 5 years ago, total market capitalization of all Bitcoins was $20 billion. I'm talking of February 2017. This went up to 289 billion in February 2020, in 3 years' time. And thereafter exploded to reach a peak of 2.9 trillion in November 2021. Currently, I have taken data as on February 9. It stands, February 9 of this year, the market capitalization of Bitcoin stands at, cryptocurrencies stand at 1.98 trillion. Now, Bitcoin accounts for 42% of this market capitalization, so it is by far the most significant. The top two cryptocurrencies account for 61%, while the top 5 account for 71% of this entire market capitalization. The total number of cryptocurrencies is at 17,436, as per the website that I referred to. This is there in the footnote to my speech. The speech will go up on the Reserve Bank of India website later this evening. And the total number of crypto exchanges is 458. So this is the basic, data regarding cryptocurrencies. Now, with that brief, somewhat simplistic introduction to cryptocurrencies, we will now take a deeper look at the exact nature of cryptocurrencies and their implications, particularly in the context of the current debate in India on the topic. The starting point to get a clear understanding on what precisely clear understanding is what precisely is a cryptocurrency? They say asset, they say it can provide diversification benefits in a financial portfolio and so on and so forth. So what precisely is a cryptocurrency is one of the questions we need to understand. What useful economic role does a cryptocurrency play? We need to understand that. What, if any, are the risks it poses to society and economy? We need to understand these 3 points to get a clear idea of what cryptocurrencies are. First point, what precisely is a cryptocurrency? A cryptocurrency is designed to be a currency, but does it really function like a currency as we understand it? Firstly, currency always has an issuer. Usually a trusted entity like the sovereign. Even when gold is used as currency, the gold coins had to be issued by a sovereign entity. Just the fact that you mined gold doesn't make it a currency. So, important point that anything that is a currency needs an issuer. This is true even in case of private currencies, by the way, that existed at various times in history. Secondly, historically, a currency has always been either a commodity with intrinsic value or a debt instrument or an IOU. By debt instrument, I mean an IOU. I promise to pay the bearer so and so, so much and so much. So the currency can either be a commodity or which has intrinsic value in itself, or it has to be a debt instrument. Now, do cryptocurrencies answer to this? Cryptocurrencies do not conform to this understanding of a currency as they do not have an issuer. They are not an instrument of debt. They are not commodities, nor do they have any intrinsic value. Now, currency needs trust, yes, but everything that can be trusted doesn't become a currency. So even if technology, as in a blockchain, provides the trust for cryptocurrencies, they can at best perform the role of a currency within the private and closed environment of that cryptocurrency network. They do not and should not automatically become a currency for the larger society. It's important to understand, I'm sort of dwelling at some length on the basics just to understand that loosely worded things one must be very careful about. Some countries tend to treat cryptocurrency as a financial asset. This is also problematic. Why? Because all financial assets have underlying cash flows and need to be some person's liability. Think of any financial asset. Think of a stock, think of a bond, anything. It has to be someone's liability and it has to have an underlying cash flow. Cryptocurrencies have neither. They are neither any person's liability nor do they have any underlying cash flows. They're not financial assets by definition. Okay, there is also an effort to treat cryptocurrencies as a commodity. Now, but commodities are tangible and have utility. Cryptocurrencies have neither. There is this somewhat awkward attempt to equate some of them with gold. Hence, limiting their supply like natural resources or creating them through a process which is called mining. Limiting supply by design is not the same thing as limited supply in nature like gold has. Because A, design can always be modified and hence such limitation is artificial, and B, even if one cryptocurrency has limited supply, that limitation does not work for all cryptocurrencies taken together. We have seen in the data a while back that there is not one or two or three. There are 17,000 and odd cryptocurrencies, and they continue to grow. They can be created, almost in an infinite fashion. So limited supply is not really a tenable argument. Further, the fact that gold is mined does not in itself make it money. It has to be stamped and issued by a sovereign to make it money. So we have seen that it's neither currency nor a financial asset nor a commodity. If cryptocurrencies are none of these things in the usual term of the usual sense of the terms, then what exactly are they? The proponents have improvised to call them as digital assets. Now, even that is doubtful. I'm no expert on digital assets, but even that is doubtful, as they do not have any underlying use. Like, for instance, a car hiring software like Uber, that's a digital asset. Or a core banking system, that's a digital asset. It serves a purpose. Or for that matter, a smartphone, that's a digital asset. That basically leads to the conclusion. What exactly is the purpose served by the cryptocurrency, the software that it does, apart from the buying and selling that people indulge in? Does it have any intrinsic use? Nothing that one can know of. That basically leads to the conclusion that it is an electronic code with no practical use, which has created enough hype such that people are willing to pay money to buy ownership rights to that electronic code, seemingly on the hope that someone else would buy it at a higher price in future. That's the only justification. What started off as a medium of exchange, remember that, has appeal similar to that of a speculative asset. As a store of value, cryptocurrencies like Bitcoin have given impressive returns so far, but so did tulips in the 17th century Netherlands. Cryptocurrencies are very much like a speculative or gambling contract, working like a Ponzi scheme. In fact, it has been argued that the original scheme devised by Charles Ponzi in 1920 is better than cryptocurrencies from a social perspective. Even Ponzi schemes invest in income-earning assets. A Bitcoin is more like those of you who understand finance, and all of you are bankers, you will understand that. A Bitcoin is akin to a zero-coupon perpetual bond. It's like you paid money to buy a bond, which pays no interest and which will never pay back the principal. Okay, a bond with similar cash flows, where would you value it? Would be valued at zero, which in fact can be argued as the fundamental value of a cryptocurrency. If everything eventually returns to its equilibrium value, then the prognosis for investors in cryptocurrency is not a happy one. So we saw what precisely is a cryptocurrency. Now we'll see what useful social or economic role does a cryptocurrency play. If cryptocurrencies are actually intended to revolutionize finance, we need to understand what precise role they play in finance. An equity share enables a business to mobilize risk capital. A bond enables a company or a government to borrow money. A mutual fund enables retail investors to diversify their portfolio. Derivatives enable users to manage their risk, and so on. Every financial asset has a use. Every financial asset instrument exists to serve a basic purpose, quite distinct from its use as an investment asset. What is the basic role played by cryptocurrencies? Since it claims to be a currency, does it perform the functions of a currency? The answer is that the volatility of many cryptocurrencies precludes them as an efficient medium of exchange. Besides, a priori, there is no ground to believe that people place the same trust in them as they do in legal tender currencies. While there is anecdotal evidence of businesses using Bitcoins, there really is no reliable data available. By all indications, their use as a currency appears to be negligible. Are cryptocurrencies useful as a store of value? Given the secular rise in value of some of these cryptocurrencies, it has been argued that they are. A closer look exposes that argument as well. Think of any store of value. They are either currencies or financial assets or commodities which have tangible and have intrinsic value. Even works of art like paintings have historical, aesthetic, or scarcity value. They have to have a value. We have already seen that cryptocurrencies are none of these. Notwithstanding their current valuations, if a threshold number of people for any reason decide to just opt out or sit out, the entire values can easily collapse to nothing. Now, for all the hype about a revolutionary innovation, cryptocurrencies themselves do not appear to be designed to meet any need in the finance space that is currently not being met, or to meet existing needs more efficiently. Their innovation, if at all, is of distributed ledger, which, contrary to the claims of proponents, can flourish even if cryptocurrencies themselves are banned across the world. The third point, what, if any, are the risks posed to a society or an economy by cryptocurrencies? If the fundamental risks of cryptocurrencies, in our view, are two. They are intended to be private currencies. That's a risk. And they are structured to evade government control with respect to financial integrity standards, such as KYC, AML, CFT, etc. Let's examine both these points, that they are private currencies, what impact that might have, and that they are designed to evade KYC, AML regulations. Now, impact of private currencies or currency-like products on the economy. Historically, private currencies have resulted in instability and therefore have evolved into fiat currencies over centuries. The retrograde step back to private currencies cannot be simply taken because technology allows it. In fact, technology always did allow this, without any consideration for the dislocation it causes to the legal, social, and economic fabric of society. Every private currency will eventually replace the rupee to some extent. Consequently, the role of the rupee as a currency will be undermined. With one or more private currencies being allowed, there would be a parallel currency system in the country. Just like you have a rupee currency system, if you allow it, you might have some people using Bitcoin for some currencies, some people using Ether for some other currencies, and so on. You will have parallel currency systems in the country. Thus, increased acceptance of cryptocurrencies will result in effective dollarization of our economy. Dollarization, as is well understood, especially for bankers, would undermine the ability of authorities to control money supply or interest rates, as monetary policy would not have any impact excuse me, on the non-rupee currencies or payment instruments. And when that happens, India loses not just a currency, a defining feature of its sovereignty, but its policy control on the economy. With loss of traction for monetary policy, the ability to control inflation will be materially weakened. Now, given a choice, people may like to hold at least a part of their deposits in convertible currencies like dollar, US dollar or euro. Cryptocurrencies priced in these convertible currency would provide exactly that opportunity. If private currencies are permitted, the banking system's ability to mobilize deposit in rupees and consequently the ability to create credit would plummet. Credit creation in convertible currencies would be there, but that would be impervious to monetary control. In the extreme case where a major part of deposits and credit shift to cryptocurrencies, the result would be a weakened, even crumbling banking system, impairing financial stability. There are already indications that private cross-border flows are taking place in cryptocurrencies. If this trend is legitimized, a part of the flows related to trade payments, personal remittances, or cross-border investments being made in these cryptocurrencies are being made in these cryptocurrencies. Sorry, I'll just read that again. If this trend is legitimized, a part of the flows related to trade payments, personal remittances, or cross-border investments will gradually start being made in these cryptocurrencies. As they are non-reserve currencies, this could have adverse implications for India's foreign exchange reserve. Imagine a lot of flows coming in cryptocurrencies. Obviously, they cannot be added to reserves. One cannot intervene in those currencies. Which would lend stability, which would basically make the external sector quite unstable. Besides, such cryptocurrency payments can take place outside the ambit of capital account regulations. Now, this would adversely affect the integrity of the capital account regime, as policy control on capital flows would be eroded. The consequence of this on foreign exchange reserve accretion and exchange rate management raises serious macroeconomic stability issues. It is important to appreciate that the concern with private currency is not limited to bitcoins or cryptocurrencies, or just cryptocurrencies. The concern extends to any private currency, as a matter of fact, as a basic point of argument, whether digital or physical, whether crypto-based or not. For instance, private stable coins, which is simply a cryptocurrency which is less volatile, are being promoted globally, presumably because they are more stable than, say, the Bitcoin. Now, we should in fact be more concerned with stable coins because they would be more effective as currency compared to a volatile cryptocurrency. As the FT video that we have cited earlier says, stable coins pegged to official currencies would increase rather than dampen risks if assets and liabilities were mismatched. That was the first aspect, the impact of crypto. The second was the impact on global financial integrity standards. The very reason the author of cryptocurrencies is that they bypass established intermediation and control arrangements that ensure integrity of financial transactions, such as your KYC, AML, and CFT rules. The fact that they are anonymous, decentralized systems that operate purely virtually makes cryptocurrencies particularly attractive to illegal, illegitimate transactions, which have been largely filtered out of the formal financial system. Total crimes using cryptocurrencies in 2021 was estimated to be about $14 billion US. The amount itself is not much, but the implication for the AML CFT framework built painstakingly over the last 2 decades is rather substantial. There are other important negative consequences of allowing cryptocurrencies into the formal financial system. Firstly, we have already noted that there is no basis for valuation of cryptocurrencies. Since valuation is largely based on beliefs and not on underlying value, it is bound to have a destabilizing effect on monetary stability of a country through large-scale wealth loss to investors, even if it is not allowed to be used as a currency. The socially wasteful energy use of crypto infrastructure has been a subject of widespread discussion. About 900 new bitcoins issued every day require electricity worth $45 million US a day. By some estimates, electricity use of bitcoins equaled that of the entire country of Switzerland in 2019, and it is increasing by the day. From what we have seen so far, there does not appear to be any case to allow cryptocurrencies to be legitimized in India. Nonetheless, various arguments have been extended to permit cryptocurrencies and subject them to close regulations. In the next section, we would examine the validity of these arguments. I'm sorry, I'm probably taking more time than you have allotted me, but I thought these issues are of extreme significance. Everything needs to be very clearly explained. So, I'm dwelling, at length on the issues. So,
you're welcome, sir.
Thank you. So the next issue that we will go to is, should cryptocurrencies be permitted and regulated in India? The basic arguments being made for regulating cryptocurrencies are as follows. Blockchain or distributed ledger technology is a promising technology where Indians might have a global edge. Banning cryptocurrencies would affect the absorption of DLT, distributed ledger technology, in India. That's one argument that's given. The second argument that's given is most major countries are not banning cryptocurrencies, but are considering some kind of regulation. Why should India ban it? The third argument is most Indians have already invested in cryptocurrencies, and banning it may lead to a wealth loss for them. And the final argument given is banning in any case is unlikely to be effective because by its very nature, cryptocurrencies can be acquired and traded in an anonymous manner. So why bother banning? Broadly, these four arguments have been articulated in public. Let's deal with these arguments, one by one. Now, cryptocurrencies, the first thing is that blockchain or distributed ledger can suffer. Now, cryptocurrencies are typically native to a blockchain. For instance, Bitcoin is the native coin of the Bitcoin blockchain, or Ether is the native coin of the Ethereum blockchain. They can be used as units of account to settle transactions, or they can be used as reward tokens to reward work done on the blockchain, say for mining. Either of these two functions do not appear to be essential to the basic existence or function of a blockchain. It should be possible to maintain a blockchain without any native cryptocurrency if transactions are authenticated centrally. Even in case of private authentication through consensus mechanisms, accounts can be kept in any units and rewards can be given in any legal tender currency. In other words, creating native cryptocurrencies is just one way of implementing a blockchain technology and is the one way of implementing a blockchain. It can be viewed as just one use case of the blockchain technology. To argue that banning cryptocurrencies would stunt the absorption of blockchain technology is therefore akin to, as one professor that we interacted in and happened to say in some context, it's akin to saying that banning human cloning would kill innovations in biotechnology, or banning nuclear weapons would hurt nuclear physics as a discipline. There are many other uses of blockchain technology, or more generally distributed ledger technology, that do not involve creation of virtual currency. Thus, claims that cryptocurrency must be permitted for blockchain technology to thrive are not sustainable. Second point, which is that most major countries are not banning, why should India ban it? While replicating the practices followed in advanced economies is often, advanced economies are the ones which are not banning it. While replicating their practices is often an acceptable route to reforms, as far as cryptocurrencies are concerned, it has to be noted that India is not similarly placed as advanced economies. We should particularly be alert to the possibility that these private currencies can be used for global strategic control. If, for example, some private currency substantially replaces the rupee, the corporate which manages that cryptocurrency, or the country which controls the corporate issuing that cryptocurrency or creating that cryptocurrency, can practically control India's economic policy. There are a number of other reasons why it might not be in the interest of advanced economies to ban cryptocurrency as well, apart from this reason. One is that almost all cryptocurrencies are priced in terms of dollars or euros, basically convertible currencies. Wider adoption would actually result in wider use of advanced economy currencies. So cryptocurrencies are not a threat to convertible currencies as they are to the rupee, which is not an international currency. Following the examples of advanced economies in the matter of cryptocurrency would effectively amount to working against the interest of the rupee, the national currency. Another reason why advanced economies don't ban it, that most cryptocurrencies are owned by businesses of advanced economies. Better adoption of cryptocurrencies will lead to the growth and employment of these businesses and by implication, advanced economies. Significantly, it might be of advantage to the advanced economies if the cryptocurrencies replace emerging market currencies to any extent, as that would give advanced economies, it would give advanced economies better strategic control on the emerging market economies. Advanced economies have more mature markets, all of us know that, which can withstand the potential disruption from cryptocurrencies. They are therefore in a better position to wait and watch. We may not have that luxury. Advanced economies have quicker legal systems, and hence concerns of misuse of cryptos can be addressed through the legal systems there. In India, on the other hand, very few of the major instances of consumer exploitation in finance have been redressed legally, in time. Some of them are the case of mis-selling of derivatives in the mid-2000s, I think is still lingering. So, and finally, advanced economies have the political power to control the crypto companies. The recent instance you would all have seen, where the US recovered bitcoins from the hackers of the oil pipeline in US, is an example that notwithstanding claims of non-traceability of cryptocurrencies, advanced governments wield enough power to access the records. India or most other countries would lack such advantages. Now, finally, the argument often advanced is that so many Indians, not finally, the third point, that so many Indians have already invested in cryptocurrencies, and banning cryptocurrencies would lead to a wealth loss for them. Now, there are three reasons such arguments do not appear justified. One, banning in India does not mean investors would lose money, because they can be provided with a reasonable exit. Two, persons who have invested in these instruments are fully aware of the risks involved. Reserve Bank has been warning investors of the risks for nearly a decade. And an interministerial committee on the government has recommended banning cryptocurrencies was widely known for the last 3 years, as was the fact that cryptocurrencies are not regulated products and there are no investor protection norms in place. Investors who have acquired these instruments have done so with their eyes wide open, at their own risk, and do not warrant any government protection and any regulatory protection as such. Three, there is no data to justify how many investors have invested in these instruments and what is the amount of that investment. Data that we had informally gathered in November seems to indicate that crypto investments by Indians is nowhere near to being significant, although the pace of growth can be a concern going forward. This data showed that 4 out of 5 investor accounts in crypto exchanges held investments of less than 10,000 rupees, with an average holding size of 1,566 rupees. We are talking of 80% of the investors, 4 out of 5 investors. Their average holding size was 1,566 rupees, and the maximum holding size was 10,000 rupees. Wealth loss, if at all it is a possibility, clearly is likely to affect only a small fraction of these investors. Interestingly, concentrated ownership appears to be the characteristic of cryptocurrencies. As a January 2021 report published in the Telegraph newspaper points out, according to industry data, around 13% of all Bitcoin sits in the hands of just over 100 individual accounts. They are referred to as crypto whales. Such concentrated ownership, usually by creators or initial investors, in what is touted to be, or at least hoped to be, the alternative monetary system, would make that system particularly prone to manipulation. That cryptocurrency should not be banned because a ban is unlikely to be effective is a superficial argument. One might as well argue that drug trafficking is a rampant phenomenon despite a ban, and therefore drug trafficking should be legalized and regulated. If cryptocurrencies are banned, the vast majority of investors who are law-abiding would desist from investing in it. Those few elements who would continue to invest will essentially be doing an illegal activity. Such exceptions should reinforce the need for a ban rather than invalidate it. It has also been argued by some that the concerns of allowing private currencies as a medium of exchange, the concerns expressed by many, are valid. Therefore, they may not be allowed as legal tender, but should be allowed as an investment asset. This argument appears to be made more with hope than with any real conviction. Not allowing them as currency would still amount to cryptocurrencies being used as store of value. And the store of value demand is a more substantial source of demand for a currency than transaction demand. One only needs to compare the volume of time deposits with transactional deposits to understand this. If a cryptocurrency is used as a store of value, the same concerns arise again. Also, unlike the value of rupee, which is anchored by monetary policy and its status as legal tender, the value of crypto assets rests solely on the expectation that others will also value and use them. As valuation is largely based on beliefs and not well anchored, it's bound to have a destabilizing effect on the monetary and fiscal stability of a country, even while it is not permitted to operate as a legal tender. There are other reasons why it should be futile to regulate cryptocurrencies. As discussed, cryptocurrencies are not currencies or assets or even digital assets. Therefore, it cannot be regulated by any financial sector regulator. It is not possible to regulate something that one cannot define. Cryptocurrencies are typically global products whose defining characteristic is that they are outside official control, and they cannot be regulated by country-specific regulators. The Financial Stability Institute of the BIS identifies difficulties in regulating cryptos, such as the international nature of crypto transactions, absence of technological solutions to ensuring FATF's travel rule, the problem of unhosted wallets, the fact that P2P transactions do not involve any entity subject to AML CFT regulations, etc. Let us suppose India decides to regulate cryptocurrencies. How would it regulate and address a case of mis-selling, as it has no access to the ledger, nor to any audit trail? It's not always possible to know who of the persons who are the management for cryptocurrencies. At whom would the regulatory action be targeted? If for any reason the entire system collapses, what possible regulatory redressal exists for investors? These are questions with very uncomfortable implications that do not have satisfactory answers or solutions. I will now end. We have seen that crypto technology is underpinned. I'll just summarize. We have seen that crypto technology is underpinned by a philosophy to evade government controls. Cryptocurrencies have specifically been developed to bypass the regulated financial system. These should be reason enough to treat them with caution. We have also seen that cryptocurrencies are not amenable to the definition of a currency, asset, or commodity. They have no underlying cash flows. They have no intrinsic value. They are akin to Ponzi schemes and may even be worse. These should be reason enough to keep them away from the formal financial system. Additionally, they undermine the financial integrity, especially the KYC regime and AML CFT regulations, and at least potentially facilitate antisocial activities. More substantially, they can, and if allowed, most likely will, wreck the currency system, the monetary authority, the banking system, and in general, government's ability to control the financial system and the economy. They threaten the financial sovereignty of a country and make it susceptible to strategic manipulation by private corporates creating these currencies or governments that control them. All these factors lead to the conclusion that banning cryptocurrency is perhaps the most advisable choice open to India. We have examined the arguments proffered by those advocating that cryptocurrencies should be regulated and found that none of them stand up to basic scrutiny. Writing in the New York Times, as far back as in 2013, Adrian Shen says that Bitcoin is built on a weird mix of speculative greed, bolstered by a utopian cyber-libertarian ideology, and likened it to a digital gold rush. Indeed, hyperbole continues to characterize all aspects of the crypto world. Crypto messaging, for example, does not appear to be directed at the rational or the sensible. Global advertisement with themes such as fortune favors the brave, type of macho taunts is reflected somewhat in our very own lag ja rahe, kuch to badlega. It would serve us well if the understanding about cryptocurrencies goes beyond this hype and is based on reason and pragmatism. Thank you. Thank you for the time, and apologies once again for taking too much of your time.
Thank you very much, sir, for enlightening us on the topic of cryptocurrency and blockchain technology. We are also thankful to you for having taken time off your busy schedule and for delivering the keynote address. And now, finally, ladies and gentlemen, we are all set to witness the much awaited IBA Banking Technology Awards ceremony. As we look back into the past 16 years of the IBA Banking Technology Awards, we respectfully and wholeheartedly acknowledge the zeal and the spirited participation by our member banks. This wonderful journey has witnessed active participation and support of leading personalities, from statesmen to stakeholders, from senior administrators to regulators. As someone aptly said, the best part of competition is that through it we discover what we are capable of and how much more we can actually do than we ever believed was possible. With these words of wisdom, I cordially welcome our great achievers and announce the winners and runners up in various categories of the 2021 IBA Banking Technology Awards. Before moving ahead, I would like to dedicate 2 lines to our wonderful audience today. कहते हैं जिंदगी के लिए जान जरूरी है. कहते हैं जिंदगी के लिए जान जरूरी है. भले ही जिंदगी में कितने ही उतार चढ़ाव हो, पर दोस्तों यहाँ बैठे आप सभी के चेहरे पे मुस्कान जरूरी है. And with that, spirit, let's move ahead. Ladies and gentlemen, for the year 2021, the jury deemed it fit to include 7 categories of awards. In addition to winners and runners-up, the jury has recognized the efforts of some participating banks to be specially mentioned. The first category of awards is Best Use of Artificial Intelligence, Machine Learning and Data Analytics. Second category, Best IT Risk and Cyber Security Initiatives. Third category, Best Digital Financial Inclusion Initiatives. Fourth category, Best Payments Initiatives. Fifth category, Best Cloud Adoption. Sixth category, Best Fintech Adoption. And lastly, the king of all, 7th category, Best Technology Bank of the Year. So, let's dive in and find out who the esteemed winners and runners-up are. And now, hold your breath, sit back and enjoy this exciting evening of glittering awards that's coming your way. The best use of artificial intelligence, machine learning, and data analytics. There are three segments under this category. We start with the regional rural bank segment. So, the best use of artificial intelligence, machine learning, and data analytics, regional rural bank. The winner is Telangana Gramina Bank. Ladies and gentlemen, a huge round of applause. Next, best use of artificial intelligence, machine learning, and data analytics, small bank. The runner-up is your family bank across India, Karnataka Bank. Ladies and gentlemen, a huge round of applause. Moving on. So the good news is that we have two winners here in the small bank segment. The best use of artificial intelligence, machine learning, and data analytics, small bank. The winner is South Indian Bank. Experience next generation banking. Ladies and gentlemen, now that's how you define living up to one's name. A loud round of applause. Next, the best use of artificial intelligence, machine learning, and data analytics, small bank. And the joint winner is Smart Way to Bank. Any guesses? Yes, you're right. It's Karur Vaishya Bank, true to their tagline. A huge round of applause. Moving on. The best use of artificial intelligence, machine learning, and data analytics, large banks. And the runner-up is India's International Bank, Bank of Baroda. A thunderous applause, please. Next, the best use of artificial intelligence, machine learning, and data analytics, large bank. And the winner is Khayal Apta. ICICI Bank, a huge round of applause. We now move on to the next category, which is Best IT Risk and Cyber Security Initiatives. We have 7 segments under this category. We start with small finance banks. The special mention award goes to Aapki Ummeed Ka Khata, Utkarsh Small Finance Bank. A loud round of applause. Moving on to the best IT risk and cyber security initiatives, small finance bank. The winner is Build a Better Life. Any guesses? Yes, you're right. Ujjivan Small Finance Bank. A round of applause. Moving on. The best IT risk and cyber security initiatives cooperative bank segment. The runner-up is Kalupur Commercial Cooperative Bank Limited. A round of applause, please. And the winner in the best IT risk and cyber security initiatives cooperative bank segment is Mile Yahan Dono Jahan, Saraswat Bank. Please join me in congratulating them. Next, Regional Rural Bank segment. the best IT risk and cyber security initiatives regional rural bank. The runner-up is Kerala Grameen Bank. A round of applause. Next, so there are two winners in this category, and the winner, the best IT risk and cyber security initiatives regional rural bank is Telangana Gramina Bank. A round of applause. And the joint winner, the best IT risk and cyber security initiatives regional rural bank is Baroda Rajasthan Kshetriya Gramin Bank. A round of applause, please. Moving on. Best IT risk and cyber security initiatives foreign banks. The winner in Best IT Risk and Cyber Security Initiatives Foreign Bank is Together We Thrive. Any guesses? It's HSBC, ladies and gentlemen. Please join me in congratulating them. We now move on to small banks. Good news again, ladies and gentlemen. Two runners up here. Best IT Risk and Cyber Security Initiatives Small Bank. The runner-up is Smart Way to Bank, Karur Vaishya Bank. A loud round of applause, please. And the joint runner-up, Best IT Risk and Cyber Security Initiatives Small Banks is J&K Bank, serving to empower. Please join me in congratulating them. And now, the winner, Best IT Risk and Cyber Security Initiatives Small Bank is Experience Next Generation Banking, South Indian Bank. The tagline does the talking here. Moving on, medium banks. Now, ladies and gentlemen, the special mention award goes to Ek Parivar, Ek Bank, Bank of Maharashtra. A huge round of applause, please. And now, the winner, Best IT Risk and Cyber Security Initiatives, Medium Banks is Experience Our Expertise, Yes Bank. A loud round of applause, please. Next, we move on to large banks. Two runners up here. Best IT Risk and Cyber Security Initiatives, Large Bank. The runner-up is Bank of Baroda. Please join me in congratulating them. The joint runner-up, Best IT Risk and Cyber Security Initiatives, Large Bank is ICICI Bank. A loud round of applause. And now, the winner, Best IT Risk and Cyber Security Initiatives, Large Bank is Good People to Bank With. Any guesses? Absolutely right. It's Union Bank of India. Let's cheer for them, please. Ladies and gentlemen, we now move on to the awards category, which is very close to the nation's heart, which is Best Digital Financial Inclusion Initiatives. We have three segments under this category. We start with the Regional Rural Bank segment. So, the best digital financial inclusion initiatives, Regional Rural Bank. The runner-up is Telangana Gramina Bank. Can we have a round of applause? And the winner, the best digital financial inclusion initiatives, Regional Rural Bank, is Baroda Rajasthan Kshetriya Gramin Bank. A round of applause. Moving on to small banks in this category. Best digital financial inclusion initiatives, small bank. Ladies and gentlemen, the runner-up is the service is a way of life. Any guesses? It's Punjab and Sindh Bank. A loud round of applause. And the winner, the best digital financial inclusion initiatives, small bank, is J&K Bank. Please join me in congratulating them. Moving on to large banks in this category. Best digital financial inclusion initiatives, large bank. Ladies and gentlemen, the runner-up is ICICI Bank. Huge round of applause. And now the winner, Best Digital Financial Inclusion Initiatives, large bank. Ladies and gentlemen, I don't think this needs much guessing. It is State Bank of India, the banker to every Indian. A huge round of applause. Moving on to the next category, which is Best Payments Initiatives. We start with private sector banks. And again, good news, two runners up here. The Best Payments Initiatives, private sector bank. The runner-up is Badti Ka Naam Zindagi. Axis Bank, can we have a round of applause for them? The joint runner-up, ladies and gentlemen, Best Payments Initiatives, private sector bank is South Indian Bank. A loud round of applause. And now, the winner, Best Payments Initiatives, private sector bank is ICICI Bank. Congratulations. Moving on to public sector banks now. The Best Payments Initiatives, public sector bank. The runner-up is Together We Can. Canara Bank. A loud round of applause. And the winner, the Best Payments Initiatives, public sector bank is State Bank of India. Please join me in congratulating them. We move on to the next category, which is Best Cloud Adoption. We have 6 segments here, starting with cooperative banks. Now, ladies and gentlemen, the special mention award goes to Saraswat Bank. Congratulations. We now move on to the Regional Rural Bank segment in this category. The Best Cloud Adoption, Regional Rural Bank. The runner-up is Telangana Gramina Bank. Congratulations, team. That's multiple awards for the bank. Next, the Best Cloud Adoption, Regional Rural Bank. The winner is Baroda Rajasthan Kshetriya Gramin Bank. That's fantastic. We now move on to the foreign banks segment. We have two special mention awardees. The special mention award goes to Standard Chartered Bank, your right partner. A huge round of applause. Another special mention award, the Best Cloud Adoption Foreign Bank, goes to HSBC. Please join me in congratulating them. And now, hold your breath. The winner, the Best Cloud Adoption Foreign Bank is Citibank. Live richly. A thunderous applause, please. We now move on to the next segment, small banks. The best cloud adoption, small bank, and the runner-up is South Indian Bank. Please join me in congratulating them. And now, the winner, the best cloud adoption, small bank, goes to Karur Vaishya Bank. Congratulations. Next, medium banks best cloud adoption. The special mention award goes to Federal Bank. A huge round of applause. And the winner, ladies and gentlemen, best cloud adoption medium banks is Yes Bank. Congratulations. Moving on to best cloud adoption large banks. We have two runners up. The runner up best cloud adoption large bank, ladies and gentlemen, is State Bank of India. Huge round of applause. And the joint runner-up, Best Cloud Adoption, Large Bank. We make you feel richer. Any guesses? Yes, right, it's IndusInd Bank. Huge round of applause. And the winner, ladies and gentlemen, Best Cloud Adoption, Large Bank is undoubtedly Union Bank of India. Please join me in congratulating them. Moving on to the next award category, Best Fintech Adoption. We have four segments here. We start with regional rural banks. The special mention award goes to Telangana Gramina Bank. Congratulations. And the winner, Best Fintech Adoption, Regional Rural Bank is Baroda Rajasthan Kshetriya Gramin Bank. A loud round of applause. Moving on, small banks. And the runner-up, Best Fintech Adoption, Small Bank is Karnataka Bank. Please join me in congratulating them. Next, the winner, Best Fintech Adoption, Small Bank is South Indian Bank. A huge round of applause. Moving on to medium banks. Best Fintech Adoption, Medium Bank. The runner-up is Bank of Maharashtra. Congratulations, team. And now the winner, Best FinTech Adoption, Medium Bank, is Federal Bank. A thunderous applause, please. Moving on to large banks. Best FinTech Adoption, Large Bank. The runner-up is Relationship Beyond Banking. Any guesses? You're right, it's Bank of India. Congratulations. And the winner, Best FinTech Adoption, Large Bank, is no points for guessing. ICICI Bank. A huge round of applause, please. And now, ladies and gentlemen, fasten your seat belts as we move towards the King of Awards category, the Best Technology Bank of the Year. The Best Technology Bank of the Year, we have 6 segments here. We start with cooperative banks. The special mention award goes to Enriching Life, the Cosmos Cooperative Bank Limited. Congratulations! And the winner, Best Technology Bank of the Year, Cooperative Bank, goes to Saraswat Bank. Please join me in congratulating them. We now move on to regional rural banks. The special mention award goes to Baroda Gujarat Gramin Bank, reaching to unreached. A round of applause, please. And the winner, Best Technology Bank of the Year, Regional Rural Bank, goes to Baroda Rajasthan Kshetriya Gramin Bank. A loud round of applause. Moving on to Foreign Banks segment. Best Technology Bank of the Year, Foreign Bank, goes to, without a doubt, Citibank. A thunderous applause, please. Moving on to small banks. The runner-up, Best Technology Bank of the Year, Small Bank, is Karnataka Bank. Congratulations, team. And the winner, ladies and gentlemen, Best Technology Bank of the Year, Small Bank, is South Indian Bank. A huge round of applause. Moving on to medium banks. And the runner-up, Best Technology Bank of the Year, Medium Bank, is Federal Bank. Congratulations, team. Moving on to the last segment for this evening, large banks. I am delighted to announce that there are 2 runners-up in this segment. The joint runner-up, Best Technology Bank of the Year, Large Bank, ladies and gentlemen, the award goes to State Bank of India, a ceiling-breaking round of applause. Now, the joint runner-up, Best Technology Bank of the Year, Large Bank, is, any guesses? Yes, that's right. It's none other than ICICI Bank. A huge round of applause. And now, ladies and gentlemen, dil tham ke baithiye as I announce the winner of the most important award this evening. Are we ready? Okay, so the winner, the best technology bank of the year, large bank, is 3, 2, 1. Bank of Baroda! A huge, huge, huge round of applause. Dear attendees, it's now curtain downs on this edition. Thank you so much for being such a wonderful online audience. This 17th annual run is a reflection of the hard work and passion of Team IBA and the support extended by our partners and sponsors. May I now call upon Shri Gopal Murli Bhagat, Deputy Chief Executive, Indian Banks Association, to propose the vote of thanks. Over to you, sir.
Thank you, Mukti. Thank you very much. Good evening to all of you. Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India. Dr. Deepak B. Phatak, Professor Emeritus, Department of CSE, IIT Mumbai, and Head of the Technology Award Jury, and other members of the jury. Shri Atul Kumar Goyal, Chairman, IBA, and Shri Sunil Mehtaji, Chief Executive, IBA. Ms. Neha Punetar, Vice President, Capgemini. Ms. Lula Mohanty, General Manager, IBM, and Mr. Paul Barton, Senior Partner and FSS Sector Leader, IBM India. MDs and Chief Executive Officers of member banks and all participants of this award function. Good evening to all of you. We have just concluded the 17th Technology Award function of IBA. The fact that this award function and also the technology conference in the morning were held in virtual mode itself is a testimony to the power of technology. The 17th Annual IBA Banking Technology Award is the result of several months of meticulous planning, deliberations, and interactions despite the challenges arising out of the occurrence of the corona, which undermined the scope of regular physical interactions. Nevertheless, we could put all pieces together, which culminated in today's function. It is also heartening to note that we got encouraging response from the participants to contest for the awards, and the jury members had a tough time to decide on the winners and runner-ups. I heartily congratulate all the winners and runner-ups under various categories. I take this opportunity to let you know that your active participation is an encouragement to all of us. After the thought-provoking speeches and award functions, friends, the time has come to conclude this function with a vote of thanks, and I have the honor to do that in this function. First of all, let me express my gratitude to Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India, for sparing his valuable time with us on this occasion. RBI is always in the forefront to encourage innovations in digital banking space for the common good of the public. Thank you, sir, very much. Your presence is very inspiring for all of us. And today you have clarified all aspects of cryptocurrency, and perhaps nothing more needs to be clarified. Many thanks, sir. We are grateful to our award jury chairman, Dr. Deepak B. Phatak, who guided us on the selection process and meticulously completing this whole exercise of shortlisting of the winners, runner-ups, and special mention. We are also thankful to jury members, Shri Gagan Rai, former MD and CEO, National Securities Depository Limited, Madam Ashu Suyash, MD and CEO, CRISIL and S&P Global, Shri Dilip Aspe, MD and CEO, National Payments Corporation of India, Shri Shiv Kumar Basin, former CTO, SBI and CTO, National Stock Exchange, for devoting their time and expertise to evaluate all entries and decide on the selection process. We are thankful to our knowledge partner, Capgemini, for their invaluable services right from the conceptualization stage of the conference and award function. Our sponsors for the event deserve special mention on this occasion. We are thankful to IBM, SAS, Salesforce, Canara Bank, AWS, SWIFT, UiPath, and NESL for coming forward to sponsor this event. We are also thankful to Wiki for sharing their digital platform for our event and customizing the same as per our specification. Our sincere thanks also go to all the participants, including bankers, technocrats, academicians, for attending and for the support for the success of this event. I will be feeling in my duty if I do not acknowledge the support received from Shri Atul Goyal, Chairman IBA, Shri Sunil Mehta, Chief Executive IBA, for giving us guidance and support from time to time for organizing today's conference, expo, and award function. As I mentioned earlier, organizing a full-day event requires collective action and coordination among all staff to plan and execute it well. All staff of IBA and PSB Alliance who work tirelessly with the aim to ensure smooth conduct of the program deserve special mention. I thank each and every staff of IBA for contributing to the grand success of this annual event of IBA. Let me conclude the vote of thanks with a quote on adaptability by Charles Darwin, which I feel is very relevant in the present day world where the changes are happening constantly. It says, "It is not the strongest species that survive, not the most intelligent, but the most responsive to change." Thank you. Thanks to all of you once again. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, it has been a wonderful and enriching experience to host our various dignitaries, winners, and participants. I express my deepest gratitude to each one of you. I also wish to bring to the kind attention of all award winners that the IBA team will reach out to you for collection of trophies and certificates shortly. Kindly await a communication from our side. जाने से पहले 2 पंक्तियां कहना चाहूंगी। कोशिश हजार की कि इसे रोक लूं मगर कोशिश हजार की कि इसे रोक लूं मगर ठहरी हुई घड़ी में भी ठहरा नहीं है वक्त। Please take great care of yourself and I hope to see you soon. Thank you again and goodbye till we meet again.